budget right now that would lower it by another $3 trillion. And yes, we believe the fact that so many manufacturers are now not just investing more today, but are making choices to build their future in the United States is the type of progress that is not just a this month or that month thing, but is about the revival and renaissance of the American manufacturing future in a way that many people did not see as possible or viable before President Biden.
Look, very briefly before we talk about the supplemental aid request, I do need to just ask you, onshoring and moving a lot of the chip production back here, bring it home, bring it back to basics, is it injurious to Taiwan?
I think there's nothing injurious about the fact that the United States, the country that invented the semiconductor, is making sure that we have supply chains that are not completely contingent on the rest of the world, and particularly in parts that can be precarious. And I think that I've always believed, and I've always spoken for many years about the fact that when you invest in manufacturing, manufacturing punches above its weight. It punches above its weight on R&D, on patents, and it leads to spillover effects in terms of the type of North Carolina triangle effect. People want to invest more, they want to be near, it leads to more innovation. So yes, I do think this pays off for itself in our long-term economic future.
Okay, let's see, does it pass through to the polls as we count down to that, Gene? Great to see you this morning. Thanks for giving us your time as you come through New York. That is Gene Sperling. Coming up on the show, your market moving events to set your clock by on the Trading Diary, right here on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg, top experts, great questions. Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Fixed income fix. Watch Bloomberg Real Yield at its new time Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
It's the turnaround, tear away of Tesla. Bid up this morning because Elon Musk has talked about a cheaper model, robo-taxis, and it will be show and tell later in the year. That's what gives a little bit of a bid here. We're going to get some of the bigger Mag 7 reporting over the next 24 hours, and that's going to be about the completion of the AI narrative and the monetization. NASDAQ up 0.1%. We're rising, and we are bid higher. The rest of your trading diary looks a little bit like this for the week. Meta earnings coming out after the closing bell. All hail AI. Results from IBM, hardware. Thursday, Alphabet, Microsoft. Again, more AI verification. GDP for the US and jobless claims Closing off the week with Michigan Consumer Sentiment Survey, the PCE deflator will wrap up the agenda for the week. That was Countdown to the Open, right here on Bloomberg from New York. A very good morning.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Authorities could face bigger challenges. What's next?
It was going to keep bringing World Cup.
This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast That's where you'll find our stuff. Again, earnings coming in hot and heavy this week. We're going to break it down with some expert analysts from Bloomberg Intelligence. They're going to join us throughout the show. Plus, we're going to get a little political as well, see what's happening down there in Washington, D.C. in terms of legislation getting passed and what's happening from the White House. So we're going to cover it all here in the next 2 hours. Alex Steele is on vacation. Molly Smith joins us, though, from Bloomberg News. She's the editor for Bloomberg Economics, so we're going to get some smart talk there, talk a little bit about the economy. We got some eco data today as well. Let's kick everything off, as we usually do at this time, with Lisa Mateo at Bloomberg Business Flash.
You got it. And Market Driver is brought to you by Interactive Brokers. Interactive Brokers charges USD margin loan rates from 5.83% to 6.8%. Rates subject to change. Learn more at ibkr.com/compare. All right, we have the NASDAQ leading the charge in midweek trading. Right now, it's up 0.6%. The S&P 500 up 0.1%. The Dow is little changed. A big part of the NASDAQ is Tesla. Shares are up right now 13%. Investors liked its pledge to speed up that launch of more affordable models as soon as this year, even as profit and sales miss. But now Big Tech is going to shift to Meta after the bell. Meta shares, they're up nearly 1%. Aside from earnings, we've also had some economic data out today. Want to get right to it. Orders placed with U.S. factories for business equipment rose modestly in March. And then on the housing front, we found out U.S. mortgage rates, well, that increased to the highest level in 5 months. MBA data shows the contract rate on a 30-year fixed mortgage increased last week to 7.24%. So the bond market, the 2-year yield at 4.93%. That's little change. The 10-year yield at 4.65%. That's up 4 basis points. That is your Bloomberg Business Flash. Paul and Molly.
All right, Lisa Mateo, thank you so much. We appreciate that. Molly Smith,
hey,
sitting in for Alex Steele. Thank you so much for
happy to be here as always.
So we got you for 2 hours, right?
Yeah, that's when I last checked.
Good.
Yeah, I will not ditch midway through.
Yeah, which Matt Miller has done in the past. You know,
that sounds like something he would do.
He loses his attention, he's gone. Yeah. Anyway, we got Molly Smith. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Molly, lots of earnings today. I guess
so many.
So we're going to break it down. We got a lot. That's a really. Here on the Bloomberg Intelligence Show, we really focus on companies. We focus on their stocks, their bonds, the corporate developments. And for that, we lean really heavily on the research analysts at Bloomberg Intelligence, which is Bloomberg's in-house research department. Over 400 professionals. Boy, we started with me and a couple of other folks 14 years ago. Now there's over 400 analysts covering over 2,000 companies, equities, fixed income, everything.
It's like your baby.
Yeah, it's big.
Really grown.
They're all over the world. So it's the best research. It's certainly the biggest research department on Wall Street. So we're going to lean heavily on them, particularly around earnings season. Right now, let's take a look at these markets. Let's check in with Nora Melinda. She covers all the markets for Bloomberg News. Nora, what are you looking at?
Well, as Lisa was just talking about, we can't stop talking about Tesla. Of course, we heard from Elon Musk yesterday, but we are seeing those shares higher. And Tesla is seeing its best day since October of 2021. Now, those shares are up as much as 14%. And this is all coming after investors are a bit excited after Elon Musk has vowed to launch less expensive vehicles as soon as late this year. And of course, this is overshadowing those earnings results and the thoughts about, these prices, the price cuts and everything that we've been seeing from Tesla. But as you talk to analysts, I've really been hearing that it's really about the hope. You know, people want to know, can they place hope in Elon Musk? And of course, we've seen in the past, he's been able to do some really remarkable things, but people want to know, moving forward, is this something that we can really depend on?
Yeah, as in maybe more so than a robo-taxi.
Right.
Yes. Which he's very adamant about building. I mean, I don't know. I personally would be more in the market for a $25,000 car versus robo-taxi, but that's just me.
That's just, I guess my two questions for me. One is, can I believe him that he'll deliver this thing? Number one,
yes.
I don't know. Number two, let's say you come out with a $30,000 car. Are you going to make money at a $30,000 price point? I'm not sure. I don't know.
Steve Mann's going to know. We're going to have him on next.
Oh, good. Thanks.
So,
that's good. And it's crazy because the stock was the worst performer in the S&P 500 this year, plunging 42% through yesterday's close.
Right.
So, we'll see whether or not this pop makes a difference.
Very good.
So next one, B. Riley.
Yes, looking at B. Riley, of course, we know that this was a story that was happening earlier a few months back, but we are seeing those shares jumping the most in nearly a decade. Now, this is coming after its auditors signed off on an annual report that the firm said it had no connection with a former controversial business partner. And this has really been in focus as we've been dissecting this company and whether or not they do have any sort of crossover with the implications and what the allegations are in this space. But apparently this audit is saying they are in the clear.
And this is just for folks that don't know, B. Riley is a financial institution, kind of a small boutique investment bank. Again, it's got about a $900 million market capitalization. So it's one of the smaller ones.
Yeah.
But
It's not the kind of thing that, when you hear of like a stock surging, you think it's going to be like, wow, like what's like the big hot announcement today? And it's like, oh, their auditor signed off on this report.
Right.
Yeah.
It's like not to like, kill the fun, but it's like, I don't know, it doesn't really get you going as much.
Right, but the stock surged.
Maybe it's just me.
No, I agree. It surged 61%. I mean, now we're
so
seeing
people
it up
are
about
obviously
40.
jazzed about it. What
They
do I
are
know?
jazzed, to say the least.
Yeah. And last one, Hilton.
Hilton. Do you guys stay at Hilton ever? What's your preference
Hilton
for hotels?
honors points, right?
Likewise.
You a Marriott Bonvoy guy?
I think I am.
I knew it. I don't know why I knew this.
Well,
But
the Westin is what's
Marriott.
Westin is Marriott.
I admittedly crisscross. I need to really identify some hotel loyalty.
Your allegiance?
It's I don't know. It's a 2024 goal for me.
Okay.
I love that. I love it. I love it. Well, Hilton is also higher. It's seeing its best day since July of 2022. Now, this is coming after an earnings beat and particularly driven by international demand. So this is kind of offsetting the slowing demand that we've been seeing on the U.S. side, but we are seeing a pickup here in international demand, and that is driving the shares higher this morning.
Yeah, I mean, I don't know. I'm not crazy about the reward points personally, as in for airlines. Airlines, I'm all in on United.
Team Delta.
Got the card.
I'm
You're Team
Delta.
Delta. You're
Yeah.
Delta. Okay. I haven't gotten that way with the hotels. I should be. My daughter's very good with the points. I think the younger folks are really good with like the points and gaming the system, the credit cards, the this, the
The
that.
nerd
Bang for your
wallets of
buck.
the world,
Yes.
for sure. I think,
Right.
you know what? I actually also struggle with the hotel allegiance, but I think it's because, like, you've got Airbnb and all these other options, whereas, like, people are way more loyal on airlines.
What percentage of your stays away from home are Airbnb versus a hotel?
It's a small for me. It's a small percentage that I do Airbnb.
I would say growing now with the bachelorette parties, for sure.
I can
is that
see
right?
that.
A growing percentage.
And is
yes.
it now? Have you been to a Nashville, Tennessee bachelorette party?
Nashville, yes, but not for a bachelorette. We actually, the theme of the weekend was that we were celebrating none of our engagements.
Oh,
Because it was like 5 women of that age, but none of us were engaged.
I don't know. So Alex Steele and I are going down to Nashville for a remote broadcast next month, and I told her to get ready. There's going to be bachelorettes
Oh, there
all
are
over.
everywhere.
truckloads of that.
Yes.
Everywhere.
Actual truckloads.
And I don't know why
Yes.
that is. How did that come to be a? It just. I thought
I'm
it was
sure
Vegas.
there's a
You get to
country
pull out the
music
hats.
song out there.
Yeah,
that
country
has
music,
it.
pull out the boots.
All right.
Here we
It's a
go.
thing.
There's Nashville. We
You
got
will
it.
get it up close and personal, Paul. You'll see it all.
All right, good. We'll sit there and watch. All right, Norma Linda, thank you so much for joining us. Norma Linda, she covers all the markets for Bloomberg News. Again, the S&P is up about 0.3%. The Dow's pretty flat, and the Nasdaq's up about 0.8%. Right smack in the middle of earnings season. I'll tell you, that was a very, very important earnings release and conference call last night for one Tesla. And it looks like Elon Musk got the job done. The stock's up 15% here today. Let's break down what we did see from Tesla and what we did hear from Mr. Elon Musk. We'll check in with Steve Mann. He's a global autos and industrials analyst for Bloomberg Intelligence. He's down in Princeton, New Jersey. Very comfortable down in Princeton. He's not coming into New York. He's not taking the train. He's done all that malarkey.
But we
He's very
love the
comfortable.
in-studio guests when we can get one.
Yes, and we need to go down to Princeton to our office. I got to show you that. It is awesome. It's
Especially
great.
with all of our BI friends down there.
I
We
know.
should do a remote broadcast
We're
from
going
there
to do
one
that.
day.
I'll put that in the books. We'll go down there.
All
They
right.
have great food, and that's where we built BI from day one. Hey, Steve, thanks so much for joining us here. What are your takeaways from what we saw from Tesla in their results and what we heard from Elon Musk?
Well, thanks, Paul. It's a sigh of relief, I think, for a lot of investors. If you look at the valuation of Tesla, there's actually two groups. You can actually break it down two groups of investors. One who thinks Tesla is just an automotive company. The other really believes in the long term, the AI, the autonomous vehicle. I think yesterday's call and yesterday's announcement, it soothes a lot of the concerns that both parties had yesterday, especially with the announcement that they're going to pull forward, not just launch, but pull forward the launch of the affordable EV.
Is that something that you give a lot of credence to, Steve? Because I feel like with Elon and with Tesla in the past, there have been these promises, and maybe not all of them have quite come to fruition.
I think the affordable EV is a real thing. Like you guys talked about earlier, robotaxi, I think there still needs time for development. But if you look at the affordable EV, it actually kills two birds in one stone. You know, it actually increases the scale for Tesla. And you know, we're going to see revenue growth. We potentially see profit growth from that affordable EV, and that's exactly what the market needs. It's more affordable vehicles to increase penetration of EVs. The other thing that's really important with this affordable EV launch is it actually helps Tesla increase its reach globally, because you know, you have a lot of emerging markets that, you know, a lot of consumers there cannot afford an expensive $50,000 vehicle, $40,000 vehicle. So a sub $30,000 vehicle is the right product for them to expand geographically.
Steve, what do we know about the economics of such a new or lower cost vehicle? Can they produce that at a profitable basis on a per unit basis?
Yeah, there's a couple ways they can approach this. I think, you know, they can develop a totally new platform. But, you know, in the other segments I've done with you, we've talked about vertical integration. And vertical integration has actually reduced the cost of, you know, car production. So for them, you know, for Tesla, it's the only company that's profitable in producing EVs. So the other option is actually think about, you know, what they can do with the 3 and the Y. You know, can they offer, you know, lower trims, maybe even, you know, a smaller battery that's going to allow them to cut costs and also, you know, make that available to the consumer at a lower price.
So this obviously was the best part of the report. This is what the stock is rallying on right now, but you still had elsewhere in the earnings report, we had falling vehicle sales, we had worse than expected revenue and profit, and a pretty significant cash burn figure. So, I mean, Steve, are you totally optimistic here? Or what kind of concerns do you still have here?
I've always said, you know, I think this year and even into next year, there's some bumps on the road. You know, Cybertruck is still ramping up. It's a very difficult vehicle to build. They're still working on those issues. You know, we don't think the EV market, actually, especially in the U.S., will pick back up until 2025, late 2025 into 2026, because the market really needs a lower cost, more affordable EV to entice kind of more new buyers into the market. So long term, I'm very positive. I think this company has done everything right in terms of, you know, looking at AI, looking at AV. I still believe the EV, you know, shift has actually sailed. We're going to have EVs for the long terms, and I think that subscription-based, software-based vehicle that they're trying to build is the right move, right strategy for the industry.
Steve, what did Elon say, or to what extent did he address just kind of the developments in China, how things are developing there from a competitive standpoint, a sales standpoint, and all that?
Yeah, it's. I actually see that it will continue to be bumpy. They're probably likely to lose market share, continue to lose some market share there. But I think, you know, Tesla is leveraging China, not just for sales, but it's a low-cost manufacturing base for the company. The Shanghai factory still pumps out 1 million vehicles, close to 1 million vehicles a year at a very low cost. They still are able to source battery from companies like CATL, the largest EV battery maker in the world, at a very attractive price, given their volume. So, you know, China sales will probably slow. It's a hyper-competitive market. Xiaomi, which is a major cell phone maker in China, they're launching a vehicle that's also very affordable. So they're going to see more competition in China. So, but again, China is not just a sales, for sales, it's a manufacturing, low-cost manufacturing base for them.
So something else on the call, Steve, that Elon had took a dig at the car makers that are paring back on the EV production plans and going more to the gas-electric hybrids instead. He didn't call them out, but GM and Ford are among those ones. But isn't that really where consumers are going more proportionally right now, more into the plug-in hybrid space, or maybe non-plug-in hybrid, but just hybrids in general versus full-on EVs?
Yeah, I think the consumer, we did a survey not so long ago. I think what we got from that survey was that I think the consumer needs to try out EVs. They actually needs to be educated on how to make EV work in their daily life. So PHEVs, plug-in hybrids is actually good transition into full EVs. They alleviate some of the concerns in terms of range, in terms of the lack of infrastructure that's for the EV market right now. So PHEV and EV are a good transitional product, but it's not a long-term product, because if you look at some of the emission standards, it's continue to be tighter and tighter. Eventually, hybrids and PHEVs probably won't even meet the more stringent emission standards down, in the next decade.
Steve, 30 seconds. What's the call here on just Elon? Is he focused on Tesla?
He is focused on Tesla. There was a question last night on that, and he reiterated that, this is his baby. Yep. AI is his baby. That's his. I want to say that's his dream. Yep. Is to make cars, robots, and autonomous. So he's laser focused on that.
All right, good stuff. Steve Mann, thanks so much for joining us. As always, Global Autos and Industrials Research Analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey via Zoom here. And the investors certainly liked what they heard last night, Molly.
Oh my gosh, yeah, that stock is ripping today. And hadn't Nora just said, it was down quite a bit on the year. So this is, the job cuts too have been really quite something. Our colleagues out in San Francisco, Dana Hull and Ed Ludlow have been all over that. Yep. So I think the marketing division, that was the most recent one to go. Right. That we've decided that ads are no longer worth it. Yep. People are just going to buy the cars.
It's word of mouth. Yeah, it's word of mouth, and it's the strength of the brand out there. So the stock is up 14%.
I don't know if I really disagree with that.
So anyway, it's got a market cap of $425 billion. So we'll see how this plays out. So a good day for the shareholders of Tesla. Coming up, George Ferguson, we're going to preview or get a sense of what happened with the Boeing earnings that's coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks are mixed as traders chased mostly positive earnings reports yesterday and pulled those markets higher. The S&P 500 actually notched its best back-to-back rally in 2 months. Right now, the S&P up just 0.1%. We have the Dow, little change, the NASDAQ up 0.5%. We have more earnings on tap for today. 40 companies in the S&P 500 reporting. All eyes, yes, will be on Meta platforms after the bell. Microsoft and Alphabet, they're set to report tomorrow. Now, Bloomberg Intelligence says profits for the Magnificent Seven group, well, their forecast to rise about 40% in the first quarter from a year ago. We'll get to the bond market. The 2-year yield at 4.94%. That's little change. The 10-year yield at 4.66%, and that's up 5 basis points. To commodities, we have spot gold lower at $2,321 an ounce, and over to oil, Brent crude $88 a barrel, NYMEX crude $82 a barrel. Taking a look at Bitcoin, down nearly 1% at 65,760. That is your Bloomberg Business Flash. Paul and Molly.
All right, thank you very much, Lisa Mateo. Molly Smith is sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. Looking at Boeing, the stock shares are up a little bit. Boeing burned through $3.93 billion in cash in the first quarter. That's a less dramatic drain than analysts had expected. So that's accounting for the stock moving higher. As the embattled plane maker continues to slow output to get a handle on its manufacturing issues. So I guess trying to really focus on quality as opposed to quantity. George Ferguson, he's been helping us along the way here with this Boeing story all along. He covers aerospace, he covers the airlines for Bloomberg Intelligence. He also is enjoying our Princeton campus with the delicious
I'm telling you, the satellite show from Princeton is coming.
It's strong. Yeah, we're going down to Princeton.
Absolutely.
I mean, God forbid you take a train into the world's financial capital. George Ferguson doesn't have to do that. People come to George. George, talk to us about what we saw from Boeing in their results. What were the key takeaways for you?
So I think we saw not a lot. Not a lot of detail inside here about what matters most going ahead. We did see cash burn for 1Q, like you said, combined with capex, free cash flow usage, $3.9 billion. CFO had sort of told us that we would see something between $4 and $4.5 billion. It came in lighter than that. The markets, I think, are a little bit happier about that. But you can't live here long, right? I guess the big takeaway here too is that there's about $7 billion in cash and equivalents on the balance sheet. That's dwindling pretty quickly. They paid $4.4 billion, I think it was, in debt during the quarter. So something has to happen, right? They want to buy Spirit Aerosystems. I hear all kinds of conflicting reports, but essentially, I think it's there's a lot of challenges around negotiating getting Airbus out of Spirit Aerosystems so Boeing can buy it. They've talked about using cash to buy Spirit, or I guess debt maybe. I think it's a company that doesn't want to add a lot more debt to their balance sheet. Spirit's market cap around $4 billion. You only have $7 billion left in the balance sheet. Something's got to happen. You got to raise some capital here. You can't do this all cash, or you got to use Boeing stock. And just the numbers they're getting small, right? The cash numbers are getting small. You're running out of runway here. They need to come up with this plan with the FAA and how they're going to stabilize production, start building airplanes, start generating cash, because you can't do this many quarters.
So, George Lynn, do you think that there's a risk that we could be hearing about some kind of financing activity from Boeing coming up? I mean, like you just said, I think it'd be kind of hard to envision them doing a debt sale right now. That sounds like a little bit of maybe a red flag to me, but if they would do, I don't know, the equity's not worth a whole lot, like what do you do from here?
Yeah, so agreed. I think, what I heard from you is that it could be hard to do a debt deal here. I think so. I think they wouldn't let $4.4 billion get repaid without sort of plumbing the markets and thinking about whether they would do an issuance here. But, you wouldn't want to raise equity here. I feel like it'd be hard to raise debt. You got a lot of money wrapped up in inventory on the balance sheet, airplanes that have already been built, haven't been delivered to customers. They've shipped some of those in the last quarter, which is free up some cash. But I think you really got to get the manufacturing, process going again and generating cash. That way, I think that would get folks more comfortable about giving more debt or equity.
I don't know. I could get a debt deal done in this marketplace.
You personally, Paul
Sure,
Sweeney.
I could go sell some Boeing debt back in the day if I had my seat back.
Maybe.
Some investment grade debt. you're
Sure,
saying.
no
Okay.
problem.
All right.
George, talk to us about deliveries. Where are we today? I'm kind of focusing on the 757. That's kind of the main beast, as you've told us in the past. Where are we on deliveries today, and where do they want to get to, and do you have confidence they can get there?
Yeah, so I think we don't necessarily know where we are on deliveries today. We're going to find that out, I hope, on the earnings call here in a couple minutes. Again, I think that a number of the airplanes they delivered in March and in February were probably out of inventory that were already built. So, what I'm getting back to is what the real build rate is. I've heard numbers in the 20s-ish. Where they want to be, they should be at 38, and they right now a month in the 737, breaking to 42, near the end of the year, had they not had this problem with the panel blowout on the Alaska Airlines. So what I think we heard from the CFO at the Bank of America event, conference earlier this quarter, and 1Q, was that they want to be at 38 by the end of the year. Look, around 38, I think they were doing okay financially. They need to be breaking up into the 40s and 50s. That's going to make them a lot more healthy. That's going to make their supplier base a lot healthier. Spirit couldn't really survive down at that 30-ish, 38 level of build rate. So again, I think where they want to be is up in the 40s and 50s, where Airbus is. Airbus is getting ready to break into the 50s and 60s. They want to be up there, but from a 50 rate, I think they're a year and a half away at least right now.
And of course, Airbus has just been riding this whole Boeing disaster wave quite nicely to their benefit. So going well for our friends abroad over there. But you started off, George, by saying that, there's not a whole lot to go off of here, that of course, Boeing didn't provide earnings guidance for the year. We've got some management changes coming up sometime within the year. We know that CEO Dave Calhoun is going to step down by the end of 2024. Do you think we'll get a little bit more guidance on that on the earnings call?
Not sure, right? I think that if we knew something about the next CEO, I think they probably would have even told us before the earnings call. That's such a huge overhang on this company right now, right? And I imagine, we got this announcement. It seems like we move in dog years here at Boeing, right? One day is like 7 anymore. I don't know. I think we got this a month ago, a couple of weeks ago. I imagine there's a lot of work going on the search right now and feeling out constituents as to whether or not the folks they identify are the right people. So, and I think as soon as they know that they have someone in place, they'd announce it, because, again, it's such a huge overhang. I think they need to get someone in place, and they need to have their plan fleshed out and bring that to the marketplace as soon as possible. I think that's going to create, again, a lot more comfort with investors. So I don't think they would hold that back. And I don't think that Dave Calhoun is going to be the one that's going to announce it either. And so I don't think anybody on the call would be a person announcing it, but I could be wrong. But again, I don't know that they're anywhere on that right now, and that's super important.
Hey, George, Boeing's customers, the big airlines, what are their needs these days? Do they need more aircraft? Like if Boeing was at 50 or 60% production, would there be demand there for that?
They need more, faster, as soon as possible, I guess. Look, I think if you take United as one of the core customers, there's a demand to fleet refresh around the world, right? The new MAX is 15-20% more efficient than the old 737 or the A320. Airlines want that efficiency as soon as possible in their fleets. The market, I think, is looking fairly competitive. It may not. This summer may be a little bit less competitive than we expected, given Boeing's problems and some of the geared turbofan problems at Raytheon that knocked some airplanes out of service. But fuel's rising. Airlines want to be very competitive. They need the most fuel-efficient aircraft, so they want them as soon as possible. And like in United's case, almost everybody is increasing size, right? Size of aircraft are rising because pilots got 20% plus, wage increases. You got to find a way to drive down costs. One of the things we heard out of JetBlue yesterday, they're looking for ways to drive down costs. One of the things you always do is increase aircraft size, and therefore you're flying more passengers for the same, cost of that pilot up front. That helps you improve efficiencies. They all want it. So they're all trying to find bigger aircraft to fly with more seats. And so, yes, airlines want airplanes as soon as possible. If you're a Boeing customer, what also really ticks you off is you look across the street at the folks flying the Airbus airplane, and they probably have little to no interruption this summer in their schedules. You're worried about what deliveries you're going to get and your ability to fly your schedule, and that hurts if you're the Boeing customer, right? The Airbus customers are smiling.
All right, George, thanks so much again for giving us an update there on the aerospace airline industry. George Ferguson, he covers all the airlines and aerospace for Bloomberg Intelligence. Coming up, Gregory Corte, Bloomberg News White House and political correspondent. He's going to give us the latest on the Bloomberg News Morning Consult poll, getting a little bit tighter there.
This has been so interesting to follow. We're going to get you all the latest on the swing states poll. That's what this is focusing on, and a lot of economic pessimism coming from this core group of states that could really decide the election.
Yep, so we'll bring the latest reporting there. The S&P 500 up 0.1%. With our news in New York, here's Michael Barr.
Thank you very much, Paul, Molly, and Lisa. Columbia University says that it is making important progress with pro-Palestinian student protesters who set up a tent encampment, and the university has extended a deadline to clear out. The university said early this morning that student protesters have committed to dismantling and removing a significant number of tents. A smaller encampment remained on campus. The university says that there was constructive dialogue, and it will continue conversations for 48 hours. Protesters are calling for an immediate ceasefire in Gaza.
Our first demand is complete divestment from anything related to Israeli settler colonialism, apartheid, and genocide.
The protest is one of many at schools across the U.S. against Israel's war with Hamas. Congress approved a $95 billion foreign aid package that includes funding to support Ukraine, Israel, and Indo-Pacific allies. The bill cleared the Senate with overwhelming bipartisan support. 79 senators voted for the bill. After the vote, Senate Majority Leader Chuck Schumer said the bill makes clear that America stands with its allies.
To our friends in Israel, America will soon deliver aid to help you fight the scourge of Hamas and stand up to Iran. To innocent civilians in Gaza in the midst of a war, and to those around the world who face hunger, America will deliver food and medicine and clothing.
President Biden is expected to sign the measure around 10:50 this morning, and we'll carry it live right here on Bloomberg. Dueling protests are taking shape outside the Supreme Court as the justices prepare to consider an abortion case. The case being heard today will determine when doctors can provide abortions during medical emergencies. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks are mixed as Wall Street shifts its attention to earnings over geopolitics and interest rate plans. But JP Morgan's Jamie Dimon still narrowed in on the economy at the Economic Club of New York yesterday. He said he's on, quote, cautious side when it comes to whether or not there will be a soft landing. The NASDAQ up 0.4%. S&P 500 a little change. The Dow down 0.1%. The yield on the 2-year at 4.94%, up a basis point. The 10-year yield at 4.66%. That's up 6 basis points. To commodities, spot gold higher at $2,325 an ounce. We have Brent crude at $88 a barrel, NYMEX crude at $83 a barrel. To earnings, we'll point out Texas Instruments enjoying its best day in 4 years. Its shares are up nearly 7%. The chipmaker top first quarter estimates delivered a stronger than expected forecast. And finally, some AI news. Amazon and Microsoft investments into AI startups, well, they're getting a deeper look from the UK's antitrust watchdog. It's trying to figure out whether the collaboration between Amazon and Anthropic threatens that competition in the UK. Now, it's also looking at whether Microsoft's partnerships with Mistral and Inflection AI will cause a problem as well. We shall see. We have Amazon down 1%, Microsoft up 0.3%. That is your Bloomberg Business Flash. Paul and Molly.
All right, Lisa Mateo, thank you so much. We appreciate that. We got Molly Smith sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check in on youtube.com and search Bloomberg Podcast. Bloomberg News, along with Morning Consult, they have an ongoing poll where they do some polling data as it relates to the current political situation in key battleground states. That's the key part, right?
It's been a really good series, yeah, and Gregory Cordy's been all over it. He's our Bloomberg News White House and political correspondent, and he's going to join us now. Gregory, what can you tell us about the big takeaways from this iteration of the poll?
Yeah, so as you said, we've been doing this every month. This is the 7th iteration of this poll in 7 key battleground states. And for the first 5 months, it was a pretty stable race with former President Trump with a slight lead over President Biden. Then after the State of the Union address, we got a little bit of good economic news. And we saw last month, President Biden pretty much bring it even. He was winning or even in the Rust Belt states, the blue wall states we call them, of Michigan, Pennsylvania, and Wisconsin. Gave him a fighting chance. But now we're seeing in this month, in the April poll, sort of reversion back to the mean, what we had been seeing all along with former President Trump having across these 7 battleground states, a 6-point lead. And that's significant. Biden can't win this without getting at least those blue wall states and probably another one. And he's now down in Pennsylvania by within the margin of error, but significantly down in Wisconsin. Michigan, interestingly, is his bright spot, and who would have known, because there are a lot of concerns there about a large population of Muslim voters, union workers, but he seems to be holding his own there.
Gregory, what are the key drivers or key influencers in this poll? What kind of moves the numbers around?
It's really the economy, and you see that with any incumbent president. Their numbers move up and down with the economy, and what we're seeing in this poll is deep pessimism about where we're going to be by the end of the year. You see here the numbers. Majorities think that the inflation rate is going to be higher by the end of the year, that the economy overall is going to be worse, and also that interest rates are going to be higher by the end of the year. Now, these are voters talking, and they're sort of giving us their perspective within this political framework, where this might differ a little bit from the University of Michigan survey when we're talking to consumers and people making different kinds of decisions. But the fact that President Biden is so tied to the state of this economy and that people are pessimistic about the economy is not a good sign for the president.
This is so fascinating to me as somebody who covers the economy. Just like this is something Gregory, we're no stranger to this, but just like the mismatch in like where the economy is actually performing and how people actually perceive it to be performing. And it's so interesting to me that like this mismatch continues here. I mean, we're about to get a GDP report tomorrow that's going to be, is it tomorrow? Yeah, tomorrow. Okay. It's going to be pretty strong. I mean, going to have growth up in near the 2.5–3% area. The unemployment rate is below 4%. Yeah, inflation has been stalling. I guess when you say to me that, so a majority of swing state voters see the economy worsening, I just wonder, like, what metric are they referring to? And I know that they're not looking at the economy based on, like, oh, well, we think manufacturing's this, but, like, what are they looking at? Is it really just inflation?
Yeah, voters look at the economy differently than economists look at the economy. And one of the interesting things, even in this poll, there's an inconsistency, and it's a little inscrutable, but when you ask people about the national economy, 2/3 of them say it's bad. When you ask people about their local economy, a majority say it's actually pretty good. And so people are differentiating between their own personal economic situation and what they see in the economy writ large. Why is that? It may be because of they're keying off of negative political coverage. It might be because we have this political polarization where when they're saying the economy is bad, they're really trying to make a statement about the president who they don't like. It may just be that they view inflation as a national issue and inflation is high. Unemployment they might see as a local issue because they have a job and their neighbor has a job, and so they might see it as a local issue, and so therefore their local economy is doing well. There's a lot to parse out there, but certainly people are giving us mixed signals about the state of this economy.
And what do you think the Biden administration needs to do, perhaps differently, going to Molly's point about saying, hey, the economy is in pretty darn good shape. Here's what we've done. How do you think they should be messaging this?
They have been trying with that message for months now, and it's been a tough message to get across. At one point, they tried to take this pejorative label of the economy that Republicans tried to brand it with, of Bidenomics, and turn that into a positive. That did not work. They did not change the public perception of Bidenomics. They moved a little bit away from that messaging right now. They can talk all they want about the infrastructure bill, the Inflation Reduction Act, the CHIPS Act, all of these things that we know we've been tracking, is starting to make a difference and will make a difference in manufacturing, onshoring a lot of technology. But those aren't really resonating with people. People don't really connect with bills being passed. They want to see actual stuff getting done. And some of that is on a longer time ramp. So maybe it's just giving it time. We have 6 months now. But the problem for Biden is that now, the second quarter of an election year, is really when people start to make up their minds about the economy, really sort of solidify how they think the economy is, and they're going to carry that with them into November.
And another problem with all this too, Gregory, and that you point out in the story, is that it really doesn't matter, like, for whatever reason that the economy is performing the way it is, but voters' perception is that if it's doing poorly, you put that blame on the president, whether it's, deserves to be there or not. So, Biden tried shifting that a bit, saying the inflation stuff is stemming from, Russia's invasion of Ukraine. That message didn't really sit. Can he really shift the blame elsewhere anymore?
Yeah, we asked that very specific question in this iteration of the poll. We asked who is responsible for the economy, and the number one answer, of course, is the president. There is some political polarization there. Republicans are more willing to hold him accountable than Democrats. Democrats are more likely to say, well, Congress also plays a role, the Fed plays a role, Wall Street, corporations all play a role. For Republicans, they want to put this entirely at the feet of the president. So the issue is going to be, how do independents see it? How do swing voters see it? Do they give Biden a little bit of a pass, given that this post-pandemic economy has had a whole bunch of struggles that may or may not be outside the president's control? That's the debate that we're going to have in the next 6 months or so.
Gregory, how aware do you think the White House is of polling data like this?
Thank you so much.
I don't necessarily want to get into every conversation that I have with the White House and the Biden campaign on this, but suffice it to say they're very aware. The public messaging is going to be, we don't dictate policy by the way polls are from day to day. But they look particularly at these polls. You'll see a lot of polls out there that have the national number, the popular vote number, and that's actually pretty even. Trump and Biden are pretty much neck and neck in those national numbers, but because of the way the Electoral College is constructed, it's these 7 states that are most likely going to decide this, and that's where that 6-point differential makes a difference. And so they're looking not just at the national numbers. They would obviously like to see an upward trend in the national numbers, but they're looking state by state by state to see where they're doing, where they're up, where they're down. And this is going to be especially important going in the summer and fall, into where they deploy the resources, where they spend money on ads, where they put volunteers on the ground, where they knock on doors, where they do the get out on the vote efforts. And this is going to be a very shifting campaign over the next 6 months. We're going to see both the Trump and Biden campaigns look at these polls and decide where to deploy their resources, because this is actually an awfully small chessboard.
Yep.
This is not a 50-state campaign. This is a 7-state campaign, and maybe even smaller than that at this point.
And Gregory, is there any reason to think in your polling data, do you see anything about the president, former President Trump's legal issues being a weight on him? Doesn't appear to be.
We asked that not this month, but the previous month. We asked whether people would change their minds if the president's convicted on anything, and a majority said that they would not vote for Trump if he were convicted on something. Now, we'll see if he were to be convicted, whether people might change their minds and discount these. Obviously, President Trump is out there every day trying to dismiss these as partisan political persecutions of him. So we'll have to see whether an actual conviction changes that dynamic at all. People really aren't differentiating between these cases at all. The Alvin Bragg case that's going on in Manhattan now, the two federal cases, and the Georgia case, people kind of throw them all in the same bucket. And so we'll just have to see if there's an actual conviction, how people process that information.
It certainly is a lot to keep track of from a voter's perspective, so I can't necessarily say I blame them if you do lump them all together. Something else you touched on in this version of the survey, Gregory, is abortion and how important that will be in deciding the next president. How did that one rank versus the economy?
This poll was in the field when we had that Arizona Supreme Court decision that upheld a 19th century abortion restriction law that was in effect up until Roe v. Wade, the Supreme Court case in 1973. And so we're reverting back to the pre-Roe law in Arizona. Very controversial, obviously. And we do see an uptick of voters saying that abortion is a very important issue for them, and especially, obviously, among Democratic women. Among independent women, a little less so, but suburban women is the key demographic that we all look at, an uptick there, and especially in Arizona. Now, the question is going to be whether these are people who already, those votes were baked in, those were votes that President Biden was already going to get. It may help him, though, in terms of enthusiasm. There seems to be an enthusiasm gap here, and so Joe Biden, even if he's not winning any new voters on the abortion issue, he needs that issue to really motivate those Democratic voters to show up in November, because there might be a lot of reasons why they otherwise might decide to sit this one out.
All right, Gregory, thank you so much for joining us. Appreciate your reporting. Gregory Cordy, White House and political correspondent for Bloomberg News, joining us from Washington, D.C. We are waiting President Biden. He is scheduled to give some comments. The U.S. Senate just today passed a long-delayed $95 billion emergency aid package for Ukraine and other besieged U.S. allies, clearing the way for resumed arms shipments to Kiev within days. So we expect President Biden to be delivering some comments related to that story. When he does, we will bring that to you live. But right now, let's get a little bit of a reset here on the markets. We'll go to Lisa Mateo for a Bloomberg Business Flash.
You got it. And all eyes still on Tesla this morning. It's rebounding from a 15-month low. Elon Musk promising to speed up the launch of cheaper models. Right now, Tesla shares up 11%. Now, after the bell, all about Meta. Bloomberg Intelligence tech analyst Mandeep Singh says Mark Zuckerberg's so-called year of efficiency could pay off in these results. All right, we'll get to that a little bit later. Right now, Meta shares, they are down just a fraction. And today, the earnings came in fast and furious. We'll start with AT&T. The company topped estimates for profit in the first quarter. It added more wireless phone customers than expected. AT&T shares down 0.6%. To Boeing we go. First quarter revenue beat estimates. The company burned through $3.93 billion in cash in the period, but it was a little bit less dramatic than expected, and now that's why those shares are up 2%. And Biogen reported first quarter profit beat expectations. The company cut costs. Its new Alzheimer's drug gained some momentum, and we have Biogen up 4%. Hilton reported earnings. It beat estimates, growth in international travel. Will that help make up for slowing demand in the U.S.? Hilton shares up 6%. And Visa finally reported quarterly profit, beat expectations. U.S. credit card spending is continuing to climb. So are those shares. They're up 1%. That is your company news at this hour. I'm Lisa Mateo.
All right, Lisa Mateo, thank you so much. We appreciate that. Molly Smith sitting in for Alex Steele, who's on vacation this week. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. The situation right here is we had some movement down in Washington, D.C. The U.S. Senate, they passed Ukraine aid. Arms shipments are set to resume within days. That is the headline on the Bloomberg terminal. We are awaiting comments regarding that story from Washington, D.C. President Biden, we see the shot of the lectern right there for the president in the White House. And as soon as the president comes and begins his comments, we will bring that to you. Right now, though, let's get world and national news, and we'll do that with Michael Barr.
Thank you very much, Paul, Molly, and Lisa. The Supreme Court is considering a case that will determine when doctors can provide abortions during medical emergencies in states with bans enacted after the High Court's sweeping decision overturning Roe v. Wade. Outside the court, Emily Martin with the National Women's Law Center says the patchwork of laws around the U.S. has led to limited or no health care options for many.
It's caused a public health crisis. The legal uncertainty that providers are facing in states like Idaho is leading OBGYNs to flee states with abortion bans.
Today's Supreme Court hearing comes from Idaho, which is one of 14 states that now ban abortion at all stages of pregnancy with limited exceptions. And as Paul mentioned earlier, the Senate passed a long-awaited foreign aid bill. Bloomberg's Ed Baxter has the story.
$95 billion in foreign aid to Ukraine, Israel, and Taiwan. The package includes 4 bills that passed the House over the weekend with bipartisan votes. The Senate votes also overwhelming support. It does include the divest bill for TikTok. Now, not included is the border package that Republicans had demanded for months. Senator Lindsey Graham says this one had to go.
The fact that we did not get provisions for our border, in my view, doesn't mean we can't deal with the other problems the world faces. We actually have to.
Now, the president has said all along that he will sign this package. Ed Baxter, Bloomberg Radio.
And Bloomberg will carry President Biden's comments live any moment now. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Molly, and now John.
Wow, how about that? All right, Michael Barr, thank you so much. We appreciate it. All right, the story right now is we are waiting President Biden. He is scheduled any moment to give some comments regarding the legislation that passed here, as Michael Barr is just reporting. The U.S. Senate passed this $95 billion aid plan to Ukraine, Israel, and Taiwan. Also, Molly, includes TikTok.
And that's part of it.
I mean,
there's a lot in this.
There's a lot in this. Yeah, so TikTok, we'll have to see what happens here, but presumably they will require ByteDance, the Chinese owner, to divest it or sell it. So we'll have to see how that plays out. What we heard from some of our legal experts yesterday, Matt Schettenhelm down in Washington, D.C. from Bloomberg Intelligence, this is going to the court. So.
It sounds like, there is a lot to be decided still on TikTok. There's, so much more involved in this aid package here. It looks like President Biden's coming up right now, and we're going to hear from him in just a moment.
All right, let's go down to Washington, D.C. President Biden.
I just signed into law the national security package that was passed by the House of Representatives this weekend and by the Senate yesterday. It's going to make America safer, it's going to make the world safer, and it continues America's leadership in the world, and everyone knows it. It gives vital support to America's partners, so they can defend themselves against threats to their sovereignty and to the lives and freedom of their citizens. And it's an investment in our own security, because when our allies are stronger, and I want to make this point again and again, when our allies are stronger, we are stronger. I'm grateful to all those in Congress, Democrats, Republicans, Independents, who voted for this bill. It's a path to my desk. It was a difficult path. It should have been easier, and it should have gotten there sooner. But in the end, we did what America always does. We rose to the moment, we came together, and we got it done. Now, we need to move fast, and we are. Over 2 years, Russia has been responsible for a brutal campaign against Ukraine. They've killed tens of thousands of Ukrainians, bombed hospitals, deliberately picked them out, bombed hospitals, kindergartens, grain silos, tried to plunge Ukraine into a cold and dark winter by striking their power grid. Ukrainians have fought back, defending their country and their families with extraordinary courage. Many of you have been there with me many times. It's amazing what they do. I mean, it's amazing against such a larger military. Ukraine has regained over half the territory that Russia took from them in this invasion. And they won important victories against Russia's Navy. But make no mistake about it, they're a fighting force with the will and the skill to win. The will and the skill to win. For months, while MAGA Republicans are blocking aid, Ukraine has been running out of artillery shells and ammunition. Meanwhile, Putin's friends keep keeping him well supplied. Iran sent him drones. North Korea has sent him ballistic missiles and artillery shells. China is providing components and know-how to boost Russia's defense production. With all this support, Russia has ramped up its airstrikes against Ukrainian cities and critical infrastructure, rained down munitions on you brave Ukrainians defending their homeland. And now, America is going to send Ukraine the supplies they need to keep them in the fight. This weekend, there were reports, and I find this amazing, there were reports of cheers breaking out of the trenches in eastern Ukraine. Probably came from one of your folks, a reporter or someone, I'm not sure where it came from. But they're cheering as they watch the House vote in support for Ukraine. It's not like they don't understand what we've done. Not like they don't understand how critical this is for them. I'm making sure the shipments start right away. In the next few hours, literally a few hours, we're going to begin sending in equipment to Ukraine for air defense munitions, for artillery, for rocket systems, and armored vehicles. You know, this package is literally an investment, not only in Ukraine's security, but in Europe's security, in our own security. We're sending Ukraine equipment from our own stockpiles. Then we'll replenish those stockpiles with new products made by American companies here in America. Patriot missiles made in Arizona, Javelins made in Alabama, artillery shells made in Ohio, Pennsylvania, and Texas. In other words, we're helping Ukraine while at the same time investing in our own industrial base, strengthening our own national security, supporting jobs in nearly 40 states all across America. You know, the United States is not acting alone, to state the obvious. Our allies in Europe and around the world, who've constantly been asking me, are we going to step up? We're not going to walk away, are we? How many, and some of you have been in these international meetings with me, they're very concerned. Had we failed to step up, Lord only knows what would happen to the cohesion in NATO. They're also sending significant help to Ukraine. We're all standing together against this brutal dictator. As I've argued for months, this is directly in the United States' national security interest. If Putin triumphs in Ukraine, the next move of Russian forces could very well be a direct attack on a NATO ally. And you all know full well that invoking Article 5 of the North Atlantic Treaty would be the first thing that comes to mind, which declares an attack on one as an attack on all. If Putin attacks a NATO ally like he's attacking Ukraine today, we'd have no choice but to come to their aid, just like our NATO allies came to our aid after the September 11th attacks here. That's why we're supporting and surging support now to Ukraine, to stop Putin from drawing the United States into a war in Europe and in the future. You know, it seems to me we should take a little bit of a step back and realize what a critical moment this was for the United States and for NATO. This is a historical moment. In the last 2 years, we've helped unify, strengthen, and expand NATO. Imagine if instead we had failed to step up now and support Ukraine. All those gains would have begun to unravel. The cohesion of NATO would have been weakened, and our national security would have been undermined without any question. You know, Putin started this war believing he could easily break the will of the people of Ukraine. When that failed, he changed his strategy a little bit, thinking we could break the will of NATO, break the will of the United States, break our will. Well, he's failed again. America stands with our friends. We stand up against dictators. We bow to no one, certainly not Vladimir Putin. Look, this bill also includes vital support for Israel. Just 10 days ago, we saw Iran launch over 100 missiles and drones at Israel. Because of them and other allies across the country, world, including from the region, no serious damage occurred. An unprecedented attack that followed years of Iran supporting Hezbollah, Hamas, and proxies of their own attack on Israel. They fund these guys. My commitment to Israel, I want to make clear again, is ironclad. The security of Israel is critical. It will always make sure that Israel has what it needs to defend itself against Iran and terrorists it supports. And with this aid, the United States is going to help replenish Israel's air defense and provide other critical defense so Iran can never carry out the destruction it intended with its attack 10 days ago. But at the same time, This bill significantly increases humanitarian assistance we're sending to the innocent people of Gaza who are suffering badly. They're suffering the consequences of this war that Hamas started. And we've been working intently for months to get as much aid to Gaza as possible. This bill includes $1 billion for additional humanitarian aid in Gaza. We're going to immediately secure that aid and surge it, including food, medical supplies, clean water. And Israel must make sure all this aid reaches the Palestinians in Gaza without delay. And everything we do is guided by the ultimate goal of bringing these hostages home, securing a ceasefire, and setting the conditions for an enduring peace. You know, there's more that this bill does, as you all know, in the press here, including providing for support to strengthen even further our allies and partners in the Indo-Pacific region, as well as humanitarian aid to places including Haiti, Sudan, and Somalia. But there's one thing this bill does not do: border security. You know, just this year I proposed and negotiated and agreed to the strongest border security bill this country has ever seen. It was bipartisan. It should have been included in this bill. And I'm determined to get it done for the American people. And I'll come back to that at another moment, another time. This is a reminder of what America can do when we come together, despite our differences. I want to thank everyone in Congress who made it possible, especially the bipartisan leadership. Speaker of the House Mike Johnson, Leader Jeffries, Leaders Schumer and McConnell. They don't always agree, but when it matters most, they stepped up and did the right thing. And I mean this sincerely. History will remember this time. History will remember this moment. For all the talk about how dysfunctional things are in Washington, when you look over the past 3 years, we see that time and again on the critical issues, we've actually come together. It hadn't always been easy. But when it's come time to decide to rebuild America, we did it with the bipartisan infrastructure law, which is just underway. When it came time to invest in our semiconductor industry and technologies of the future, we did it with the Chips and Science Act. And when it came time to stand with Ukraine and Israel and help the people of Gaza, we did that as well. At the end of the day, most of us, whether we're Democrats, Republicans, or Independents, believe that America must stand up for what is right. We don't walk away from our allies. We stand with them. We don't let tyrants win. We oppose them. We don't merely watch global events unfold. We shape them. That's what it means to be the indispensable nation. That's what it means to be the world's superpower and the world's leading democracy. Some of our MAGA Republican friends reject that vision. But this vote makes it clear. There is a bipartisan consensus for that kind of American leadership. That's exactly what we'll continue to deliver. I thank you all very much, and I'm going off to make a speech at the hotel I'm late for, and I have plenty of time to answer questions on this and other matters.
Can I ask a quick one on TikTok? Mr. President, do you have a message for the protesters on
Talking
campus?
about the recent aid package, $95 billion aid package for Ukraine, Middle East, and Taiwan. Also has some language in there about TikTok and the potential divestiture of TikTok. So very big piece of legislation coming out of Washington, bipartisan, I dare say. So let's get the latest on what our good friends down in D.C. actually got done and what the president signed. Eric Wasson joins us. He's a congressional reporter for Bloomberg. Eric, it looks like bipartisanship, it's still a thing down in Washington. Can you explain how this package got over the finish line?
Well, the key player here was Mike Johnson, the Speaker of the House, who defied basically a majority of Republicans. The majority of Republicans voted against Ukraine aid in order to put this on the floor and pass it with Democratic help. Hakeem Jeffries, the Democratic leader, also played a key role, basically telling Democrats, you know, we're not going to stand on procedural ceremony. We're going to do very unusual things like vote for debate rules, vote it out of the Rules Committee, do things that are supposedly unheard of in D.C., but when it comes time to funding a historic Ukraine aid package, they were willing to do. So that's how it got done. There could be reverberations for Speaker Johnson. He could be ousted. He could certainly become a lame duck that doesn't get the speakership again if the House remains in Republican hands. But he made that decision, and it's pretty historic.
Yeah, it sounds like a potential Kevin McCarthy situation all over again. I'm sure that's the last thing you guys need down there. Tell us a little bit more about this package, Eric. There's so much going on in here. We've got Ukraine, Israel, Taiwan, TikTok. What stood out for you?
Well, I mean, the key addition to what the Senate had passed is very similar $95 billion aid bill. The House changed about $10 billion in Ukraine aid to a loan. That was something President Donald Trump wanted. Another key addition was the Repo Act. This allows the U.S. president to seize Russian assets in U.S. banks. It's about $5 billion. There are critics who say this could affect weaken the dollar or, dry up appetite for U.S. treasuries if the U.S. acts alone. But my reporting this week on Capitol Hill indicates the U.S. is not going to act alone. They're going to work with the G7 partners to make sure this is a coordinated effort, doesn't create risk premium for U.S. bonds. In addition to this, there is this TikTok provision. It basically starts a clock 270 days for TikTok to be divested from ByteDance or face a ban in the U.S. The president could extend that by 90 days, and by signing it today, he can make that decision right before Inauguration Day. So it's fully in Biden's control. That gives him more leverage to force a sale and discourages TikTok from holding out for a possible President Trump. Though, Trump has flip-flopped on the issue and now says he opposes a ban.
All right, very good. We appreciate that. Eric Wasson joining us from Washington, D.C. He's a congressional reporter giving us the latest reporting on that piece of legislation, $95 billion aid package that passed the Senate, signed into law by President Biden. We heard from President Biden just moments ago on that, how important the president and Congress views that towards aid for Ukraine, for the Middle East, and for Taiwan as well. AT&T, another company reporting earnings a little bit better than expected. Their wireless business kind of driving the business there. The stock is pretty much unchanged on the day. It's unchanged year to date and unchanged on a 12-month basis.
Sharply unchanged.
Sharply unchanged here on the news.
Nothing going on.
It's called a $120 billion market cap company. We all know AT&T. John Butler covers the telecom space for Bloomberg Intelligence. He joins us from Princeton, New Jersey via Zoom. Hey, John, thanks so much for joining us here. What are the takeaways from our friends at Ma Bell?
So, Paul, the one that really stood out to me, you mentioned wireless. I think they did a fine job in wireless. It was sort of a steady Eddie quarter there, but they're doing very well in broadband, and in particular, they've gotten into fixed wireless access. And we were talking about this the other day with Verizon. T-Mobile is also leaning hard into this wireless broadband trend that is resonating very well with consumers. And AT&T had a great quarter there, along with a strong fiber broadband quarter. So the two pistons of growth there are the 5G wireless and then the fiber and fixed wireless access broadband business. And it really was the latter, I think, that stood out to me this quarter.
Tell us about some of this Internet Air service. It looked like that was also potentially a bright spot also.
So Internet Air is the fixed wireless access business. So basically, it's a fancy name for doing that drop from the curb into your home using an over-the-air signal as opposed to having to drop a line into the home. And people love it because you just put a modem in a window and you sort of set it and forget it. So it's easy setup, easy maintenance, and easy to move it around the house to fill coverage holes. So we've seen great strength there, while the rest of the broadband market is kind of on the margin, really slowing down here.
So again, I was just kind of noting that the stock has done nothing for 12 months. What's kind of the investment play one way or the other here on AT&T?
So, Paul, I think the one thing that has sort of been an overhang over the past year on AT&T has been that free cash flow and their ability to begin to grow that again to, number one, keep the dividends safe, but also to pay down that huge debt load that they had coming out of that Time Warner acquisition. We're seeing cash flow begin to grow again. They're coming off the really heavy 5G capital spending cycle. They've now got nationwide coverage, and so they're pulling back on CapEx. And we saw the effect of that this quarter, where we had very strong free cash flow growth. So I think on the margin, that story, at least on the free cash flow front, is going to continue to get better.
And I used to cover corporate debt at Bloomberg. So this is going back 3+ years ago. We talked about AT&T all the time. This is like the biggest non-financial corporate debt issuer in the world. And it's funny, most people probably wouldn't know that. You'd think,
Yep.
oh my God, are they like bankrupt or whatever? You know, you hear a lot of debt. It sounds scary, but this is obviously a very well capitalized company, and they've done the deleveraging story pretty well. I mean, where are they at in that journey right now, John?
So they're still above their target leverage ratio, right? Net debt to EBITDA. That ratio is what they're managing to. They're currently, I think, around 3 times, and the goal is to get to 2.5 times or lower, which is more in line with where the industry is. And they claim that they're on track to get there by the first half of 2025. And you know, based on the pace at which they're paying down debt, I think they're going to reach it, particularly given the free cash flow growth that we're seeing this year.
Hey, John, I know the wireless business is a competitive business with the, you know, the telecom names that you follow, with the cable companies as well. Just give us a state of play. How is it out there in terms of the wireless business and the broadband business?
You know, I'm glad you asked that, Paul. I mean, I think the toughest part of the story for AT&T, for all the telcos here, is that wireless is a very mature business at this point, and you've had the cable guys, as you mentioned, sort of come in at the low end. They've been there a few years now. Their brand names are getting more well-known. They're getting much better at marketing, so the execution is better. So I think the pressure on growing subscribers and to a lesser degree expanding rates here for the big 3 telecoms is getting tougher on the margin. And so I think long-term investors are looking at an AT&T or a Verizon or a T-Mobile saying, what's next? You know, where do you go from here? You're really looking at, call it 2 to 3% service revenue growth in wireless over the next few years, and maybe even lower as the industry matures longer term. And so I think the onus is on AT&T in particular, but also the other telcos, to begin to look to adjacencies that they could potentially tap to sort of augment growth or offset that slowdown in wireless. For now, the answer has been broadband, but longer term, with the broadband market maturing, what's next?
Yep, what's next? All right, John Butler, thanks so much for joining us here. John Butler, he's the senior telecom analyst for Bloomberg Intelligence, joining us via Zoom here. Again, AT&T shares pretty much unchanged on the day, unchanged year to date, and unchanged on a trailing 12-month basis. So the
Sounds
Bulls
like
and
a whole
Bears,
lot of nothing to
a
me.
whole lot of nothing. It's got to come down to, I would think, you know, if I'm AT&T and I'm an investor thinking about this name, there would have to be a dividend yield, and the dividend yield on AT&T right now, 6.7%. So there's, you got that.
Okay,
So,
well,
you're getting paid the weight. They figure it out, I
Yeah.
guess. So we'll have to see. But AT&T putting out some good numbers. John Butler highlighting the wireless business, highlighting the broadband business. I mean, that is a basic utility, broadband. If you lose broadband, you
can't survive in this
can't
world.
survive. Can't survive in this world.
You are non-existent.
Yeah, I just remember during various blackouts, people just going to the local Starbucks to get the wireless.
Sure.
They go crazy.
Yeah, of course.
Searching for that broadband. It's like electricity. S&P 500 off 0.2%. The Nasdaq up 0.1%. Coming up, Mandeep Singh, Bloomberg Intelligence tech analyst. We're talking technology.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major stock averages mixed to little change as earnings season rolls on. 8 of the 11 major industry groups in the S&P 500 were lower, the biggest drag coming from industrials. That's where you're going to find the freight shipper, Old Dominion, those shares falling after the company's first quarter revenue slightly lagged the average analyst estimate. Tesla leading the gains in the mega caps as Elon Musk vowed to launch those less expensive vehicles. Chip makers also catching a bid on the bullish forecast from Texas Instruments. Katrina Dudley of Mutual Services has this impression of earnings so far.
If you take a look at what we've seen over the first quarter, basically the returns to the S&P are in line with earnings growth, so you've had valuations flattish. And that's where we come back to that comment. We think that valuations are fair.
And SunPower eliminating almost a third of its workforce. The company coping with a prolonged slump in the rooftop solar business. They're going to cut about 1,000 of a total of 3,100 employees. S&P 500 right now 11 points lower at 50.59. The Dow Jones Industrial Average 152 points lower. And the NASDAQ 100 right now is up 41 points. That's a rise of 0.2%. Two-year yield 2 basis points higher. That's at 493. The 10 at 465. That's up 5 basis points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Molly and Paul.
All right, John Tucker, thank you so much. We appreciate that. Molly Smith is sitting in for Alex Dale, who's on holiday this week. I'm Paul Sweeney. We're live on our Bloomberg Interactive Broker Studio, and we're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. All right, Facebook. Kids call it Meta.
Some kids.
The professionals call it Facebook.
It'll always be Facebook for me.
Stock's up 40% year to date. It's up 130% over the last 12 months. So when you see a stock that's had that kind of performance, it sets the bar high.
It's got to be AI. I mean, what else, right?
Yeah, and it means they better really deliver on their earnings, and they're going to report earnings, I think, after the close tonight. So let's get a little preview. Mandeep Singh joins us here, a senior technology analyst for Bloomberg Intelligence, joining us here in studio as he does. He does not mail it in from home or from Princeton. He comes into the world capital of
big gold star for that,
as opposed to his management team, which we'll leave that. Mandeep, stocks had a heck of a run here. What do they need to do here with their next earnings report?
Just keep executing. I mean, what they have done over the last 18 months is one, really the focus on cost cuts, and the year of efficiency, which was 2023, has really paid off. So,
AKA job cuts.
I mean, look, I think you could argue with a lot of the tech companies, their cost structure was bloated coming out of the pandemic because they overhired looking at the growth, and so they had to course correct. In the case of Meta, I mean, this is a great business model, over 50% operating margin, and for good reason. I mean, the fixed costs are almost negligible after, you have the infrastructure of the scale of what Meta has created, for their family of apps. And so the way I look at it is Instagram clearly still has a ton of runway. The Blue app is losing engagement, but they have been able to make up for that with their Reels product. And Reels was the equivalent of TikTok. Remember, TikTok really was a scary proposition for them in terms of taking away engagement. They managed to create a product that was comparable to TikTok, and now if the TikTok app is banned, that's actually a great positive because they're going to get a lot of the creators come over from TikTok to Reels.
Is that a lot of why the stock has had the run it's on right now because of the prospect of TikTok being banned, or is it really more the AI story?
It's actually the execution that they have shown over the past 12 months. And as I mentioned, cost cuts have played a big role because now their EPS expectations have gone up 40%. So in their case, earnings per share. It's not just multiple expansion, it's EPS growth, paying off 25% of the staff. So that tells you how much leverage there is in the business model. And look, their scale really is what differentiates Meta from like a Snap or a Pinterest. Snap and Pinterest are still struggling with ad pricing, not so much for Meta because they have the best ad targeting, and that's what gets reflected in their numbers.
All right. So you mentioned the TikTok issue, and again, that legislation, the financial, the aid package $95 billion package signed into law by the president today. Part of it includes TikTok. So we spoke to Matt Schuttenhelm. He was our litigation analyst for Bloomberg Intelligence yesterday. He says this is going to court. When you talk to investors that invest in Meta, YouTube, all the competitors to TikTok, is there a feeling in the marketplace how this might play out?
Yeah, I think overall it's a net positive for both those companies, I mean Meta and Alphabet, YouTube, because even if, let's say, the court overturns or decides, you know, the app needs to make some remedies and can still operate, I think TikTok has a tough problem in terms of retaining their creators. So it's one thing, you know, yeah, you've got, you know, viewers who come to your app for content, but ultimately it's the user-generated content that's what makes TikTok unique. And if they lose those creators over to YouTube or to Instagram, then those creators aren't going to come back, even if the app can operate down the line. So in the case of internet, it's all about engagement. And the way you maintain engagement is through unique content, in this case, user-generated content. So they can't afford to lose those creators.
Definitely, yeah. They drive a lot of views in the ad space for sure.
I wouldn't know.
I mean, I'm just taking a guess. I'm not on TikTok. I'm not that young, cool person, but I've heard.
You are young and cool as opposed to John Tucker.
I mean,
we're just
low
gonna
bar
make the
there.
assumption that John Tucker's not on TikTok.
I haven't said anything.
Well, as
Why
John
are they
said
picking on
before,
me, Mandy?
John likes to fly through anonymously through this.
No,
world,
John's
so
a big
there's no way
John's
he's
a
out
big
there.
YouTube guy. He goes on and you watch the professors who teach classes and stuff like that.
Yeah,
you learn
a lot of physics courses.
See?
And you know.
Oh, that's really what YouTube was created for.
Exactly.
Anyways, we're going to keep it moving with
Let John
Mandeep
go.
here. Thank you, John, for joining us today. So Mandeep, coming back to Meta here, so we've been talking about this stock rally. It's added close to almost $400 billion in market value on this run. But this stock, compared to the peers that you were mentioning, Snap, Pinterest, Reddit, this is cheap. How does that work? Tell us about this earnings multiple and why this stock is trading at a discount.
Well, so large caps always trade at a slightly lower multiple than your small cap companies, and for good reason. You know, there's only so much runway you have as a company that already generates over $150 billion in annual revenue. So, look, I think in the case of Meta, the sentiment, yes, can be positive if they deliver on not only their core business, but also AI. So right now, everyone is focused on what additional revenue you can generate from AI. And in the case of Meta, they were losing $16 billion a year on Metaverse. Now they seem to have made that pivot where they're more focused on AI. They've released a third version of their Llama model, which is what everyone is focused on.
Myself included. Yeah. We have to ask, what is the Llama model? Please tell us.
So in the world of generative AI, it's about having your own foundational model. Think of OpenAI as GPT. What powers ChatGPT is an underlying foundational model where you have got a very large size model with billions of parameters and weights, and that's what makes it intelligent. Now, Meta has actually trained its own model using NVIDIA GPUs, and that is comparable to GPT or Google Gemini in terms of performance. So what it tells you is they're not dependent on anybody to deploy their technology, or they don't need to partner. In fact, we did a survey at BI, and Meta emerged as a contender for Gen AI-based search. So think of what ChatGPT is doing or Perplexity is doing. Meta actually is being used as a search platform now because they have rolled out Meta AI on WhatsApp and on Instagram. And over time, maybe they take share from Google search.
And that's what's called Llama?
Llama is the model.
We got to also know why it's called Llama.
That powers it.
That's cool, Silicon Valley.
That Llama model can be used for all types of use cases. Search is just one of them.
I'm clearly not an engineer. It's beyond me.
Exactly. Fortunately, Mandeep is, and so we get to chat with him. Mandeep, 30 seconds left. Metaverse, where are we on that? You mentioned that it was at a run rate loss of $16 billion.
I mean, as long as they keep growing over 20%, market is forgiving when it comes to losing $4 billion a quarter. They don't care.
And that's still the kind of...
That's still the... and we don't have any markers.
So he's not backing away from
He's
this.
not backing away, and we don't have any markers on what he's losing $4 billion on. Maybe he's subsidizing all the VR and the AR glasses that people are buying, and that could be one way you justify that.
I haven't seen, well, I don't know of one single person who's on the metaverse. I couldn't tell you a single thing about it.
No. And I think
AR glasses, I think some people, I was talking to Anne-Marie, she owns one of the AR glasses. So there's few people who...
What do you do with them?
Well, you use it to consume content or to, you know, just like convenience.
John Tucker is laughing here. I think he's amused that I also have no idea what's going on with the metaverse.
Oh, you're in the same boat as I am.
Okay.
So I'm glad.
All right. Well, just as long, I think for the stock, as long as they don't talk about it, that's good for the stock. Mandeep Singh, thank you for again explaining what's happening in the world of technology. Mandeep Singh, one of the best tech analysts on Wall Street, and he covers all the tech stuff. I've got Anurag Rana also. They're doing it from a senior perspective. We got technology team all over the globe following technology in Asia, Europe, what is in Europe, and certainly the U.S. Mandeep Singh. Looking at the markets here, S&P 500 off about 0.1%, so not a lot of movement there. The Nasdaq's up about 0.1%. So again, I think PCE data, which we're going to get on Friday, that'll be really key for this market, key for the Federal Reserve, and we'll be all over that. With our news,
GDP tomorrow, too.
Yes, GDP tomorrow, absolutely. We'll be on that. Eco Go. With our news in New York, here's Michael Barr.
Thank you very much, Paul, Molly, and John. There are dueling protests outside the Supreme Court as justices consider access to emergency abortion care. Currently, Idaho's near-total abortion ban only allows medical exceptions when the doctor believes the patient's life is at risk. But the Biden administration argues federal law, specifically the Emergency Medical Treatment and Labor Act, prevents hospitals, which accept Medicaid, from refusing to treat patients with any emergency medical condition. Martha Speaker is Director of Court and Litigation Communications at Planned Parenthood.
This is about making pregnant people have unbelievable hurdles to access care when they're experiencing an emergency, excluding people from federal protections that make sure that people get that care.
President Biden saluted Congress this morning after the Senate passed a $95 billion package that provides aid to Ukraine, Israel, and Taiwan, and it heads to the president's desk.
It's going to make the world safer, and it continues America's leadership in the world, and everyone knows it. It gives vital support to America's partners, and so they can defend themselves against threats to their sovereignty.
Part of the foreign aid package gives TikTok, Chinese parent company, an ultimatum: sell or be banned. Students are holding demonstrations in multiple cities around the country over Israel's war in Gaza. Columbia University in New York says that students have 48 hours to remove an encampment. Protesters are calling for an immediate ceasefire in Gaza and calling for universities to cut off any financial interest connected to Israel.
Our first demand is complete divestment from anything related to Israeli settler colonialism, apartheid, and genocide.
Global news 24 hours a day whenever you want it with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, stock's kind of drifting. Tesla, we'll start there after their earnings report after the close of regular trading last night. Up 11.7%. They said that they're going to accelerate production of new, more affordable vehicles. And the next of the Magnificent Seven cohort, that reports after the close of regular trading today with results from Meta. Ahead of that, Meta shares, they are down right now about 0.9%. Amy Silverman at RBC Capital Markets is going forward. Tech stocks may not all move together as a pack.
Yeah, it's interesting. You know, look, I think to some degree this question becomes more idiosyncratic and stock by stock than it has in the past. It's sort of all moved together in this right tail frenzy, right, all year long. But there is going to be, I think, a little bit more distinguishing.
Right now, the S&P 500, 5 points lower. That's down 0.1%, 5,064 in the index. The Dow Jones Industrial Average, 137 points lower. That's down 0.4%. NASDAQ Composite Index, 29 points higher. That is up 0.2%. Two-year yield, 2 basis points higher, 493. The 10-year up 5. That's at 465 right now. Also, mortgage rates hit a 5-month high. They rose to just shy of 7.25% last week. That's hurting loan demand, as you might expect. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Molly and Paul.
All right, John Tucker, thank you so much. We appreciate that. Molly Smith, she's sitting in for Alex Steele this week, who's on vacation. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. That's video. So go to youtube.com and search Bloomberg Podcast, and that's where you will find us. You know, Molly, one of the most amazing stories to me in financial services over the last decade or so has been the growth of ETFs.
Huge.
Just
can't ignore it.
Amazed at the fund flows to ETFs, and it makes a lot of sense. And unfortunately, we have people like Eric Balchunas at Bloomberg Intelligence who keeps us up to date on what's going on there. But we wanted to talk to one of the practitioners in the business. We had Jennifer Grancio joins us. She's Global Head of Distribution at TCW, little firm on the West Coast, huge firm on the West Coast.
Very big firm.
And they're into the ETF business. Jennifer, thanks for joining us here in our studio. What is the TCW ETF business? Tell us kind of how you guys are in that business.
Happy to. Great to be here. So from a TCW perspective, a lot of people think of us as, the core of the fixed income portfolio, which we are for many investors with the TCW or MetWest funds. And now we're growing the equity business as well. So a lot of that will be ETFs. And we also are going to do ETFs in the fixed income space.
When you say you do ETFs, are you the one that you're deciding what goes into each one, or tell us what your role is in this marketplace?
Yeah, for sure. So from an equity perspective at TCW, we have some great core strategies we run in mutual funds and SMAs through the engine number one acquisition, and then also we're converting a couple of legacy TCW active mutual funds. We're going to have a very impressive range of megatrend thematic products for clients. And if you think about why and what's the role and why does the world need that, there's a lot of index ETF option out there. A lot of people are very indexed in their portfolios, which has this real concentration bias now in large tech. And so we're offering the market a range of ETFs on energy and power transformation, reshoring of supply chains, artificial intelligence, that let you take some money out of the core and really go after outperformance and alpha in your equity portfolio.
So by definition, are those active ETFs?
They are very concentrated portfolios and active. And if you think about the markets, money's not free anymore.
Right.
Rates are much higher. So we think the next 10, 20 years are a great market for active managers that can outperform. So all of these ETFs on the thematic side will be active.
Yeah, so let's talk about some of those themes. I mean, you had mentioned, related to energy transition, supply chains. What are some of the ones that you guys are really paying a lot of attention to right now?
Yeah, I mean, those are two big ones, and they're not small, tactical, narrow trends. They're huge. They're going to be here for many decades. And so one of the ETFs is NETZ, N-E-T-Z, and that's about energy and power transformation. And so if you think about that, we are going to need to more than double our power and energy in the next 20 years. So think about that, more than double. And so companies that are at the forefront of how we service the need and demand and kind of monster demand we have for power, as well as companies that are more efficient, have a huge opportunity to outperform. And so that's a big theme. And now in that theme, we own companies that are better energy producers. We own Vertiv, which cools data centers. We own waste and garbage companies that are finding ways to create natural gas and energy out of landfill. So it's a very diverse portfolio and very complementary and different than what you might hold in an index fund.
When I started my equity research business way back in the day, it starts with an 8, back in the 80s, we covered railroads.
Hot topic, really.
We wrote the first research report on Consolidated Railroad, which the government, U.S. government, was privatizing via an IPO. We wrote about a 200-page report on that, owned that stock for years.
You want to give us a nice summary of that right now?
Yeah, it was a great cost-cutting thing, taking railroad crews from 5 to 2. Tripled your margins.
And the other big trend is supply chain.
That's it. So I know you've got an ETF on railroads. That's why I bring it up. Is that, again, I think about the railroads and supply chain. I guess we all got really smart about supply chains and the delicate nature of supply chains during the pandemic. How do you guys think about that?
Yeah, so this sort of reshoring of supply chains and manufacturing to America and North America is, again, it's a monster trend. It started during COVID. So if I'm Deere and I'm trying to make a tractor and my bolt is made in Asia, I couldn't get my bolt. It was really bad for business. So we're seeing that trend already having started. And then on top of that, we've now got geopolitical issues that make us more nervous about doing things like semiconductors outside of the U.S. So again, huge, very broad multi-sector trend. And what we own in SUP, or the reshoring of supply chain ETF, is all the way from railroads. So how are we going to transport things if we're manufacturing all over North America? It's fantastic for railroads, and they've been undervalued. So that's a big performance opportunity. And early in the cycle, where I think we have $3 trillion of committed projects of new manufacturing, more than we've ever had in the U.S. Early in the cycle, we invest a lot in what we call picks and shovels. So Martin Marietta, Vulcan, companies that make materials. So as we build all of these factories, and then we own a lot of semiconductor names as well, because all of these factors are going to have AI and robots, and they have much higher demand for content from a semiconductor perspective.
Well, I wanted to ask you about the AI theme next. That's certainly got to be a big one of these thematic trends that you're focusing on. So how are you positioning around AI right now?
Yeah, so in the case of AI, it's in those two portfolios to some extent. And then we have a mutual fund at TCW, which we're converting to an ETF. So watch the space for that. And
what's the advantage of that? Is it just like, I guess because ETFs tend to be a bit cheaper for like a more consumer-friendly product? Is that the idea?
Yeah, in this case, it's an active fund. So it's not a sort of a cheap index fund. But the argument, and what I think you see a lot of active managers converting where it makes sense, is that the market likes ETFs. It likes the ability to click through and see the underlying holdings on the website. It likes the tax advantages of an ETF. And so in the case of these megatrends, we see the market in general buying ETFs, not funds. So we have a very long track record on the TCW Artificial Intelligence Fund, and we're converting it to an ETF. And a little bit like what we talked about in the case of Net Zero and SUP, the AI fund has an ability to invest in different things as we move through time. So it's not all big tech. It's also systems and enablers and hardware that is going to grow aggressively as all these companies are doing more in AI.
So it's safe to say you guys at TCW are big believers in AI?
We are.
Okay, because I guess my skeptical sell-side analyst nature is like, where did this come from? Is this just big data from 3 or 4 years ago? Is this just big tech is growing as a percentage of GDP of 20 years ago? What's new about AI?
I think we're in the next evolution of training systems, asking systems questions with all these models and natural language models, asking questions in a way that we just get faster and faster and better output. And so that's good for everyone. And so it'll start slowly, but as more people learn to get that leverage, I think you're going to see a boom.
Yep, and it's we hear every company in the S&P 500 on their conference calls
without it.
on their conference calls talking about AI and how it's going to be critical to their business. Jennifer Grancio, thanks so much for joining us. Jennifer is the global head of distribution for TCW. We appreciate her coming into our Bloomberg Interactive Broker studio in New York City. Otherwise, we could go out to LA. They have very nice offices out there.
I mean,
we're
going to go to LA. We're going to go to Princeton with this show. We've got to. I hope we had a good travel budget.
We're going to take this on the road. Yeah, I know a guy.
All right.
All right, very good. So S&P 500 off 0.3%. The NASDAQ is off about 8 basis points here, off 12 points. Not much happening on the index front. We got a lot of eco data tomorrow and Friday. This is Bloomberg. Good morning.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the Bloomberg Newsroom. We'll look at some of the company stories we're following. TikTok says that legislation passed by Congress that would force its Chinese parent company to sell its stake or face a total ban of the app in the U.S. is unconstitutional. The company says it's going to challenge it in court. TikTok is saying in a post on X, "We believe the facts and the law are clearly on our side, and we ultimately will prevail." TikTok's executives have been largely quiet since Congress decided to fast-track that legislation against the app by tying it to the package of bills that included foreign aid for Ukraine and Israel. A new feature designed to blur naked photos sent to teens and private Instagram messages that's coming under attack even before it's rolled out. This is a feature which Meta Platforms plans to begin testing next month. It's intended to deter online sextortion crimes, which have actually led to more than 24 teen suicides over the past 2 years. But users can actually override it. One tap on the blurred image, and then everything is revealed. Netflix, they are betting big on Latin America to try and expand viewership. For example, in the middle of a vast swath of farmland, a windy 6-hour drive from Bogota, Colombia, lies the heart of the biggest Netflix production ever attempted in Latin America. It's spread over 21 square miles of sets, tents, and stages, and includes a breathtaking replica of the fictional town of Macondo, the beloved setting of 100 Years of Solitude. That's just one of several Netflix local language productions that are taking place in Latin America. And that is a look at your company news. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, let's get a quick data check here. The market's rolling over a little bit. The S&P is off about 0.3%. The Dow's off 160 points. That's 0.4%. And NASDAQ's off 0.1%. Yields pushing a little bit higher here. 10-year Treasury's up about 5 basis points, 4.65% on your 10-year. The 2 years at 4.93%. We'll keep an eye on all of the market moves. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Molly, and John. President Biden has signed a $95 billion foreign aid bill that will supply aid to Ukraine, Israel, and nations in the Indo-Pacific. The bill also supplies more humanitarian assistance to the people in Gaza caught in the crosshairs of Israel's war with Hamas. The president at the White House today thanked the lawmakers who passed the bill, despite major objections from some House Republicans. The president also said the bill is a boon to the U.S. economy.
We're sending Ukraine equipment from our own stockpiles. Then we'll replenish those stockpiles with new products made by American companies here in America. Patriot missiles made in Arizona, Javelins made in Alabama, artillery shells made in Ohio, Pennsylvania, and Texas.
The Defense Department has already approved $1 billion of military aid for Ukraine today. Supreme Court justices are raising questions about whether state bans on abortion during medical emergencies conflict with federal health care law after the sweeping ruling overturning Roe v. Wade. The case being heard right now will determine when doctors can provide abortions during medical emergencies in states with bans enacted after the Roe v. Wade ruling. It comes from Idaho, which is among 14 states that ban abortion at all stages of pregnancy with limited exceptions. The Transportation Department is rolling out a new rule to order airlines to refund customers whose flights were either canceled or delayed significantly. Transportation Secretary Pete Buttigieg says some have been resistant to complying, but he's confident the new rules will strengthen the airlines by rebuilding public trust.
What we've seen so far is, as we have been tougher with airlines, airlines have leaned into responding to that, sometimes even claimed some credit for the benefits that we're making them provide consumers, which, you know, as long as the consumers get that benefit, they can say whatever they like.
The rule won't be fully enforced for another 6 months. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Molly, and John.
All right, Mr. Barr, thank you very much. Michael Barr with that World and National News. We've all seen the campus protests at universities such as Columbia, NYU, Yale, MIT. Well, one university is, I think, trying to capitalize on some of that unrest, it seems like.
Yeah, this was really interesting that Brandeis University is extending their deadline to transfer to the school. And this is all trying to make a pitch to Jewish students concerned about their safety with the protests over the war in Gaza. So this is now Brandeis has long been a historically Jewish school. A lot of Jewish students go there. So it seems like they're extending the transfer deadline to May 31st. Will let students know by July. And it sounds like that could be for a school year that starts in August. So could really push us out quite a bit, closer to when that school year begins.
Yeah, growing up, I did not know much about Brandeis University, but I only got worked on Wall Street. I'd meet so many graduates, and every single one, almost without exception, I'd walk away saying, holy cow, they're smart. I kind of said, what are they doing at Brandeis? Because they're a really good school. I mean, everybody I've met seemed to be just super smart and really with it. So I've since learned it's such a great school. But and again, historically, a popular destination for Jewish students. So maybe taking this as an opportunity to.
Yeah. I had a lot of Jewish friends there who went to college there. I went to Syracuse, also a destination for a lot of Jewish students. And, Ara Hillel, I just got to give a shout out. That's our, Jewish center on campus. They've, I think, done a really great job of making students feel safe and just having a really nice environment for free speech for everybody. And it's been really good to see that a lot of people are still feeling confident back in campus up there. So nice to see that when, you're surrounded by a lot of scary headlines here in the New York area.
Yeah, absolutely. So we'll keep an eye on that. We have Balance of Power with Joe Matthew. It's from Washington, D.C. He breaks it all down, has great guests, and we'll probably talking about that aid package that was just passed. That's coming up right now.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
The weapons are on the way. Welcome to the fastest show in politics as President Biden signs the bill, the foreign aid package for Ukraine, Israel, and Taiwan, pledging the first shipment to Ukraine within hours today. We'll get an update from Jonathan Tamari at Bloomberg Government in just a moment. Secretary of State Antony Blinken on his way to China now, carrying the threat of sanctions over its dealings with Russia. We're going to get into this with Max Baucus, the former U.S. ambassador to China, former senator. Be straight ahead here on Balance of Power. And the latest Bloomberg News swing state poll shows Joe Biden losing ground again to Donald Trump. We'll get into it with our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are back with us today. And we start, as always, on Wall Street. Let's get up to date on trading first with John Tucker in New York. Hey, John.
All right, Joe, the major stock averages, they are lower. 7 of the 11 major industry groups in the S&P 500 down. Industrials, communication services, right now, they are the biggest drags in the index. Consumer staples category, that's the best performer. Teledyne Technologies, the worst performing stock in the S&P 500, down 12%. Best performing stock in the S&P 500, Hasbro, up almost 12%. The maker of G.I. Joe with the Kung Fu grip, reporting first quarter earnings that beat estimates in the S&P 500 as the earnings roll in. Marvin Lowe at State Street says most of the Magnificent Seven stocks are kind of like fortresses.
They've got these defendable moats, and they've had these defendable moats for an extended period of time, and they're just getting stronger. So yes, these cash flows, the ability to really financial engineer their balance sheets in a way that is a competitive advantage is something that they retain.
Tesla remains up over 10% after their earnings, after the close. Next to the Magnificent Seven report earnings, that's going to be Meta Platforms. Those shares right now up. Meta is actually down close to 2%. Overall, the S&P 500 17 points lower. We're at 5,053 on the index. The Dow Jones Industrial Average is down 135 points. NASDAQ Composite Index is 30 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues with Joe Matthew.
Thank you so much, John Tucker in New York. Welcome to the Wednesday edition of Balance of Power. It's done. We just heard from the president a short time ago. You likely heard it on Bloomberg Radio if you've been spending some time with us. The president signing the bill. This was a 7-month-long affair. Ukraine, Israel, Taiwan, specifically the money over Ukraine, was such a concerted debate, something the president spent so much time lobbying for. He actually signed all of this before he spoke to reporters earlier at the White House, making it clear that the package is already on the way. Here's the president a short time ago.
I'm making sure the shipments start right away. In the next few hours, literally a few hours, we're going to begin sending in equipment to Ukraine for air defense munitions, for artillery, for rocket systems, and armored vehicles. You know, this package is literally an investment, not only in Ukraine's security, but in Europe's security, in our own security. We're sending Ukraine equipment from our own stockpiles.
From our own stockpiles. That's why this $1 billion in hardware was already set to go when the bill was passed. The president signed it, get it out there. We've even heard from some military analysts on this program suggesting that there are staging areas closer to Ukraine where the weapons and material were being held. The president there speaking from the White House with his U.S. and Ukrainian flag pin on his lapel. It's all about the numbers, though. If we can back up just a moment, what we saw in the Senate last night is certainly newsworthy. 79 to 18, the vote. That's the final vote. More voting for this than did in February, and specifically more Republicans. 31 voted for this bill compared to 22 who voted for the version back in February. As you might remember, that was the one without TikTok. This was supposed to be a heavier lift. Doesn't seem so much like it. Only 15 Republicans voted against it. Let's get into it right now with Jonathan Tamari, who covers Congress for us at Bloomberg Government. This day the president signs the bill, Jonathan, I don't know what you would have done with the last 7 months of your life otherwise, but this was long in coming, and I wonder how you would frame this final vote in the Senate.
Well, I'd say this is one victory and maybe one last victory, but a victory for some of the kind of institutionalists, the internationalists in the Senate, and certainly within the Republican Party, a victory for Republicans who are kind of more molded by the Reagan era, molded by the Cold War. The party's really been shifting away from them. It's continuing to shift away from them. But this is one last fight that they won, really driven by Mitch McConnell, embodied by Mitch McConnell, who considered himself a Reagan Republican, who came up and was a major figure, or built his career during the Cold War opposing Russia. And when you look at the vote, those Republicans who voted against it, very closely aligned with Donald Trump. Many of them are very recently elected to the Senate, so a newer generation of Republicans are opposing this kind of thing. But it was one last time, or possibly one last time, that older generation of Republicans were able to prevail on this kind of issue.
Yeah, there's one exception to that, of course, Jonathan. John Barrasso, not only a veteran, but the Senate Republican Conference Chair who wants Mitch McConnell's job. What do you make of that no vote?
Well, Barrasso is probably the most Trump-aligned member of the Republican leadership. And so I think that's a bit of that going on there. He is now, I think, seeking the #2 job in that conference. And so he doesn't have the same necessary political pressures as some of the others. Maybe has a little more freedom, because I think he's running actually unopposed for that position at this point. So definitely an interesting vote. He broke with other Republican leaders on it. But I think that's in keeping with him, kind of, even though he's of that kind of older era of Republicanism, he's been more aligned with Trump more recently.
The Democrats joining Republicans in opposing this bill, one not a big surprise, Bernie Sanders, but Jeff Merkley as well, Peter Welch, also from Vermont like Bernie Sanders. This is all about Israel funding, right? They wanted to pull back on the weapons that we were sending. Not a surprise there?
Not a surprise. I mean, I think it's one additional vote compared to when they voted in February. I think Welch and Sanders were both no's back in February. So you have to pick up an additional Democrat. They do want to impose more sanctions, or more restrictions on the way that those weapons can be used. But I think you're seeing that even though that idea has spread to a significant part of the Democratic base, it's not reaching up into kind of the institutional establishment part of the party yet. There was a very small number of defections in the House from Democrats, and as we see last night, a very small number of defections in the Senate as well. So a major issue among maybe base voters and younger voters, but not so much the folks who are in office quite at this point.
I don't know to what extent any of this is resonating on the campaign trail at this moment. Ukraine has its own influence, but there was a primary yesterday, Jonathan, and I know you're covering this as well, with Pennsylvania always being close to your heart. As far as the top of the ticket here, Nikki Haley, a name that we haven't heard in quite some time, did awfully well. Won more than 155,000 votes, 17%. That's a protest vote worth noting. What's happening in Pennsylvania?
Yeah, absolutely. I mean, when you look at Pennsylvania, the last election, it was decided by 80,000 votes. And so that's, half of the mark of what Nikki Haley got. And these are people, there was no real campaign. So these are people who didn't have a lot of reason to vote and chose to come out and show their kind of protest against Donald Trump. And this is a closed primary. So these are only registered Republicans who are voting. So today that leaves us with the question of, are these people who are registered Republican but have been voting Democratic for some time now? Or are these Republicans who are breaking away from Trump after his last election? And even if it's a small number that are Republicans breaking away from Trump, it could be meaningful. State was decided, as I said, by 80,000 votes last election, by 40,000 votes the election before that. So a tiny margin of people could make a really big difference. And we've seen Trump really lose ground in the Philadelphia suburbs, lose Republicans who are kind of Bush, Romney, traditional Republicans. And when you're looking for every little percentage point, that's a warning sign for the former president.
Glad you could join us, Jonathan. It's great to see you. Jonathan Tamari, Bloomberg Government. Look for his reporting on the terminal and online. We should note that the president himself was facing a bit of a protest vote. I guess we can call it that in Pennsylvania. Dean Phillips, no longer in the race, got 7%. We'll have more on the primary results and the results of the Bloomberg swing state poll coming up a little bit later on this hour as we continue our focus on the foreign aid package that the President of the United States just signed. This, of course, was not only Ukraine and Israel, it was also Taiwan. The Indo-Pac component of this package got much less media coverage, much less attention, probably because it was less controversial. And it's something that we want to discuss with Max Baucus, the former senator and former U.S. ambassador to China, is with us right now. Mr. Ambassador, it's great to see you. Welcome back to Bloomberg. I'd like to just start more broadly here with your foreign policy experience. The president acknowledged the 7-month wait, the painful debate that preceded the passage of this bill and the president's signature. What message did we just send to the world by waiting that long?
Well, frankly, the good news is we're sending a message to the world that we can govern. Sure, it took a little while, but we got it done. Could have gone the other way. That package could have collapsed for one reason or another. It did not collapse. It passed. It passed with a very large margin, the bipartisan margin. And that should give some comfort to Americans. We can govern, at least on foreign policy matters, and certainly a very strong message to Europe on Ukraine. It's a very strong message worldwide, and also to China. You know, China sometimes thinks that the United States is in decline. This shows no, we're not in decline. We know what we're doing. We're a little slow getting there, but we do get there.
And we're standing by our allies in Taiwan. This is a delicate situation, Ambassador. What does Beijing think about this package we just passed?
When I was serving in Beijing, the Chinese drilled into me that Taiwan is a core issue. It's non-negotiable. Taiwan belongs to China. It is totally non-negotiable to the Chinese. And that's the message that the Chinese gave to, I think, General Austin just a short while ago. So we have to keep that in mind, and also remember the United States does adhere to a one-China policy. The one-China policy says that there is one China. It's mainland China is Taiwan. We're not sure how that's going to happen. We are opposed to a military intervention. The United States is. We're also opposed to independence of Taiwan. It's very dicey, and frankly, I think that both sides know where the tripwire is. Both sides, however, are getting close to it. And I think we run a danger when we send a lot more arms to Taiwan. Most people in Taiwan don't like the status quo. They don't want change. They like it the way it is. They don't want independence. They don't want to be controlled by China. They kind of like the way it is. And I think the too few in America understand that really that is the view of the Taiwanese people. And I also don't think China is going to military invade Taiwan, not in the foreseeable future. Why? Because Taiwan does not want war generally. U.S. doesn't want war generally. And President Xi cares about one thing only, that's political security. He sees what happened in Ukraine. He sees that Russia made a big mistake. They embarrassed themselves. Their generals were wrong. He's concerned about his PLA generals. Maybe his generals will not do for him what he would like them to do. He is very, very risk adverse when it comes to militarily invading Taiwan.
Well, I'll tell you, Anthony Blinken is on his way, as you know, Ambassador, and Bloomberg is reporting that the U.S. is drafting sanctions now, potentially sanctions against China for doing business with Russia. He's set to deliver that message in Beijing. Commercial support, to be clear, of Russia's military production. How's that message going to go over?
Well, first, it's good that the Secretary is going to China. I think that more. He should go over more often if you can. Other cabinet secretaries should go over. We just need a lot more communication between U.S. and China. When I was serving as ambassador, secretaries came over very frequently. President Obama came over frequently. Now, under the current regime, there's less. Under Trump, very few secretaries went over. So it's good that Secretary Blinken's going. He's facing a whole raft of problems and going over. That is, first of all, there's a message that U.S. may sanction China for commercial aid, not military aid, but commercial aid to Russia. He's also going to probably address overcapacity, the problem that Secretary Yellen faced. And in addition to that, he's probably going to raise the problem with the Chinese trying to prevent aid to that sunken ship just off the Philippines. He's going to have a hard time. The Chinese are going to give him a hard time.
Yeah. Well, they might want to give him a hard time about TikTok as well, because every time we talk about working with China, we want to give them a hard time on something like this. Well, what do you make of this bill? I know that we're going to get into a big court fight here, Ambassador, but politically, what does this divest or ban order mean for our relationship?
Well, clearly it's not good. And as you're implying, this is yet to play out. First, there's a question whether there could be a sale. I think it's going to be very difficult for a sale to occur, because any purchaser looking at buying TikTok from ByteDance is going to see that the Chinese government does not want to sell the algorithm, which means the value of TikTok is very, very low. It's not going to work. But second, there's all the problems of banning the app. People will get around it. Countries go to various countries. It's just not an easy thing to do. And as you're saying, it's all going to be resolved in the courts. Basically, I think that it's a huge problem. It raises another issue, frankly, and that is the partisan politics of the United States against China. And it's felt well understood. Clearly, we want to protect our national security first. That's first and foremost over everything. The trouble is national security is being used somewhat as an umbrella to cover lots of other interests, not just national security, but commercial interests. And I'd like to know where the beef is. Often the United States government says, well, China's might do this, might do that. Well, it might, but where's the evidence? Where's the evidence? Where's the beef? One problem I have is to a large degree, all of the U.S. governments have to say China. Doesn't have to provide any evidence, just China. And that's enough to cause people all upset and say, oh, no, we got to do something against China. I raise all this because we're going in the wrong direction. That is a greater divide between the two countries. Both countries are rearming more and more, and that's not a good direction. We should be figuring out ways to go in the other direction. Neither country is doing a very good job at all in trying to figure out how we work better together.
Ambassador, I'm out of time. I don't want to set you up to cut you off here, but in our remaining 30 seconds, should Speaker Mike Johnson visit Taiwan now that this has passed?
No, he should not. Speaker Pelosi should not have gone over. Johnson should not go over. Let's just kind of let things cool off a little bit. There are ways to show our support for Taiwan, but don't rub Speaker Johnson. Don't rub the nose of the Chinese. Speaker Johnson should not go over.
Yeah. It's great to have you back, sir. Come see us again soon. The former ambassador to China, the former U.S. Senator. Max Baucus getting us rolling here on Balance of Power. It's the Wednesday edition. The bill has been signed. And we've got a lot more with our panel on that straight ahead. Also, results from our new poll. The monthly Bloomberg Swing State poll brings less than encouraging news for Joe Biden. We'll dig into it next with Wendy Benjaminson. Live from Washington, this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, they are lower right now, ending a two-day advance. Well, the next of the so-called Magnificent Seven mega-cap stocks, they report earnings after the close, and that would be Meta Platforms. Shares of Meta right now in advance of that, they're down 1.5%. Shares of Tesla, they are up close to 10%. They reported their earnings after the close yesterday. The results, nothing great. Instead, investors latched onto the news of cheaper vehicles are going to be rolled out. And then you have Texas Instruments. Those shares also, they are up right now, up just about 6.4% after the earnings struck an optimistic tone. Overall, the S&P 500 down 16 points right now. That's down 0.3%. We're at 5,053. And the Dow Jones Industrial Average 122 points lower, but it's down 0.3%. The Nasdaq Composite Index 41 points lower, and that's down 0.25%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Balance of Power continues right now with Joe Matthew.
John Tucker, thank you. Welcome to Balance of Power, the Wednesday edition, live from Washington. So much for the State of the Union bounce. We went from talking about how there was no real bounce to now how whatever bounce there was appears to be over. In the latest Bloomberg swing state poll, it's not bringing a lot of smiles, I'm assuming, to the Biden campaign as we look at the 7 states that Bloomberg is focused on that will likely choose the next president of the United States. This has been going on for, 6 months now or something, and I'm glad to say Wendy Benjaminson is back with us here in Washington to talk about it. You spend a lot of time, people should know, crafting this poll. When I overhear you talking in the newsroom, we're in the field right now, I know something's popping, and it was, I believe, the second day in the field. I'm just going to jump ahead to Chapter 7 here.
Yeah.
When the Arizona Supreme Court ruling on abortion came down.
That's right.
And we're now seeing abortion bubble up again as a major issue, but it's not helping Joe Biden overall. How do we unpack all this?
You're right. It's not helping Joe Biden overall. As you said, the latest monthly poll shows that Trump is leading now in 6 of the 7 states. Michigan, Biden has a tiny little 2-point lead, which is statistically somewhat insignificant. I would say they were tied there. But abortion rights could still be a bright spot for Biden in some key states. We saw in Arizona that, which, as you said, we were in the field the week of August 8th to 15th. On August 9th, the Supreme Court in Arizona said that an 1864 law, which bans almost all abortions, except I think unless the woman is dying, could be enforced. And the abortion rights supporters went nuts. And our poll showed a 10-point jump among Democrats and independents who listed abortion as a very important issue. It stayed pretty flat among Republicans. So that suggests that even if voters, and I'm sorry, there was 4 points across all the 7 states, 10 points in Arizona. So that suggests that supporters who might even not really be enthused about voting for Joe Biden, don't really want to vote for Trump, so they might stay home, they might get up and go vote because there's a ballot initiative in Arizona that would codify abortion rights, and that could really inspire people to get out and vote.
That's a big deal in a state like Arizona.
Exactly, which Biden barely won in 2020, but he did win it, and that he needs that and another group of these swing states to win re-election.
Sure. Getting back to Chapter 1 here, the headline number is 6 out of 7.
6 out of 7.
And that's a big problem. If the election were held today, based on this research, Joe Biden would lose.
Joe Biden would lose. These are the states, a lot of the polls out there are national, and they show Biden either slightly ahead or tied with Trump. But we all know how California and New York are going to vote. We all know how Texas and Florida are going to vote. So we picked the 7 states that swing back and forth between Democrat and Republican, and those are showing and those are the ones either of them needs to win most of to win, and those are showing Trump still edging up across the states, a pretty comfortable lead in some of these places.
The economy bubbles higher. We were talking about the border as issue number 1, but he's not going to be able to get away from the economy.
He is not.
In this campaign. He's predicting interest rate cuts at this point, Wendy. I guess he could really use one. What are we learning here?
He could really use one, because what the poll also found was a deep and deeply rooted pessimism among voters for the state of the economy. Not only do they think it's bad now, they think it's going to get worse before the end of the year, which is when they're going to vote. So the group of 18 to 34-year-old voters, they and middle-aged voters, 45 to 64, they were the largest group, where more than half say the economy is going to get worse by the end of the year, including the job market, where we're at pretty much full employment, looking at interest rates, looking at inflation, and their overall sense of the economy. There was also a large number of people who answered the question, trying to compare how they feel they're doing economically to how the economy is doing. A large number, a plurality, said, I'm not doing well and neither is the economy. And in my experience, that means people will vote out the guy in office.
Yes, right.
They also assign blame for the economy to the generic president. So, that's all not good news for Biden.
Not at all. When it comes to issues like the economy and abortion, you can kind of tell how this is going to play for Joe Biden based on the research that we've already seen. What surprised you this time?
What surprised me was really just that he cannot seem to message his way out of this. I mean, the economic indicators are strong. We who follow the terminal know that the economy is recovering and it's all going to work. And Biden keeps telling people that, and they're just not believing him. And so it's Trump can be facing 88 felony charges, is sitting in a defendant's chair right now, and will be when our next poll goes out, and yet he's still winning.
It's incredible. For undecided voters, the share who expect improvement on economic factors in the single digits.
Right.
There's something about a lack of hope, a lack of optimism.
One might even use the word malaise.
Oh, my God. Joe Biden will not use that term, I'm guessing. But as opposed to feeling bad about current conditions, it's expecting things either to get worse or stay the same way.
That's what really struck us, was that not only do they feel bad about things now, they have no faith it's going to get better. And if you don't have faith that things are going to get better, you're looking at the guy sitting in the Oval Office. And even if the alternative is Donald Trump, you're saying, I might want change.
So we're talking about a lot of issues that tie into this on this program on a regular basis. Geopolitics tends not to really be included here. People are not going to be deciding who to vote for based on money for Ukraine, for instance, or Israel might be a factor for progressives. But by the time we get to November, you always hear the refrain. People vote pocketbook, they vote on domestic issues. Did the president help himself out today at all by signing that bill?
I think he did. I mean, our poll shows maybe a little bit, but you're right. The number of people who cite Israel, the Israel-Hamas war, or Ukraine as their most important issue is in the single digits. Now, that single-digit number of voters can make a difference in a close state like Michigan, where you have a concentration of Arab American voters, of voters of color who sympathize with the Palestinian cause. And that then could make a difference. We did discover that a large number of people support aid for Ukraine, 57% across the swing states. Aid for Israel has dropped 11 points. Support for aid to Israel has dropped 11 points since the start of the Israel-Hamas war. It's still a majority, from 62 to 51%. But that's a big drop in a few months. And that shows that the pictures we're seeing of, the rubble in Gaza and the suffering Palestinians and the protests is having an impact.
Well, and you know why the White House is so concerned about this, and the campaign for that matter. Wendy, there was a couple of months ago in this poll that indicated, and I'm kind of wondering if this is still something we look at, some optimism about one's local economy. And the analysis was, hey, that's the beginning of a turn, and then people might start feeling that way about the economy nationally. We haven't seen that happen, have we?
No, it shifted back. They were feeling that the national economy was terrible, that their state was a little better and their town was a little better than that. And that always suggested to us that perhaps they were watching cable news and thinking, the economy's in the tank and all of that. But now those numbers for your state and your city/town are moving up as well. People are feeling more pessimistic about the economy locally. And that's even higher among women voters, because women still tend to do the bulk of the grocery shopping, and they go to the grocery store and see what's going on. But can Biden win on the coattails of abortion rights? That'll be the balance.
Becoming the big question here,
It
and
really
that's a pretty thin strategy if that's where
true.
we're going.
There's a lot of states that have abortion rights referenda on the ballot, and they're key states, and some of them are red states. And so if they're not winner take all in the Electoral College, Biden could eke out something there. Maybe.
What do you think of Joe Biden making a run for Florida yesterday?
Yeah.
Is that do you laugh at that, or are we actually talking about Florida being in play?
I think he's trying to help the abortion rights referendum down there, probably trying to pick off a few voters, but I think honestly it was to needle Donald Trump, who was stuck in a courtroom in Manhattan.
Right? Yeah. He'll just be gallivanting, I guess, for the duration of this trial to reinforce the split screen.
To every state where Trump has a golf course, there will be Joe Biden.
Well, as long as it's funny too, Donald Trump, we've talked about this before, keeps saying, hey, in any other world, I'd be in North Carolina today, or the fact is he wasn't traveling that much. He probably would not have been in any of those places. He'd be in Florida.
He probably would be. He's been trying to hold rallies. But today was his day off from being in court, and he is not campaigning.
We're not traveling anywhere.
So, he's not traveling.
Just checking. Wendy Benjaminson, great work on this poll. This has really become, I saw pickups all over the media this morning, a really important part of the dialogue in this campaign. We salute you for it. And great to have your analysis with us here on Balance of Power. Our weekly conversation with Wendy Benjaminson in Washington, the Wednesday edition of Balance of Power. We'll assemble the panel next for their take after we get up to date on world and national news. Let's do that right now with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. President Biden says he signed that $95 billion national security package into law and said his assistance to Ukraine can begin moving within hours.
I'm making sure the shipments start right away. In the next few hours, literally a few hours, we're going to begin sending in equipment to Ukraine for air defense munitions, for artillery, for rocket systems, and armored vehicles.
Biden's signature clears the way for the U.S. to quickly resume arms shipments for Kyiv, whose efforts to repel Russia's invasion have faltered. The U.S. Supreme Court today appears divided over just how far states can go in prohibiting abortion. Emily Martin is the chief program officer at the National Women's Law Center and says the patchwork of laws around the U.S. has led to limited or no health care options for many women.
It's caused a public health crisis. The legal uncertainty that providers are facing in states like Idaho is leading OBGYNs to flee states with abortion bans. It's making any sort of reproductive health care harder to access in those states.
The justices are hearing arguments in the Idaho case to decide whether the Biden administration can invoke a federal hospital law to blunt the impact in states with the strictest abortion bans. Swing state voters simply not convinced that the economy is improving under President Biden. In the Bloomberg News Morning Consult poll, a majority of poll respondents see the economy worsening by the end of the year. And doctors have transplanted a pig kidney into a New Jersey woman who was near death, too sick to qualify for a traditional implant. The NYU team says she is recovering well. She's only the second patient ever to receive a pig kidney. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major averages are declining. We've reversed the earlier gains that we saw this morning. Industrial stocks, they're under pressure. And in fact, that's the worst performing industry group in the S&P 500 right now. And that's home to Old Dominion Freight Line. Those shares down 10% after their earnings report disappointed. Meta Platforms is the next of the so-called Magnificent Seven mega cap tech stocks to report. That comes after the close of regular trading today. And ahead of that, shares are down 1.4%. Kate Moore over at BlackRock says a critical part of this earnings season is going to be the tone set by management during the earnings calls.
And I think there's been a lot of good news priced into a lot of the big tech companies, but this is a chance to really kind of show me what does the rest of 2024 look like? How are we thinking about AI spending? What does customer demand look like? And then we can go from there.
The most actively traded right now, shares of Tesla after promising lower priced vehicles during its earnings report yesterday. Those shares are up just about 9.3%. Overall, the S&P 500 20 points lower. That's down 0.4%. We're at 5,050 on the index. The Dow Jones Industrial Average 159 points lower, and right now the Nasdaq Composite Index is 48 points lower. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Balance of Power continues with Joe Matthew.
John Tucker, thank you. We'll check back with John a little bit later on this hour, get a sense of how the markets are moving today. Welcome to the Wednesday edition of Balance of Power. This day after the primary, we're going to get into our new polling results that we were discussing earlier with Rick and Jeannie, but I'm really curious about this protest vote that continues to emerge in a race that is sad. This is the general election. People are still voting for Nikki Haley in Pennsylvania. It's not like it was an early voting matter of confusion, you know, the way we saw in some other states here. Rick Davis and Jeannie Shanzano, of course, Bloomberg Politics contributors, and it's just great to have both of you with us. Rick, what does it tell you in Pennsylvania when 155,000 Republicans vote for Nikki Haley on a night like last night? She got 17% of the vote. This is going to dog Donald Trump for the rest of the campaign?
Yeah, it might. There's even a new name for it. They're calling it zombie voting. I think that's kind of cute. Love zombie everything. And so, yeah, zombie votes been around for a long time. This one's particularly healthy in an important state like Pennsylvania. You wake up and you say, wow, that's a lot of voters who chose not to support, a lot of GOP voters who chose not to support Donald Trump. In the end, there's rarely any, I would say, correlation between primary protest votes and the general election. All those votes will come home. They're not going to vote for Joe Biden, or they may stay at home. And I'd say that's the one biggest thing that's happening in polling right now. Every pollster I've talked to can't figure out, you know, what are the polls telling them for turnout? Last cycle, 2020, we had historically the highest votes in 100 years. Now, pollsters are telling us there may be a historically low vote in the last 50 years. So, I mean, that's a pretty big swing in one cycle. And so I think that this is a foretelling, potentially, of that low turnout.
And I don't want to, you know, frame this incorrectly here, Jeannie. Donald Trump and Joe Biden won convincingly in their primary contests here. But when you're looking around the edges, it is curious. Dean Phillips, when it comes to Democrats, Dean Phillips got 7% of the vote. I think that's better than he did in New Hampshire, isn't it, Jeannie? How do you read that?
Yeah, you know, I don't think there's any surprise. People are not happy. They're not happy about their choices. You know, it is important, the fact that they're getting out and voting for somebody who has already left the race, obviously, in the case of Dean Phillips and Nikki Haley. But I think the reality is it probably won't translate that much into the general. I do think the challenge for both of these candidates is because a state like Pennsylvania, the margin was so slim the last two cycles that any drop off, you know, not necessarily if people looking for a third choice even, but just staying home can be a problem. And I think for Donald Trump, you see that problem in the suburbs. And we're seeing it last night, but I think it's a little too early to know whether we're going to see that in November at this point.
Let's take a look at the poll that's out today as we try to get a sense of what it is we're talking about here. This is Bloomberg Morning Consult Swing State Poll. It's been just about a monthly turn here, and we just got the latest one today. Joe Biden is losing to Donald Trump, Rick Davis, in 6 of the 7 swing states that we are looking at. If there was a post-State of the Union bounce, it appears to be gone. And even the silver lining, if I can call it that, the bump he appears to be getting on the issue of abortion is just not enough to offset concerns about every other issue, beginning with the economy. Rick, how are you looking at this month's numbers?
You know, look, I think it's a mixed bag. I actually don't think it's that particularly bad for Biden. He had a better number in March in our swing state poll. I think there was probably a bit of a bump going on post State of the Union, and we could say that that bump is gone. But look, 3 of these states are virtually tied, you know, within margin of error, and didn't move at all from one month to the other in this current survey. You know, and Biden did flip, in one state, you know, to the advantage. So, you know, but we also need to remember too, in what we're seeing in polling right now, is this issue of turnout. Our poll, the Bloomberg poll, does not put a screen on likely voters. So we take registered voters and that's it, right? You know, so if you're a registered voter, you get on the phone with us, we talk to you about this poll, we're going to get your views. If you then screen it down and say, you know, pick a number 1 through 10 as to, you know, whether or not you're actually going to turn out, you know, other polling, when they do that screen, only takes the 10s, right? Only people who say they're absolutely certain to vote. And that's what we're finding is a significantly smaller margin than what we've seen in the past. And those voters tend to be significantly more pro-Biden than they are pro-Trump. And in fact, the lesser you get for turnout, the more pro-Trump it is. So Trump's problem is that when you open this screen, it includes people who are probably not going to show up, and they are significantly more, by almost 20% for Trump. So I think that what we're seeing is a race that is just being fought out tooth and nail on the ground. And I do think the disturbing thing about this poll is the lack of optimism around the economy. That's the battle for Biden. Don't look at the top line ballot number. Look at what is motivating people, and people are not happy with the economy.
I'm going to ask you both about that because you're absolutely right. To see single digits, think the economy is going to improve. We have a big problem here. But Jeannie, when you look at the 7 states, to be more specific, Joe Biden is ahead in only Michigan. He's up 2 points there, reinforcing the idea that he would lose if the election were held today. He's down 7 in Arizona, or maybe I should say Trump is up 7. The issue of abortion bubbles to the top in this state. As we reported earlier, we were in the field when the Arizona Supreme Court made its ruling on that Civil War era abortion law. Do you see numbers like that changing on a single issue, Jeannie? Because that might be all Joe Biden has right now.
Yeah, I do. And we've got some evidence of that. You know, one of the most recent polls, in addition to the Bloomberg Morning Consult, was the NBC poll. And they showed a fairly robust number of voters who think abortion is an issue with which it could change their opinion as to who they're going to vote for in Biden's direction. And so there is some evidence. It's obviously still early. But I just want to quibble a little bit with the top line, if I may. It is 3 states within the margin of error. So I would just say, you know, not as good of a poll as last month for Biden, but it is not 6 out of 7 that Trump is leading in. It's 4 out of 7 because there are 3 within the margin. And for pollsters like me, that margin should be important. But I think the biggest challenge here for Biden is the economy, as you were just talking about. That is critical. And I think the lesson to the Biden team is when people do not feel like their family's economic situation is improving, they do not care about macro numbers like inflation and unemployment month to month. And unless they can get their heads around that and figure out how to address that, they're going to continue to talk about good numbers. And that frustrates people even more than they're already frustrated. And so that remains, in my mind, the biggest problem we're seeing in this poll.
Well, and Jeannie illustrating just how close things are, you're absolutely right about that. And there's a margin. It's not a big margin here. It's 1% on this poll. Jeannie, only 23% of respondents say the employment rate will improve. For undecided voters, as I mentioned, single digits expect improvement on economic factors. Single digits. Joe Biden loves to talk about his optimism for America. We put our heads together, we can accomplish anything, Jeannie. No one appears to believe him.
That's right. And this is what I mean. I mean, of course, you've got to work with what you have. He has very good unemployment numbers. The inflation number is going in the right direction, GDP. But the fact is, when you're talking to people about how they feel, you simply can't keep telling them things are a lot better because, you may not realize it, but things are better because they're not feeling it. And, one thing I would urge the Biden team to think about is the issue of housing. Mortgage rates here are critical and people are suffering, both renters and people who own and want to buy. And that's where I think you see it, particularly with young people who don't feel optimistic about this economy. A lot of it tied to inflation, big purchases like cars, but let's not forget about housing. It's a big problem.
Rick, what's your thought on the economy issue as a whole, but the way forward here? Because it's such a big part of Joe Biden's stump speech. Anytime he's talking about anything, that it's going to get better. We're seeing relief. He talks about a little bit of breathing room coming for families. That's the essence of Bidenomics. If single digits and undecided voters think the economy is going to get better, how does that play out for him?
Yeah, no, this is a massive challenge. And any day that he's not talking about economics is probably giving back votes to the field. It's really what's driving this entire campaign. I mean, in virtually every single state we tested, the economy, especially cost of living as a function of the economy, is the highest important issue by 3 times over abortion and twice over immigration. So we talk a lot about immigration. We talk a lot about abortion. You're not even going to get to those issues as main drivers of this election unless you get over the fact that Joe Biden probably has the worst numbers for sitting president on the economy in modern political history. It really is a bad thing. And I know they've tried to, improve that by talking about Bidenomics, and I think that flopped. I think we're hoping for interest rate reduction so that you could help with the housing crisis and cost of living, like Jeannie was just talking about. None of this stuff is coming through, and so even though the macroeconomic picture looks better and better, and even Jamie Dimon says we got a hot economy. If I were Joe Biden, I'd find a new vice president named Jamie Dimon, and maybe that can change, the elixir for him. But if he stays on the course, there's no evidence that he's making any progress on these economic voters, and the economic voters are going to decide the outcome of the election.
Well, I do wonder if Jamie Dimon might have a future in the Treasury Department. I'm not the first person to float that idea here. Jeannie, when does the window close? Does the president have till Labor Day? Is it October? When we really need to start seeing improvement in the numbers here, never mind a potential interest rate cut. So where people say, hey, you know what? I think things might be getting better.
Yeah, I think the earlier the better, quite frankly, for the Biden team, because this has been dragging on. I was just looking at some numbers, and, it's been about 2 years straight, if not more, that people have felt this way. Obviously, not all people, but 3 or 4 out of 5 Americans who just don't feel like their family is getting ahead. And, I think the frustration for the Biden folks is they look at those macro numbers, they look at all the legislation they've accomplished, and they have enormous accomplishments. And yet they have not been able to not just message it, but I think, more importantly, just message it, which is critical, is to let people know that they are going to be okay as they go forward under Donald Trump. I mean, the reality for Joe Biden on the negative is when it comes to big things like security and economy management, Donald Trump still has the, he's on the plus side in the minds of the largest percentage of Americans. And that's a problem, right? You ask them about the border, security, the economy. They still see Donald Trump as a better manager, even though he's sitting in these trials. So that's a big challenge for Joe Biden, and the biggest part of that is going to be the economy.
Rick, I've just got a minute here, but an Arizona-specific question. When it comes to the issue of abortion, the poll found independent voters in the state trust Joe Biden over Donald Trump by 12 percentage points. Among suburban women, it is a 25-point advantage. You look at Trump leading in Arizona by 7. Does that change on this one issue alone?
It could. I think that it would certainly help if the president was able to cast a different impression about the economy. And by the way, the economy in Arizona is robust. I mean, it's really cooking. And I do think this poll was probably taken too early to have the full impact of all the disarray that's occurred in Arizona around the abortion decision by the Supreme Court, and then the failed attempts to change any of that in the state legislature. So if those are the numbers in our poll around, especially suburban women, over 20%, that's probably even more today than it was then. So you've got a Supreme Court case coming up that might address this. Yeah. That could have another impact on these numbers.
Great conversation with Jeannie Shanzano and Rick Davis. That's why they are our signature panel, and they're back with more next hour as the president signs the bill. We'll have more ahead from Washington on the fastest show in politics. This is Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
So much for the State of the Union bounce. Welcome to the fastest show in politics as the new Bloomberg News swing state poll shows Joe Biden losing ground to Donald Trump and trailing him in 6 of 7 swing states that will decide the election. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, not great news for the Biden camp. This hitting the same day Joe Biden signs the foreign aid bill for Ukraine, Israel, and Taiwan after 7 months of waiting.
Yeah, of course, the president made quite a big deal of that earlier today, talking about how this ultimately wasn't just about the security of these allies that are going to be receiving aid, but about the national security of the United States. Also taking the opportunity to call out Republicans for the fact that a border measure was not included in this package. Yeah. But yeah, certainly in terms of the polling, not what you want to see if you're an incumbent president trying to play for a second term. Only Michigan of the 7 swing states we looked at is in Biden's favor right now. And a majority of swing state voters see worsening economic conditions in the coming months. The economy, Joe, has a lot to do with this.
That's very true. And specifically the way forward here, when you look at undecideds, Kaylee, single digits think the economy is going to improve between now and the election. That is a massive problem for an incumbent trying to be reelected. We'll dig into that with Eli Oakley coming up from our partners at Morning Consult. That's just a couple minutes away.
We will indeed. First, though, as always, we got to start with the check on the markets, and John Tucker has that for us up in New York. Hey, John.
All right, Kaylee and Joe, after 2 days of gains, stocks, right now they're heading lower. 7 of the 11 major industry groups in the S&P 500, they are down right now. Industrials and communication services, they are proving to be the biggest drags. You have trucking stocks dropping as the freight hauler Old Dominion, they disappointed with their earnings report out this morning. The next of the Magnificent 7 cohort of tech mega cap stocks, they report after the close of regular trading. We are talking about Meta Platforms. Its shares ahead of that are down 1.3%. Most active stock that belongs to Tesla, it's getting a 1% lift after their earnings report that came out late yesterday afternoon. Nothing to write home about as far as the earnings go, but what investors latched onto is the fact that they're going to sell less expensive vehicles at some point. S&P 500 right now 14 points lower, and that is down 0.3%. We're at 5,056 on the index. And the Dow Jones Industrial Average right now 131 points lower. That's down 0.3%. The Nasdaq Composite Index 20 points lower, down about 0.1%. We've got our eyes on treasuries as well. The 2-year yield, which is more policy reactive, that's up 1 basis point, 4.92 there. The 10-year yield is up about 5 basis points. That's at 4.64. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues with Joe Matthew and Kaylee Lyons.
All right, John Tucker, thank you so much. With the good reminder that earnings season is underway, and certainly that is driving a lot of the market action. But so too, Joe, does the economic data. We're going to get a bunch more of it this week, including GDP tomorrow, which is expected to show still robust growth in the United States of 2.5% after the prior reading of 3.4%. This economy still by and large hanging in there.
Right.
The problem for President Biden is he's certainly not getting credit for it, and people don't think it's as good as the data may suggest.
Well, yeah, we have to note, I realize the pain that's involved with going to the grocery store and more recently, again, the gas station, but we have to note the data are so strong that the Fed has had to move its plans to cut interest rates. And you would think that that might be a strength that is enjoyed by more people than we're seeing in this new Bloomberg swing state poll, Kaylee. It's not just those who think the economy is a problem now, but the lack of optimism of the economy moving forward is a huge problem for this president.
Yeah, only 23% of respondents said the employment rate would improve over between now and the end of the year, which is suggesting they don't have better prospects necessarily for the job market. They actually expect the conditions to get worse, not better. And therein lies the rub.
Among undecideds, it's single digits who are optimistic that that number is going to improve, Kaylee. So we've got a lot to unpack here, and a couple of important voices to help us with that. We'll be joined in a moment by Eli Oakley, political analyst with our partners at Morning Consult that helped to run this poll. And right now, our conversation with Laura Davison, Bloomberg News politics editor, who's deeply involved in the poll here. Laura, great to see you. Have we isolated the biggest areas of concern for Joe Biden here? Issue number one remains the economy.
The economy, and within that, inflation still continues to be the issue that people are saying that they think is not going to get better. You know, we did see in the past month some data for inflation that was a little less encouraging. The Fed pushing back any rate cuts. You know, borrowing costs continue to be an issue that people cited in this poll. And, you know, by and large, the bump that he got from the State of the Union last month has all but disappeared in this month's poll. So that's not great for the president, you know, particularly in those Sun Belt states, you know, Arizona, North Carolina, Georgia. You know, in some cases, you know, spreads looking close to 10%, which is you know, a big gap to make up, even though he has some time. Well, it's interesting to consider how things have changed since the State of the Union address. Maybe it got better for a period and now has fallen off. He outlined a bunch of things in that address he gave back in early March, including changes he'd like to see to tax policy and the like. And it's interesting when you look at some of the other, aside from the top line of the polling we did, down into things like who ultimately should be taxed to save Social Security. A lot of people in these swing states think, yeah, tax the billionaires. Save our welfare. It's really incredible how much support there is for a billionaire's tax. You know, the 77% of swing state voters in this poll said that they would support a billionaire's tax to fund Social Security. It's interesting. We polled last month on just the popularity in general of a billionaire's tax. It was, you know, about 70%. So people love a billionaire's tax, and when you ask them if they want it to pay for Social Security, they love it even more. Of course, the political challenge of this is, you know, about half of Congress is opposed to a billionaire's tax, if not a little bit more. You know, all of Republicans and a handful of Democrats in some cases. So, you know, this is really the disconnect where you see, you know, what the American public wants and what Congress can get done, and that will be the challenge, you know, in the coming years.
How do you rationalize that among Trump supporters, a self-professed billionaire, whether or not that's actually true? He's making the lifestyle of a billionaire look pretty good for them, right? And they think that he ought to be able to pay his attorney's fees with small cash donations instead of spending his own money. Those same voters support a billionaire's tax. How does that work? It's a really interesting disconnect, and we've seen a shift in the American public, you know, in the past, you know, decade or so of, you know, wanting more taxes on the wealthy. You know, even, you know, Donald Trump's tax cut in 2017, it was the first tax cut to be politically unpopular. You know, Bush did a bunch of tax cuts in the 2000s, all popular, but we've seen this shift of, you know, that people seem to think that the wealthy should pay more. How you square that with, you know, Republicans also wanting Donald Trump to be able to tax political money for his legal fees, I couldn't even begin to tell you. Well, on the subject of Trump's legal battles, it's also worth pointing out tomorrow is the day the Supreme Court's going to hear arguments in his immunity from prosecution case, or the case he's making that he should be immune from prosecution here in Washington. Today, though, Laura, the court was dealing with another issue related to abortion, specifically in emergency cases in Idaho. And yet it speaks to this wider issue of abortion that continues to rear its head in the legal system and in a number of states. And this poll was conducted, including in the swing state of Arizona, after the abortion ruling there, which reinstated a law from the Civil War era, or essentially said it could be enforced. How did we see that showing up? So across all party IDs, Democrats, Republicans, Independents, abortion has ticked up as an issue that is very important to voters, you know, particularly among Democrats, particularly in Arizona. We saw that most acutely. But having these headlines, you know, about, you know, IVF in Alabama, having the Idaho headlines, having, you know, Florida now being a, you know, potentially the Biden campaign thinks in play because of the abortion referendum on the ballot there. This is, you know, only continuing to be more important to voters, and Democrats are really banking on this as being an issue that will turn out voters in what is otherwise, you know, political experts are projecting as a lower turnout election than we've seen for the past several cycles. All right, Bloomberg politics editor Laura Davison, thank you so much, as always, for joining us. So, Joe, maybe it is partially about abortion, but our polling would indicate largely it still is the economy's stupid, as we hear so frequently. And that's a message the White House is going to have to counter. And someone from the White House, Gene Sperling, who's an advisor to the president, used to run the National Economic Council, was talking about that on Bloomberg television earlier today. And this is what he said to push back on that narrative.
I think overall there's been lots of evidence that people are starting to appreciate more of the positive things in this economy. When people have gone to the polls, when they've actually voted and had a chance to register their unhappiness, like in 2022, what happened? It ended up being a historically positive election for this president.
So for more on the issue of the economy and what we're seeing in our polling, we turn now to Eli Yoakley of Morning Consult, where he is the U.S. politics analyst. Eli, it's always great to have you on poll day. Happy poll day, as we call it here at Bloomberg. When we look at what we're seeing in terms of the feeling around the economy, knowing that it is currently April, there's still 6.5 months to go until the election, at what point are views around the economy solidified enough that there is nothing that the Biden campaign is going to be able to do to change minds?
I mean, one thing that stood out to me as I was reviewing some of this data is this is the first month in a while when voters across the swing state map, more voters than the month before, had said that they see prices as increasing. We've done this now for 7 months in a row, and we're basically back to where things began in terms of how voters are perceiving inflation. And, you know, that's worse in these states where President Biden is doing the worst, places like Nevada, places like North Carolina and Arizona. Clearly, that is weighing on the president's reelection prospects in a big way. This is always voters' number one issue. And even if you ask them to pick one issue, the economy is up there. This is going to be a problem the Biden campaign is going to have to deal with. They're going to, you know, we've seen some of the Democratic strategists argue this, that Biden needs to stop trying to sell Bidenomics and meet voters where they are and acknowledge the price is increasing. This is obviously a problem for him, and until he addresses it, it's probably not going to go away.
So much of this has to do, Eli, with expectations. Fewer than 1 in 5 say they think inflation will come down by the end of the year. Only 23% think the unemployment rate will improve. Does this indicate that there's a potential for massive upside for Joe Biden when expectations are so low?
I mean, that's kind of the Joe Biden campaign trick, right? Is let people think things are going to be really bad and then outperform it. He did that with the State of the Union. People didn't think he could get through a speech that late at night, and he crushed it in their minds, right? You know, yes, I think that is possible. Yeah, voters aren't afraid of losing their jobs. I mean, we've asked that every month. That's not a big concern. Obviously, it's this prices problem that he's dealing with. The one upside here that we've noticed this month in a bigger way than we had in previous months is the economy as a top issue has declined a bit. Other issues have taken precedence. Now, one of those is kind of bad for the president. That's immigration. This is an issue that Republicans have always had an advantage on and are very, very good at weaponizing against Democrats. The other one is abortion. And we saw in this wave of surveys, an increase among the voters who say their number one issue is abortion. That seems like it might be a bit of an out for President Biden, especially in Arizona, by the way, one of the places where he's doing the worst. The economy is almost tied with immigration, but abortion doubled since we started doing this. And a lot of that movement happened after that state's Supreme Court put in that Civil War era law that banned most abortions in the state. So that's a long way of saying the economy is something that people are dealing with. It's a big concern, and it makes them unhappy with what they're seeing in Washington. But as this campaign unfolds over the next several months, there's going to be moments in places like Arizona and other places where other issues take prominence. The question for President Biden is going to be, when is that? Is it at a beneficial moment toward the end of the campaign, or is it at moments like this when voters might get used to what they're seeing?
All right, Eli, as you talk about the issue of abortion and how the Arizona Supreme Court weighed in on that, the Supreme Court, the actual high court in the United States here in Washington, was dealing with the abortion issue as well in a case today. Tomorrow, they'll be dealing with a case involving Donald Trump and his immunity from prosecution argument. When we think about Trump and how his legal battles factor into voter opinion in the swing states, I know we've asked this question before in our polling, didn't this time around, but how should we be thinking about, as we see him in court in New York, where he'll be back tomorrow, as we see the Supreme Court taking up these questions, as we deal with the possibility that he could very well end up a convicted felon in the next month or two? How is that likely to change what we're seeing in the polling?
I think that the way the American people are thinking about this election, the abortion issue is a big deal. What prices people are paying is a big deal. But these two individual characters, I think, are the biggest deal. People know where they stand on the policy issues, but you have questions about President Joe Biden's age, almost a senility question. And then you have questions about Donald Trump's alleged crimes, the criminality question. The earlier pieces of this for the former president were not breaking through in a massive way when they were coming down, especially some of the federal cases that are coming. Now that the American people are tuning into this over the coming months, we're going to need to watch how they react to this and how much of this breaks through versus how much of how people think about Donald Trump's criminality is already baked in. I think a lot of the American people had understanding of where they were on that question after things like January 6th or after all the things we went through in Trump's 2016 trial, his 2016 election. But he was not on trial then. He was never convicted by a jury of average folks in a way that it's possible he will be this year. That could be an inflection point if it comes. Look, the day-to-day trial stuff, we'll see how much that breaks through. That doesn't seem like the kind of thing that is going to be that compelling to the American people. There's no cameras in the courtroom. All it is Donald Trump standing out in the hallway talking for a minute, and then they move on. The bigger deal will be if Donald Trump faces a conviction. That is a defining moment that probably would weigh on the American people.
Spending time with Eli Oakley at Morning Consult. Lastly, Eli, we saw, and it may not be a big surprise, but concern about geopolitical issues, namely Israel, fall to single digits in this poll. As so many people talk about a protest vote in the primary trail for Joe Biden, is this something he needs to worry about in the swing states or not?
I think that this is an issue where the president has sort of evolved a bit. And it's one where the American people have evolved too. I mean, it's not top of mind for voters, but it is one where there are big inflection moments that stick out. And we saw this in earlier iterations after some horrific hospital bombing or after the Hamas attack on Israel. The American people do see it when something big and dramatic happens. But look, Israel's losing the PR battle here. Donald Trump said that, and he's right. I mean, we're seeing this in all of our data. Israel is losing the PR battle among the American people. The American people seem tired of this war. They seem to be sympathetic with the Palestinians, or at least both sides equally. And in our national data, they've got a lot of questions about sending money to Israel after what they've seen unfold over the past
which is pretty important on a day like this when the president actually signs the bill to send the money and the support. Eli, it's great to have you back. Eli Oakley walking us through our monthly drop here in the Bloomberg Morning Consult Swing State Poll. We'll talk to you in a month, Eli. I'm Joe Matthew in Washington. This is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they are mixed, a little change at this point. Earnings continue to be in the driver's seat for investors. You have Teledyne, they're the maker of the sensors and imaging systems that's used in aerospace and defense. That's dropping the most intraday since 2021. The company cut its profit view for the year, so that right now is the biggest laggard in the S&P 500. On the positive side of the ledger there, you have toy maker Hasbro, one of the leaders, after its earnings beat analyst estimates. And shares of Tesla, they are still higher, up close to 11% after their earnings report after the close of regular trading last night. Nothing to write home about, but investors have latched onto the idea of less expensive Tesla models being sold eventually. We also had Meta Platform shares. Those are down 0.9%. That is the next of the so-called Magnificent Seven cohort of stocks. They're going to be reporting after the close of regular trading today. Right now, the S&P 500 down just 6 points. That's down 0.1%. We're at 5,064 on the index. The Dow Jones Industrial Average, 91 points lower. That's down about 0.2%. And the Nasdaq Composite Index turning higher right now, up just 8 points. Also, a quick look at Treasuries. Had a number of auctions this week. 2-year yield right now, 2 basis points higher. That's at 4.93. The 10-year yield is up about 5 basis points. That's at 4.65. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues right now with Joe Matthew and Kaylee Lyons.
John Tucker, thank you. Welcome to the Wednesday edition of Balance of Power. I'm Joe Matthew in Washington, where the shipment is already out. The president spoke earlier today, making it clear that the weapons, at least the first package of weapons for Ukraine, was already wrapped up and ready to go. He signed the bill earlier today and spoke from the White House. Here he is.
I'm making sure the shipments start right away. In the next few hours, literally in a few hours, we're going to begin sending in equipment to Ukraine for air defense munitions, for artillery, for rocket systems, and armored vehicles. You know, this package is literally an investment, not only in Ukraine's security, but in Europe's security, in our own security. We're sending Ukraine equipment from our own stockpiles.
The president repeatedly in his remarks today making that point that this was just as much about U.S. national security interests as it was for the security of our allies. So it's on that note that we assemble our political panel, our signature panel. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are with us. And Rick, the president today also made a point to say something that we've been hearing often from you on this program, calling out the fact that this did pass and he signed it, and there was something that wasn't in it, and that was border security provisions that he had originally agreed to, and that deal died. He did not miss the opportunity to make that point known, Rick.
Yeah, we were just talking about the importance of border security, especially states like Arizona and Georgia, in the recent morning Consul Bloomberg poll. And I think Joe Biden has taken a leaf out of that and said, you know what, I've got to show strength in this border security issue. You're right, took a little bit of time out of a victory lap around the foreign policy supplemental, but he had a shot at putting border security into play. The Senate went along with him, and the House and Donald Trump defeated it. So I would expect this to be a regular rallying cry for Joe Biden, saying that if he'd had the support, of the Congress, and why it's so important that Democrats gain control of it in the future, is to do things like border security. Great message to the moderates, especially undecided voters and independents who are concerned about all the illegal immigrants coming across the border.
Of course, what was in this package that was not in the other, Jeannie, is the divest or ban TikTok provision. This was in the sidecar bill, and on its own was a real cause for concern in the Senate. Bundled with the rest of these, it passed convincingly. Yet Joe Biden's campaign, as he calls for or supports the idea of divesting or banning TikTok, campaigning is staying on TikTok. How do we rationalize that?
Yeah, they've been making the case that they've got to reach their voters where they are. And yet, of course, he signed this bill. So, it leaves them open to charges of hypocrisy. And yet the campaign, again, is just going to say, we have to meet voters where they are. Then they will say, hopefully, they are able to divest, they are able to sell, and, TikTok remains in the U.S. But if it doesn't, then they too, like all Americans, will be off.
Yeah, so I guess it raises a question about the upset that young voters especially may feel about this, let alone the millions of other Americans who wouldn't fall into the young category, but still very much use the platform. The other thing with young people in mind, Jeannie, that we're paying attention to today is what's happening not just on the campus of Columbia University, but campuses across the country in the form of pro-Palestinian protests that have raised concerns about anti-Semitism coming along with that. And the House Speaker, Mike Johnson, just about 2 hours from now, is going to give remarks at Columbia. Speaking earlier on Hugh Hewitt's radio program, he said that Columbia's president should resign. Jeannie, do you think she should, given how all of this has played out over the last several days?
I don't. And again, I should say I don't at this point, because I don't think there has been evidence that she has done anything so far that would result in that. Of course, that is a decision of the board. But, I think the one thing that concerns me about Johnson's visit, and we've seen a lot of politicians visiting Columbia in the last few days. He'll be joined by Congresswoman Malliotakis, who's a friend of your show, Kaylee. The one thing really concerns me is the politicizing of this. The reality is you have many, many young people out in Columbia's campus and people around the country who want to see a ceasefire. Not everybody protesting is pro-Hamas, certainly. And so we need to differentiate between peaceful protesters and demonstrators who have a right to be doing this, which is what Columbia is trying to do at this point, negotiating with them, versus those who are by any stretch of the imagination making it difficult for Israeli or any other students to go to class, who are in any way preaching violence or anything of that sort. So I think it's a little bit more complicated, and I'm not comfortable with the Speaker of the House swooping in like the rest of the Republican caucus has done in New York to say she should be fired. They are playing politics in a way it's not deserved.
Need to have you weigh in on this one, Rick. We're going to be hearing from Speaker Johnson a little bit later on, about 2 hours from now, and he is going to take questions from reporters. Does he belong on that campus today, taking the stand that he is?
Yeah, as you can imagine, I have a different view than Jeannie has, a little bit more muscular when it comes to the responsibility of a university, especially a private university president, in maintaining order on her campus. And in Columbia especially, and maybe NYU too, this is not what's happened. I applaud Speaker Johnson for going there and having a conversation invited by a group of Jewish students on campus who have been under attack for months now, and the university has done little to nothing in order to ensure their safety and an environment where they can actually learn. I mean, we're going into finals week and graduation, and the campus is out of control. The administration of these universities is responsible for maintaining an environment that is for education. This is not the bully pulpit of American soul where you're supposed to stand up and incite all kinds of horrific ideas around these kinds of attacks against Jewish students on campus. And I don't care whether it's 1 or 100, or if you're in a group of 50 people and 2 of them are saying really horrific things that violate anybody's social norms, then the whole 50 are impugned with that, and they have to go, right? So how many students have been denied graduation? How many students have been kicked out of the school? How many students have been arrested by campus police? I mean, these are things that the university has as tools. And by the way, that goes for professors too, who are actively engaged in some of this behavior that are isolating Jewish students from getting a decent education at these institutions. So I think there needs to be some serious reform. I think that especially private universities in America have to look inward and say, what in the world, what is our ethic now that we've been caught in this very simple solution that they can't seem to maintain control over their own universities?
Okay, so Jeannie, Rick clearly thinks that a lot of the burden or blame does lie with the administrations of these universities. But what about the Biden administration? Knowing that the president hasn't necessarily shied away from comment on this, he has condemned anti-Semitism, but also anyone who doesn't understand what's happening with Palestinians. Has he been unequivocal enough on this issue? Is there room for improvement in the way the president is handling himself, Jeannie?
You know, I thought his statement was on point, and I think it's one that we can all get behind, an unequivocal condemnation of anti-Semitism. We also in this country have to have an unequivocal support for the ability of people to challenge the policy of a government which they disagree with. In this case, you have students exercising their liberty to say that they live in a country which is doing something that they don't support. They should be able to say it. They should be able to do so peacefully. And of course, if anybody is denied their ability to get education or bullied or harassed in any way, that's unacceptable. And if the administration is allowing that to occur, of course, then that is a problem. But so far, I think for outsiders to say that President Shafiq has done anything of the sort, we need some evidence on that. And that's where I have a real challenge. Let the president do her job. Let the board decide if she hasn't done her job. And let's let these students think for themselves about what is and what is not going to be the policy of their country, the United States, as they move forward. They have that right, as do faculty members, again, if they're doing that peacefully. And so that's where I come down, and I think that's where the president should come down. And I think so far he has done that. Obviously, it's a political season. He's walking a real tightrope on this.
There you have it. It's not getting easier, and we appreciate both of you weighing in. Rick Davis and Jeannie Shanzano bringing us both sides of this issue here, our signature panel on balance of power. It's great to see you both here. Thanks for the insights on the poll and what's about to happen at Columbia University. We'll have a lot more for you later on today on Bloomberg TV and radio. Kaylee, he's expected to speak around 3:45. We'll be listening closely to what Mike Johnson says.
Yeah, and he'll take a few questions as well. So we'll continue to have full coverage of that for you, just as we have full coverage on other world and national news with Amy Morris in our 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. President Biden says he signed that $95 billion national security package into law and that assistance to Ukraine will begin to move within hours. He also says this new law makes the world safer.
If Putin attacks a NATO ally like he's attacking Ukraine today, we'd have no choice but to come to their aid, just like our NATO allies came to our aid after the September 11th attacks. That's why we're supporting and surging support now to Ukraine, to stop Putin from drawing the United States into war in Europe and in the future.
The new law empowers the president to seize an estimated $5 billion in Russian assets in U.S. banks and repurpose that to assist Ukraine. Swing state voters are open to several ideas to keep Social Security benefits flowing for decades, as long as it's the wealthy footing the bill. An overwhelming 77% of registered voters in swing states like the idea of a billionaire's tax to bolster Social Security, and more than half say they approve of trimming benefits for high earners. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, they are drifting after 2 days of gains. Tesla still getting a lift after it said it's pushing lower-priced models. Shares right now of Tesla up 11.4%. Now, Tesla was the first of the group of stocks known as the Magnificent Seven to report its results for the start of this year. And in the batter's box, up next, Meta Platforms. They're going to open their books to investors after the close of regular trading today. And ahead of that, we have Meta shares right now. They are down 0.75%. And in the S&P 500, almost evenly split between gainers and losers right now. S&P 500 overall up just about 3 points at 5,073. The Dow Jones Industrial Average 21 points lower, and the Nasdaq Composite Index is up 39 points, up about 0.25%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues right now. Joe Matthew and Kaylee Lyons.
All right, John Tucker with a look at the Wednesday trading action. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, broadcasting live on Bloomberg Television and Radio on what is not just any Wednesday, Joe, but it is poll day.
Yes.
Where once again, we have a look at the 7 swing states likely to decide the outcome of the election. It's not looking good for President Biden. He's losing in all but one of them, Michigan. And of course, this is something that has not just domestic implications as we consider whether it's going to be the current president or the former president who is president in 2025, but it has implications for U.S. allies and adversaries and our partnerships all around the world as well.
That is for sure, with questions about what makes this administration different than the last one. When it comes to some of our relationships, China's the big one we hear a lot about. Tariffs are still in place. Another one that is curious is Cuba. And we have a unique opportunity to speak with the Deputy Foreign Minister of the Republic of Cuba right now. Carlos Fernandez de Cosio is joining us from our studios in New York. And it's great to see you, Minister. Thank you for being with us today on Bloomberg. I had the pleasure of being in Havana in 2019 for the rededication of the Hemingway House. At that time, I got an earful about the different policy, the different relationship that the Trump White House had with Cuba than the Obama White House. That relationship has not changed meaningfully since Joe Biden was elected, has it?
I agree with you. There has been changes in the sense of few areas that the U.S. government has decided are of benefit for the U.S. and are of benefit for Cuba. Cooperation, for example, in law enforcement, in areas of science, technology, health, some academic. But the meaningful part of the relationship, which is the economic blockade and the aggression against the Cuban economy, has not changed. It's been faithfully applied by the Biden administration.
So is the outcome for Cuba, sir, the same regardless of who wins in November of this year? Or do you fear that there could be even more intensified policy under a second Trump administration when it comes to things like sanctions and potential economic ramifications for your country?
Like most people, we can't guess who's going to win the elections, and it's very difficult to truly understand what they promise and what they're going to do. What we hope, or what we look for, is that whoever wins does not apply more restrictions for example, for Cubans that live in the U.S. to relate with their families and their country of origin, or for business people to have even more limitations to do business with Cuba. We would hope that perhaps they ease them or lift them. Or for Americans to travel. They're prohibited to travel to Cuba in almost absolutely. Perhaps they will give the Americans the freedom to be able to travel as they travel to other countries. That's what we hope.
What do you hear from the U.S. when it comes to Cuba's relationship with Russia? Because this is something that is obviously considered a very delicate matter here in Washington. The fact that Russia is investing in Cuba, the fact that Russia, in fact, drafted some Cubans apparently to fight against Ukraine. Is that the point of friction between Havana and Washington right now?
The U.S. government knows that most of the investments that take place in Cuba are from European countries or Canada, not so much from Russia. And they also know that we were the ones that learned and made public that a few Cubans that were in Europe were being recruited for the war. And we took measures for those that were attempting from Cuba to also travel to the war. And we've learned that there are people on both sides, both in Ukraine and Russia of Cuban origin, most of them recruited in Europe, not in Cuba.
Well, sir, considering people who are of Cuban origin brings us to the wider question around migration. I know you and your government have been involved in talks with the U.S. on the issue of migration specifically. Is that an area where progress is being made? Can you just characterize for us how that effort is going?
That's an area in which the U.S. government and Cuban government have been able to manage, regardless of the administration in the White House, for decades already, with ups and downs. At this moment, we have agreements in place that we implement and issues on which we discuss that put a limit to the uncontrolled flow, which is what we try to cut. But we made it very clear that as long as the U.S. has a policy of making life difficult for Cubans, it is logical for them to want to migrate to a more prosperous economy. Above all, if there's an invitation by the U.S. that they will get a privileged treatment if they reach the border of the United States by whatever means.
So what is the next step? What are you asking for from Washington? When you talk to the administration, when Havana engages with Washington, what could Joe Biden do now to begin thawing this relationship with such a close neighbor?
What we're not doing is we're not asking for aid or preferential trade conditions or financial support. What we're asking is to be left alone, to allow Cubans to try to develop economy, to allow us to put in place the transformations that we have identified that are needed to push our economy forward and not make life difficult for the people of Cuba.
Well, sir, and you alluded to the idea that you think the extent of the migration we're seeing from Cuba may have to do with the difficulty economically of what life in Cuba actually looks like. But is there really nothing your own government can do on your side in terms of civil liberties, for example, that may also play a role in stemming that tide?
Civil liberties is not the main issue. Most of the experts from U.S. and Cuba who follow migration would say that. It's basically an economic migration. But I do grant that every country has problems in economic policy and the discomfort of people with political situation. It happens in all of Latin America. It happens in the U.S. I'm sure that if you poll people here in the U.S., not everybody's happy with the government. Not everybody's happy with the economic condition. But what's extraordinary, what's unique, is that the most powerful nation in the world has a policy specifically determined to make life as unbearable as possible for the population. And so it's in the hands of the United States to tackle that. It's an illegitimate approach. So the rest we can deal with, but this extraordinary factor has to be dealt with by the U.S. government.
Minister, there was a visit by Sergei Lavrov, Russia's foreign minister in Cuba, at the time of Alexei Navalny's death. That is a story that resonated very loudly here in the U.S. It's one that the Biden administration took a very strong stand on when it came to Russia's handling of Alexei Navalny. Did Havana have a message for Moscow when it came to Navalny's death?
We have a close relationship with China, with Russia. And there's it's not surprised that to have visits of our ministers. But Navalny was not part of our agenda.
All right, Deputy Foreign Minister of Cuba, Carlos Fernandez de Cosio, thank you so much for joining us, of course, today from New York. We appreciate your time, sir, spent on Bloomberg Radio and television. And interesting to hear from him, Joe, the idea that maybe there isn't, for Cuba, much difference between a Biden administration and a Trump administration in the policy that we've seen under each. But there are serious areas where that Venn diagram does not overlap as much on things like tax policy. For example, what was done under the Trump administration back in 2017 in terms of tax cuts, not similar to the efforts that we have seen Biden at least outline, if he hasn't even necessarily proved successful on his ideas of taxing millionaires and billionaires at higher rates and the like. But there's a difference there.
But there's a big difference, and sometimes that's what you're actually able to get done, to your point, than what you're actually professing to do. And it's an interesting situation that we find ourselves in, and one that we wanted to talk about with the former chair of the House Ways and Means Committee. See, Kevin Brady's coming to talk to us today. The former congressman from Texas is with us. It's great to see you. Kevin Brady, welcome back to Bloomberg. There's so much we'd love to talk to you about. And before I get to tax policy, I know Kaylee wants to go there as well. I just would love your thoughts on what just happened in your former House of Representatives. After 7 months of pushback, this new Speaker of the House managed to pass bills to fund our allies in hot wars around the world. The president signed it today. What does that say about the status of Mike Johnson as Speaker?
Well, Joe and Kaylee, it's great to see you again. I love being on Balance of Power. So I think, Speaker Johnson, made a commitment for a very strong America, projecting our strength around the world and keeping us safe for the longer term. He found a way to find common ground and cobble together not just key priorities for our allies and us rebuilding our military strength as well, but found a way to find common ground on how we seize Russian assets and help pay for the eventual rehabilitation of Ukraine. So, I think it was a masterful job. Shows he is a Ronald Reagan conservative and seeking to lead his house under difficult situations the very best he can.
Well, sir, it's interesting as well that this is not the only thing we've actually seen be able to get through the House with massive bipartisan votes for it. That also happened with the tax package that passed the House. It's very unclear what will happen in the Senate. So we want to get to you on the subject of taxes now, considering we can announce today that you're now strategic advisor for the Alliance of Competitive Taxation. I'm sure there's a lot you want to do in this new role, sir, but what about the tax issue that already is currently sitting in the Senate? Do you have any real hope that that bipartisan deal that would include tax breaks for businesses, expand the child tax credit, will actually get through in this Congress, or is this something we're not going to deal with until 2025?
So I think we're all hopeful. ACT is a nonpartisan, really policy-focused group of tax directors from 48 of America's leading companies. And these are companies that hire millions of workers, have lots of small businesses, mid-sized businesses that depend on them, but they compete around the world each and every day against China, Europe, and foreign competitors. So they have a great deal of insight for policymakers, Republican or Democrat, on these issues. They are supportive of the package, as I understand, mainly because the business provisions within that package helps them compete, drives research, new equipment, technology here in the United States. I think they're all hopeful that perhaps they can find common ground sooner rather than later.
Congressman, in your new capacity representing business interests here, you're going to be attempting and working to preserve the 2017 tax cuts to make them permanent. And we've got a new poll out today, and I wonder what your reaction to this is. This is D's and R's. 77% of registered voters in the 7 swing states that we are tracking. 77%. There are not a lot of issues where we can get a number like that. Support the idea of a billionaire's tax to pay for Social Security and other entitlements. How do you have both when you're trying to extend the 2017 tax cuts? Could we also see a billionaire's tax in America?
I don't think it's like that. I'm always surprised those polls aren't at 100%, because who doesn't want to tax millionaires and billionaires? But the truth of the matter is, what taxpayers are hoping for. Then 2025 Congress, both parties will come together to extend, those middle class and personal tax cuts, the tax cuts for small business. They're so critical. And then extend the business provisions that have allowed American companies, small or large, to compete around the world and win and bring their profits back to invest in America. ACT, which is this coalition, is focused on providing research and policy ideas to Congress on issues like, how do you make sure America is the very best place to invest and create new jobs? How do you make sure American companies can compete and win anywhere in the world, especially when China is so publicly targeting our American industries? And finally, they want to incentivize more research and innovation in the U.S. because, as you know, the country that wins the innovation race really wins the future. And so these policy ideas that I think Republicans and Democrats are both vitally interested in.
Well, Congressman, how do you make sure these policy ideas, though, are also fiscally responsible? Because as much as the Trump tax cuts of 2017 may be heralded for the impact they had on businesses, we also saw trillions of dollars added to the federal deficit. If you're not getting as much revenue, but you're still spending a lot, that isn't exactly the kind of equation you want to see for deficit reduction. So what's the responsible way to pursue this?
Yeah, so I think they didn't add trillions of dollars to the debt. That's been fact-checked as misleading, even though the president continues to claim that. In fact, the corporate tax revenues, which were initially criticized, we're now generating more for the U.S. government at 21% tax rate than we were at 35% corporate tax rate. And why? Because we're growing the economy from the business community, increasing workers' paychecks, drawing investment in new jobs back to the United States. And so what I do think is lawmakers on both sides of the aisle will be looking for ways to offset some of those taxes. And I will tell you, in the Tax Cuts and Jobs Act, we didn't have $1.5 trillion of taxes. We had $5.5 trillion of tax reform. We made major changes to the tax code to simplify it, make it more fair, eliminate provisions for some so we could lower taxes for everyone, middle-class families, working moms, small businesses, and the like. And I think you'll see lawmakers taking much the same approach in 2025.
All right. Former Congressman Kevin Brady of Texas, thank you very much for joining us here on Balance of Power, and congratulations on the new role. Again, he has joined the Alliance for Competitive Taxation. As we finished one battle in Congress this week, Joe, over funding, over the supplemental, it just reminds us there are still many battles ahead, including on tax policy.
That's why we're here every day on Balance of Power. We need to get Kevin Brady in studio. Congressman, when you're back in Washington, come see us. With Kaylee Lyons, I'm Joe Matthew. Bloomberg Business Week starts.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. Carol Messer along with Tim Stenivek. And let's get to the setup on this Wednesday, April 24th. And Tim, we've got stocks kind of bouncing around. We're working our way back up to the best levels of the session, but bouncing back and forth as we go through
I kind of thought that it was going to be like a clear rally this morning after what we saw from Tesla. We're going to have more on that in just a few minutes. But like you said, stocks bouncing around. Also, Treasury yields moving up again as more supply in the form of 5-year notes came into the market today. Demand lower from the previous auction.
Yeah, so a lot to keep us certainly occupied. Meantime, on the equity front, Tesla on a tear. It is set for its biggest gain in 4 years. Less expensive car offering really revving up some investor interest in today's session.
Okay, Tesla earnings, check. We're done with those. Now it's Meta's turn. Reporting after the close, they got high expectations. The stock up this year, Carol, by 40%.
Yeah, it's been on quite a run, no doubt about that one. Hey, we're also going to get into the hedge fund billionaire, well known to the business media community, has certainly been on our air, whose cash helped fund a predatory lender. Interesting story by our own investigative team here.
Yeah, also Mike Brown, the CEO of Travel and Leisure, will be joining us talking about the Sports Illustrated resort destination. Have you heard about this?
No, I have not, so I'm looking forward to that. And also one more thing I hadn't heard about, it's called Ozempic face. It's a thing, everybody. Not to worry, there is a solution. So John Tucker, do not be worried.
So there's the Ozempic and then the cure for Ozempic face too.
Yeah, exactly.
Okay.
Life gets complicated. All right, speaking of complications sometimes in the markets, let's get things over. That was a terrible
Do you want to see my Ozempic face?
No, don't do that.
Okay, whatever. Major stock averages little changed after the two-day advance. The next of the so-called Magnificent Seven mega cap stocks reporting earnings after the close. As you mentioned, that would be Meta Platforms. The shares down over 0.8% right now. And again, shares of Tesla up 11%. Their earnings after the close yesterday. The results, nothing to write home about. Instead, as you said, Carol, the investors latching onto the news of cheaper vehicles that are going to be rolled out. And Texas Instrument shares also, they are up 6.5% after their earnings struck an optimistic tone. And in the S&P 500 right now, we're just kind of evenly split between the gainers and losers. The S&P 500 just 6 points higher right now. That's up 0.1%. We're at 5,076. The Dow Jones Industrial Average up 21 points. And right now, the NASDAQ Composite Index 41 points higher. That is up 0.3%. Oh, yeah, yields. The 2-year, 2 basis points higher, 493. I'm excited about auctions. The 10-year, the benchmark, 5 basis points higher right now. That's at 465. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Tim and Carol.
Thank you so much, John Tucker. Market's really bouncing around. It's kind of interesting because it does feel like, Tim, like out of the gate this morning, it felt kind of strong. We saw futures certainly get a bump up on that Tesla news. I mean, Tesla certainly outperformance. Mind you, what is it? Still down about 30-something% so far this year. Just taking a quick look at my Bloomberg, about 35% to the downside. So expectations were low, but it really does feel like the whole focus has been on this potentially less expensive car. And do you think about what kind of market size that creates?
Yeah, it's the
Tesla.
top performer in the S&P 500 as we speak, up more than 11%. Hasbro, interestingly enough, Carol, among the top performers as well.
We're going to talk to Mattel, not this hour, but in the next hour. So looking forward to the Mattel CEO, Ynon Kreiz, back with us. Having said that, back to Tesla we go. Tim said, top gainer. We've seen it as a top gainer in both the S&P 500 and the NASDAQ 100 today, soaring the most intraday in more than 3 years. We know the headline, Elon vowing to launch less expensive vehicles as soon as late this year, easing some concerns about some of the things that have really been weighing on the stock. Disappointing earnings results, which we saw in the most recent quarter, and also some diminished growth prospects overall when it comes to the EV market.
So maybe a little bit of a look, here's this shiny new thing, and we mean it, we really mean it, but we'll see if he really means it. With more following all the twists and turns of Tesla and Elon Musk is Ed Ludlow, Bloomberg Technology co-host on Bloomberg TV. He's in our San Francisco bureau. So Ed, it's interesting because the print was not good. It was not a good quarter for Tesla. The numbers...
Being way too kind.
Okay.
Disastrous.
All right. It was
horrible.
ugly. It was ugly, but look at what investors are doing today. Is this all about the idea that, okay, well, there is a $25,000 Tesla coming sometime soon?
Well, I don't think there is a $25,000 Tesla coming specifically at that price point. But the way I describe it is that no matter who you are in the Tesla investor base, you got something you wanted. You know, there was a lot of anxiety that a cheaper future version of their EVs was cancelled. And the reason there was anxiety is because that was at the heart of the bull thesis of all of those kind of legacy Wall Street names. And away from legacy Wall Street, the retail investor, we're talking about people that own Tesla cars and actually own quite a significant number of shares. They had already really bought into this robo-taxi future, an AI future, and Musk sold that too, right? He really doubled down on it. So something for everyone. But I think we actually, if you don't mind me saying, we got exactly what Dana Hull and I reported on Sunday night would happen. And we can talk a little bit about the explanation on that.
Well, go there. First of all, I love the way you say future. I'm just going to put it out there. So, sorry, it's an aside. Yeah. But talk to us about what you and Dana reported on.
Yeah, so for a long time, everyone believed that there would be an individual single new Tesla car called Model 2 that would cost $25,000, alluding to what Tim was talking about. At one point in time, that may well have been true. What Dana and I reported on Sunday is that this concept in its present form has been wildly misunderstood. For quite a long time, Tesla's been working at looking at each individual component of an EV and the production process by how it's built and redone it, re-engineered it, so that they can bring a new way of making the car that dramatically lowers the cost of their existing lineup, the 3 and Y. And when Tesla published its shareholder deck, almost verbatim, what they said in that deck matched what we had put in our story on Sunday night. And that is something that investors really cheered.
So what I thought was interesting, too, in the reporting that is out today in your and Dana's story is that when he was asked during the earnings call whether a vehicle at the price point is still planned, you guys wrote the CEO, Elon Musk, demurred, only saying that there will be more to share when Tesla shows a dedicated robotaxi in August. Again, you know, we kind of played coming in it. Look, shiny new thing. We mean it. Really, 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 we do. So, I mean, you guys track the ins and outs, twists and turns, truly, of what comes out of Elon's mouth. Can we kind of, you know, hang our hat on this idea that there will be indeed a cheaper, less expensive offering that moves the needle financially?
Absolutely not. Don't hang your hat on anything Elon Musk related if you wish to keep hold of your hat. No, I think that there is a lot of skepticism out there. That they actually gave quite a lot of explanation in the shareholder deck, 31-page PDF, but very little answer of substance on the call. And there is a big body of people out there saying, hold on, you haven't told us anything here. Yeah. The broad idea there will be more affordable EVs. And it was classic Elon Musk, right? Because the shareholder deck said late 2025, or they said in the prepared remarks on the call late 2025. And then suddenly 20 minutes later, Musk said, actually, I said late 2025, but I meant later this year, 2024. And it's just the classic roller coaster of an Elon Musk-led earnings call.
Okay, so speaking of the classic roller coaster, automation is certainly something of a roller coaster. Elon Musk has been talking about this for years. I mean, robotaxis were supposed to be on the streets, Ed, back in 2018. Is this time different, though? I mean, he said that automation is a key focus for the company. He said this before, but why are investors thinking this time is different?
Yeah, the basics are, whether it's a consumer EV from Tesla or a purpose-built robotaxi, it's a camera-based system. And the camera-based system is only as good as the software that you write for it. We've reported, and this was outlined actually quite specifically on the call, that the biggest barrier to Tesla's progress so far has been, one, the supply and availability of, and two, the performance of GPUs, those very valuable AI accelerator chips that are used in training AI models. But they've started now to make progress on actually installing them. Musk has a relationship with NVIDIA and so uses the H100, and they have Dojo, their proprietary chip. They've been talking about them abstractly for quite a long time, but what they actually gave us concrete evidence of in the shareholder deck was that they actually have these data centers that have the chips built into them operational now. And what I reported, according to sources, is that there are a small number of secret iterations of the software, FSD, that are showing a lot of promise to actually support a robo-taxi. Whether we see it or not on the timelines Musk outlined, again, don't hang your hat on that.
Hey, one last thought here. Energy generation, storage, batteries. We've had a fair amount of folks come on and kind of say, well, wait, you gotta, this is something that the story when it comes to Tesla not really being told.
Critical, yeah.
So tell us that story, and is that kind of a win for Tesla this quarter?
Yeah, the reality is that the energy and storage business, from a growth perspective, is really going to outpace EV this year. They had already told us that was likely to be the case, but Elon is zeroed in on AI and this robo-taxi thing. Drew Baglino was the SVP of Powertrain and Energy Products, and as you guys know, we reported that he left last week at a time where the energy business is going gangbusters. So the narrative is very simple. This is doing really well, and it's going to grow. But at the same time, for Musk, I don't know that it's a priority. So we'll have to see if someone else manages it in parallel with all of other Tesla's stuff.
All right. Well, good stuff. And we know it's been a busy couple of days or weeks, if you will, when it comes to Tesla and everything else that's on your radar. Ed Ludlow, thank you so much. Bloomberg Technology co-host of Bloomberg Television. As we said, Tesla Focal Point shares at their highs today, Tim, up 16%, but it's lost some of that, but still a gain of about 11% as we speak.
Okay, Tesla's certainly a focal point in today's session, but now to a company's earnings that will be top of mind after the close and perhaps into tomorrow, depending on what the print looks like. We're, of course, talking about none other than Meta Platforms. Meta shares up nearly 40% so far this year after nearly doubling last year. Okay, so pretty high expectations, I would say. With more on what to watch for, everything from advertising and family of apps revenues to active users and AI, we turn to our in-house expert on all things Meta, Bloomberg Intelligence senior tech industry analyst Mandeep Singh here in the studio. Meta Platforms, it's called Meta Platforms, but let's be honest, this is a company that still makes the vast majority of its revenue from advertising. Mandeep, AI today, how are we thinking about AI in today's report?
Well, AI is in all their products. If you think about, when you go to Instagram or WhatsApp, now they have inserted a Meta AI button. In fact, we did our own survey around the impact of all these companies on search. And surprisingly, Meta AI actually featured quite high along with ChatGPT and Google Gemini, because a lot of people are trying out search within the app. We saw that with TikTok, actually. TikTok is heavily used by the younger demographic for search. So think of, how Amazon has challenged the duopoly of Google and Meta over the years with digital ads. TikTok did the same with social media, and now Meta AI could be a formidable search competitor. So that's one application of AI. And then they talk about AI with all their, virtual reality, augmented reality, the Reality Labs division that continues to lose $4 billion. They are inserting AI in all that product.
Cool $4 billion.
Nice little slide in there. Well, that's what I was going to say. Is AI moving the needle financially in a good way yet?
I think in terms of ad targeting, you see it in the results because they are doing much better than Snapchat or Pinterest. I mean, the smaller digital ad vendors haven't seen that kind of pop that you've seen with Meta. I mean, in the case of Meta, they had an 80% drawdown, and now they have reclaimed the $1 trillion market cap. So for a good reason, fundamentally, their estimates have gone up because they've seen that ad pricing rebound, the comeback of advertisers to their platform. Snap and Pinterest haven't seen that, and the reason for that is they haven't applied AI to all their, ad systems the same way as Meta has done.
So it's really AI that you think has helped them reclaim in terms of advertising.
Absolutely. I mean, they course corrected, I think, 18 months back when everyone was scared of how much they were spending, and that course correction actually was the pivot to AI. And now they have their own large language model that competes with ChatGPT. So they've got a lot of things right.
I mean, I understand the pivot to advertising, but the AI component, pivot back to their core business of advertising after all of the attention, metaverse. But the AI component with advertising, that is helping move the revenue needle and the profitability needle even more in the advertising business.
I mean, you remember IDFA when Apple changed all the logic around, what they could use for ad targeting? Well, they had a big setback. And what they used to offset that is AI. So a lot of the first-party data that Meta gets across its family of apps is being fed into their AI systems. And whether it's generative AI or not, I can't say for sure.
Okay.
But it is driven by AI in terms of how good their ad targeting has become.
You mentioned TikTok. We got to talk TikTok here because of what happened late yesterday. Of course, Facebook has its Reels, which is essentially a TikTok clone in Instagram. What are analysts going to be asking executives on the call about an eventual TikTok ban, if that happens, and what the effect would be on Meta?
Yeah, I mean, look, we know the run rate of Reels now. It's almost $10 billion, and it's 3x in a very short amount of time. So the growth rate has been north of 100%. What people were concerned about was the cannibalization to their existing ad inventory from Reels, and that doesn't seem to be the case because they're growing top line 25%, albeit it's still easier comps. So the comps do get tougher in the second half, but I think you just want to know the run rate of that Reels product, how fast it can grow. And if there is a TikTok ban, it's obvious Meta is one of the prime beneficiaries of that, along with YouTube Shorts. So you will see more engagement and more creators moving to Meta. I mean, remember, Meta has lost their touch with the younger demographic. A lot of the younger demographic users don't even use the Blue app anymore. And so they still have an engagement problem, but they've been able to offset a lot of that with AI, with better ad targeting.
Can they ever get that younger audience? Or how could they?
I mean, a ban on TikTok.
Yeah.
That leaves very few choices. Where else are you going to go?
Yeah.
You have to pick either YouTube Shorts or Instagram or the Blue app.
Well, go ahead, Carol.
Well, it's not a done thing, right? And we're also saying this ban, the clock started ticking, but we still don't know.
But if you're a creator on TikTok, you have to ask yourself, where will I have the audience? Because of all the uncertainty, you'll be like, I have to find an alternative. Otherwise, I'm going to use all my followers. Yeah, just in case. And you start to plan ahead of time because you've got 9 months. And if nothing happens, you're not going to wait till the last day to move over your followers. So you're going to start doing it now.
Mandeep, I got to be honest. The only time I hear about YouTube Shorts is when you come and talk to us. Is this a real competitor to TikTok and to Instagram
Remember,
Reels?
we are on YouTube, Tim.
Well,
just saying.
I know, but the Shorts product is
YouTube.
completely different.
In terms of the product, they have all the features. It's just TikTok's algorithm.
Do they have the people and do they have the algorithm?
And that's the thing with social media. It's all about scale and network effects. Well, now that TikTok could be banned, it automatically drives all those people to the alternatives. And so this could be the moment where YouTube Shorts really takes off.
Are you setting up with a stock that's up so much this year that it's going to perform to the upside, could see more upside? Real quickly, just about 15 seconds.
I'm amazed at how many cost levers they have. Last year was the year of efficiency. Look what it did to their EPS and operating margin. Now if they say we are curtailing our reality labs, that could drive the EPS even higher without doing anything on the top line.
Unbelievable. Thank you so much. Mandeep Singh, he's our Bloomberg Intelligence Senior Tech Industry Analyst. Coming up, the unlikely duo from Wall Street and their connections to predatory lending.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash, the major stock averages, they are a little changed right now. 5 of the 11 major industry groups in the S&P 500, they're up. Consumer staples category, the best performing. Industrials and communication services, they are the biggest drags right now. You see their trucks on the turnpike, Old Dominion Freight Line shares. They're the worst performer in the S&P 500, down just about 10% following their earnings report. Best performing stock in the S&P 500 after their earnings yesterday. Tesla up 11%. That's followed by Hasbro up 11%. Maker of G.I. Joe with a Kung Fu grip, reporting first quarter earnings that beat estimates. I think they still make that. After the close, the next of the Magnificent Seven report earnings, that would be Meta Platforms. Those shares down just under 1%. And then word this afternoon that Boeing's long-term debt rating downgraded by Moody's, which cited inadequate performance of commercial airplanes. It's been cut to Baa3. S&P 500, 2 points lower. We're at 5,068. The Dow Jones Industrial Average, 40 points lower. That's down 0.1%. NASDAQ Composite Index is 9 points higher. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tim and Carol.
All right, John Tucker, thank you so much. Well, the two men come from the opposite ends of Wall Street. That's the beginning of a story by Bloomberg's own Zach Miter and Zeke Fox.
The two men, well, one started a cash advance company, the other a retired investing legend. And they are connected via a private credit fund that had what both were looking for.
And you could read Zach and Zeke's story. It's in the upcoming new issue of Bloomberg Business Week. That's out next week on newsstands. It's already now on the Bloomberg terminal and at bloomberg.com/businessweek. Here with more on the stories, Bloomberg News Projects and Investigations reporter Zach Miter right here in studio. Zach, great story, and it's kind of this work that you guys have been doing for some time. But it all leads back to a much talked about area in I feel like the financial world right now. And investors want a piece of it. Financial establishment want to offer it up. It has to do with private credit. So it's also a world where there's a lot of opacity. So talk to us about it and kind of how that ties everything together.
Sure. So you're right, Carol. It's a hot area on Wall Street right now. Everybody wants to get into private credit. They want to invest in private credit. Think about it as, higher yielding credit that is extended not by a bank like you would traditionally expect, but by private pools of money raised by wealthy individuals or institutions or insurance companies, and that money is going out and funding everything from leveraged loans to subprime auto loans to even things like something that Zeke and I write a lot about, the cash advance industry.
So let's talk about these two men who come from the opposite sides of Wall Street. We're talking about none other than Leon Cooperman, who I think many people are familiar with in our audience, and then also David Glass. Let's start with David Glass.
Yeah, David Glass, if you've ever seen the Vin Diesel movie Boiler Room.
Seen it.
Which is about a stock scam operation. It's based on a true story. David Glass's story kind of inspires that movie. He wore a wire to stay out of jail on insider trading charges, pleaded guilty to insider trading, and then started a boiler room of his own in the cash advance business. And cash advance is sort of like payday lending for small businesses. It's basically not regulated, and there's a lot of because it's not regulated, there's a lot of bad stuff that sometimes happens in that business.
Take a step back, because you and Zeke have done so much reporting on this industry, and it is for like small businesses, right? And folks who can't necessarily go up to one of the big banks that we all report about when they need some money. It's a rough business.
Yeah, and if you're a small business owner, you've probably gotten these calls all the time from people saying, hey, I can get you $10,000 today. Almost no paperwork. We don't need to know what your credit score is. We can just look at a few bank statements and give you the cash in your bank account today. So it's a very attractive proposition for small businesses that need money quick, but it comes with big costs that are sometimes not obvious to the borrowers.
So make the connection between private credit. So is this a form of private credit? Can we say that?
No.
No, it's different.
Well, no, but what we found, and this is so interesting, is that these cash advance companies, your traditional kind of Wall Street institutions, we haven't seen much connection between them because they don't want to have anything to do with the cash advance business. But now there's this private credit firm called Basement Capital that is actually turns out to be a major supplier of credit lines to a bunch of cash advance companies, including the company that was kind of originally founded by David Glass and then went through a transition. Now it has a different name, and the New York Attorney General says it's basically the same firm, and it got a credit line from this private credit company, BasePoint Capital.
So tell us about BasePoint. Who's behind BasePoint?
Yeah, so BasePoint Capital is a fancy private credit firm with nice offices near Rockefeller Center, and started by a guy from Morgan Stanley. Not the same kind of pedigree as the people over that working for David Glass in the boiler room, right? And yet, there's a connection in that it's financing a lot of cash advance companies and also financing payday lenders, a pawn shop company, other things that you might, be surprised that the kind of legit Wall Street firm is investing in.
And started by a protege of Leon Cooperman. And Leon Cooperman has given them a fair amount of money, right? To put to work.
That's right. That's right. It's run now, not founded, but run now by a guy who used to work for Cooperman at his hedge fund, one of the most successful hedge funds of its time, before he closed it down and now runs a family office. And so this guy, Eric Schneider, runs BasePoint. He used to work for Cooperman, and Cooperman continued to be a big backer, after he went to BasePoint.
What did Leon Cooperman tell you and Zeke when you reached him for the story?
Yeah, so Cooperman is a wealthy guy. He's worth billions of dollars. Yeah. He said he's going to give basically all of it to charity.
Frequent guest on Bloomberg and Bloomberg Stories and certainly Bloomberg Media.
He says he's going to give it all to charity. He gives a lot to charity. And, he basically says, I don't know what you're talking about with this, this cash advance company, this lawsuit from the New York Attorney General, which makes all kinds of claims about this company. To be fair, it's not totally obvious. We didn't know. We follow the industry pretty closely. We didn't know until the lawsuit filed last month by the New York AG that this kind of very well-known cash advance company in its current form is getting financing from BasePoint.
Interesting. Okay. And to be fair, BasePoint and Leon Cooperman, they haven't been accused of doing anything wrong.
Absolutely not. Simply providing credit to other firms that are,
What's interesting about this, and we know this from, covering Milken and other things, like everybody's talking about private credit, and really very much the financial establishment all wanting a piece of it because of the returns are so high. But we keep talking about, do we actually know where all this money is going? Because there's not a lot of oversight or not reporting, but you know what I mean, like regulatory oversight that requires certain reporting to various institutions or regulatory bodies, right? And that's what makes it a little tricky.
It's outside the banking system. Banks, as you know, have a lot of rules.
Shadow banking, right?
Right. Banks, as you know, have a lot of rules, and the private credit market is kind of new or newer, and maybe not quite as much transparency in every case. Yeah.
I want to go back to Delta Bridge funding. Explain what that is and exactly the rates that what they do, like the types of companies they loan money to, and the rates that those companies are getting, and the big picture, how is this allowed from a regulatory perspective?
Right. So Glass, who we talked about before, started a company called Yellowstone, which became kind of one of the big names in the cash advance business.
You've done a lot of reporting on this over the last few years.
Right. They were in trouble in 2021 because they were being investigated by two state attorneys general, by the FTC. Their credit line was going to get yanked, and they were afraid they were going to go out of business and be left with nothing. So they came up with this plan to sort of continue the operations, but with a different legal entity owning it, a somewhat different shareholder base, and get rid of Glass and the other, the guy who was the CEO. So they made this transition. On a Friday, Yellowstone closes. On a Monday, mostly the same people go back to work in the same offices.
This just kind of happened, didn't it?
A couple of years ago.
Oh, a couple of years, forgive me.
And that's when BasePoint comes in with its funding of this new entity. So the Attorney General says this is really just the same company. Delta Bridge vehemently disagrees with that and says it's a brand new company with none of the baggage associated with this.
The more time that you guys spend doing this and kind of finding out things, and change does happen. Your reporting helps bring about changes as well. I don't know, what is kind of your viewpoint? And I think about a Bloomberg audience who's listening to this and watching, what they need to be aware of.
I think if you're a small business and you're offered financing like this, even though it sounds really attractive because it's so quick, you need to be really careful about what you're actually agreeing to, because sometimes you can be very surprised with what these companies can do to go after you, because it's not really regulated like the way a traditional loan is. Technically, it's not a loan, it's a cash advance. And so the rules on usury and lending protections don't apply.
What type of rates are we talking here?
It can easily be several, 100% or even several 100% annualized. Typically, you're not going to pay it for a year. You're going to make daily payments starting the next day after you get the loan for maybe the next 3 months or something like that.
I think about this too when we talk about kind of the dwindling of community banks and even regional banks and the pressure that they've been under. It makes me wonder, so where does small business go for safe funding, right? And there feels like there's a lack in our system in a big way.
Yeah, and that's not to say that all cash advances are terrible all the time. For some businesses, they might make sense, but you have to be very careful as a small business person. And what we found in our reporting is a lot of small business people are great at making pizza or doing nails or something, but they're not always prepared to really sort of kick the tires on their proposed financing source before they actually sign.
It's a really good point. Highly recommend. Maybe we'll throw some stuff into X, the past reporting you guys have done, because you really did deep dives about some of the predicaments, the really tough predicaments that small businesses found themselves in the past as a result of this. Zach, thank you. So appreciate it. Zach Miter, Projects and Investigations reporter at Bloomberg News, writing this story with Zeke Fox. You can find it in the upcoming new issue of Bloomberg Business Week, but it's also already on the Bloomberg and at Bloomberg.com.
Hey, coming up, are you ready to go on vacation at the Sports Illustrated Resort?
What is that?
We'll find out, because we're going to be joined by the CEO of Travel and Leisure. We'll talk that and also what's going on in the world of hospitality. First up, though, a check on the latest world and national news. We got Amy Morris in Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hey, Tim. President Biden signed that $95 billion foreign aid bill that will supply aid to Ukraine, Israel, and nations in the Indo-Pacific. The president also said the bill will help Israel defend itself from aggressors like Iran, but also says Israel has to ramp up its humanitarian assistance to civilians in Gaza.
This bill significantly increases humanitarian assistance we're sending to the innocent people of Gaza who are suffering badly. They're suffering the consequences of this war that Hamas started.
The new law empowers the president to seize an estimated $5 billion in Russian assets in U.S. banks and then repurpose that to assist Ukraine. The foreign aid package also includes a measure that would ban TikTok in the U.S. by next year unless the Chinese owner ByteDance sells it. Supporters say their goal is not to remove the wildly popular video app, but CEO Shou Chu is responding to that with a TikTok of his own.
Make no mistake, this is a ban. A ban on TikTok and a ban on you and your voice. Politicians may say otherwise, but don't get confused. Many who sponsored the bill admit a TikTok ban is the ultimate goal.
TikTok CEO Shou Chu says the company will fight this in court. And the Biden administration has issued final rules requiring airlines to automatically issue cash refunds for delayed or canceled flights. They should take effect in the next couple of years. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Tesla shares helping lift the NASDAQ higher for the third straight session. The NASDAQ has been bouncing between gains and losses in today's session ahead of more big tech earnings. Meta due to report at the market close. You have Microsoft and Google parent Alphabet. They're set to follow tomorrow. Boeing shares, they've turned lower after the aircraft maker said it burned through nearly $4 billion in its latest quarter. And Boeing's credit rating also now on the cusp of a junk rating after a downgrade from Moody's. But right now we have the S&P 500 just 4 points lower. That's down about 0.1% at 5,065 in the index. The Dow Jones Industrial Average 46 points lower. That's down 0.1%. And the NASDAQ Composite Index turning lower right now, down 10 points. That's down 0.1%. We're at 15,686. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Carol and Tim.
All right, John Tucker, thank you so much. Well, just about everyone, it seems, is still traveling and going on vacation. And we got a reading on just that this morning via the $3.2 billion market cap hospitality company, Travel + Leisure. It's home to nearly 20 brands, including Margaritaville Vacation Club, Club Wyndham, Panorama, Travel + Leisure, and a bunch more. And the company reported net revenue for the first quarter. It did trail Wall Street estimates. The stock has been a little bit lower in today's session, but it's up nearly 16% so far here in 2024.
Yeah, down 0.4% right now. So let's get to the interview. With us is Mike Brown, President and CEO of Travel + Leisure Company, with us from the company's headquarters in Orlando, Florida. As Carol mentioned, the street a little disappointed, Mike, with the quarter. So talk us through what you saw as the highlights and also the disappointments, the lowlights of the quarter.
Well, this was an extremely strong leisure travel quarter for us. Almost all of our metrics that indicate the strength of leisure travel demand during Q1 were up. An intraday trade doesn't concern us very much when you look at overall underlying business performance. Just to give you an indication, our forward bookings are up 7% year over year. The key driver of our business, which is the number of guests we see for what we call tours, was up 15% on an expectation around 10%. And the bottom line at EBITDA was above the consensus expectation. So it's been a really good run this year from an equity standpoint, but more importantly, the underlying business, the leisure travel demand, and the forward look into summer travel looks really strong for our business.
Well, drill down a little bit. It's interesting. Tours up 15%, beating expectations. What drives businesses, I'm assuming, signing people up and having them stick around. So talk to us a little bit about that.
Sure.
And kind of, a little color commentary about what you guys are seeing. And I'm also curious about pricing, if consumers are looking kind of for bargains, for deals at this point.
Well, value has always been a key component of our business. And when you look at Travel + Leisure and all our brands, 7 out of 8 of our owners have already fully paid for their ownership and are only really traveling for the annual cost of their maintenance fees. So from their standpoint, they're basically traveling in 2024 in 2018, 2019 prices. So then in what has been an incredibly strong inflationary last 3 years, in the sense of high inflation, people have never seen more value in their ownership than they're seeing now. That's helping our tours, our conversions, and ultimately our top line sales. When you look at why they're up for the beginning of this year, we've got a great relationship with our sister hotel company, Wyndham Hotels. Our owners are buying at record rates. Ultimately, that's driving demand. And when I think, as you all probably see when you go to the airports or driving on the highway or visiting theme parks, leisure demand is absolutely packed. And we think that's not going to slow this summer. And that flowed through in our individual company results of what was an extremely strong Q1 for us.
Mike, talk to us a little bit more about that conversion rate. I think we've all been on a vacation or gotten something in an email or something about, hey, come visit us, and all you have to do, it's a deal, and come, consider doing some kind of a timeshare or longer term commitment. So talk to us about tours to conversion, what you're seeing and how that compares. I don't know, what's the right metric for you guys? Is it pre-pandemic? What is it?
Yeah, I think pre-pandemic is a good metric for us. What you typically see is people who have purchased one time and experienced a product from 2 times, 3 times, tend to convert at a much higher level. Why? Because they want to understand how the Club Wyndham system, the Margaritaville system works. And then when they realize that everything they're looking for in macro travel trends is fulfilled in this type of product, they buy more. What do I mean by that? Everyone wants to vacation with more space when you travel with your family or with a group of people. You want to travel with a brand that you trust. And now 80 to 85% of this industry is with a hospitality brand. That's a far cry from the perception that was out there 10, 15 years ago. And I think all of those perception changes, the reality of the flexibility of the industry is reinventing of where vacation ownership or timeshare has grown up in the last 15 years. And as people are rediscovering it, says, would I rather travel in a 250 square foot room or 1,200 square foot with my own kitchen where I can save some money by eating in the room or skiing all day and coming back and relaxing with a glass of wine in your apartment? It's just a better way to travel.
Hey, one thing that really piqued our interest when we were preparing for this segment is what's happening with the Sports Illustrated brand. Talk to us a little bit about the licensing deal there and how you were able to get that brand and what that looks like as a concept for people who are coming to the property.
Well, I think getting back to macro trends, people want to look into the passions of their individual life and associate most of their free time with it. And as people enjoy sun, sand, a margarita in your hand with Margaritaville, people are equally passionate about their sports team or their college town. So our idea is really to tie hospitality with college towns and the Sports Illustrated name. So similar to what we do with Wyndham Hotels, we're licensing the Sports Illustrated name, and we're working with a number of different groups to begin developing similar type of hospitality in college towns. Our first one will be the one that has the most Sports Illustrated covers, the University of Alabama. And if you think there's not a lot of passion, not only in the football season, but year round, it's a great place for us to provide really great accommodation. I have two kids in school myself, and I think we'd all agree when you go to a college town, you pay a lot on a football weekend for a hotel room. Now imagine a location that really ties in the university, all its history, the alumni, and the experience of that university. And that's what we're out to accomplish, combining the university and Sports Illustrated.
But how do you make sure that when football season is not happening, the excitement is still there?
Well, I think that's, you've heard us as we've talked about this over the last 6 months. We never only talk about football because university, college towns have become, yes, a weekend game, Alabama versus Auburn, or in any SEC town is going to be peak season. But what a great opportunity for us to have multiple peak weekends, but also baseball. Alabama was just in the Final Four for basketball. There's a year-round experience that's, yes, tied to sports, but there's a lot going on in many of these universities that make it a full 12-month season for the opportunity to have an entire hospitality experience.
It's really fascinating, kind of that concept. Hey, listen, just got about 45, 50 seconds left here, Mike. Curious, when someone now signs up for a timeshare with you guys, and I know that there's a variety, give us an idea of what this costs.
Yeah, so the average first-time transaction is about $22,000, and you get somewhere between 5 to 7 days. What I would say to you, though, is everyone has always described this as a higher price discretionary income. I think we can all agree that vacations are not discretionary. So it just comes down to what you pay, and almost no one pays that $22,000 on day one. They typically pay it in monthly installments over a 10-year period. So very affordable. Most people would look at it if it fits in their budget and then buy accordingly. But it's really a monthly payment in a product that is not discretionary, which is people's leisure time on vacation.
I got to say, a lot of stores, I have a sister's had one out in Hawaii for years, and it's made them like intentionally go there regularly.
She ever share it with you?
10, 15. I've not been invited yet, but a lot of my family members have tapped into it. It's just timing on my end. Nothing, family's all good. Mike Brown, thank you so much. President and CEO at Travel and Leisure. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the Bloomberg Newsroom with your company news. And let's start off with Boeing. We got news today that Boeing's credit rating on the verge of junk. This comes after the Boeing's earnings report that came in, and that was a disappointment. Also making news in the company Spear this morning. We have news also that Google delayed its plan to phase out cookies, software that lets marketers track users in its Chrome browser this year, pushing to 2025, a move that will ultimately transform how advertisements are targeted on websites. The Alphabet company saying in a blog post it's still working with the ad industry and regulators on the plan. Google said it hopes to eliminate third-party cookies early next year, provided it can come up with an agreement with regulators. And the NBA, exclusive period for discussing a new broadcast deal with Walt Disney and Warner Brothers Discovery. That has concluded without an agreement, so that opens the way for talks with other potential bidders. And it's been a busy spring for Legendary Entertainment. March 1st, the movie operation backed by Apollo Global Management released Dune Part 2. That's racked up global box office receipts of nearly $700 million. And then on March 29th, it premiered Godzilla vs. Kong, The New Empire. That's taken in almost $500 million. The back-to-back blockbusters that made Legendary the most successful film producer so far this year. While enjoying legendary success, Apollo has also been pursuing a much bigger prize. That would be Paramount Global. Apollo submitting the $11 billion bid for Paramount Pictures film and TV studio earlier this year, followed by a $26 billion offer for parent company Paramount Global. That's your company news.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. We've got some information coming out of President Biden out of the White House. He says he has signed that $95 billion national security package into law and that the aid will help strengthen NATO and other U.S. allies.
Give vital support to America's partners and so they can defend themselves against threats to their sovereignty and to the lives and freedom of their citizens. And it's an investment in our own security.
The president says aid could be flowing within hours after he signed that measure. Biden's signature also clears the way for the U.S. to quickly resume arms shipments for Kyiv, whose efforts to repel Russia's invasion have faltered. The foreign aid package also includes a measure that could ban TikTok in the U.S. by next year, unless its Chinese owner ByteDance sells it. TikTok CEO Shou Chu says the company will fight that measure in court. Conservative Supreme Court justices appear skeptical that state abortion bans violate federal health care law, even during some medical emergencies. It's the case from Idaho that they've been hearing. It'll determine when doctors can provide abortions during medical emergencies. New Jersey Representative Donald Payne has died. The six-term congressman suffered a heart attack earlier this month and had battled a series of health issues in recent years, including diabetes and high blood pressure. Representative Donald Payne of New Jersey was 65 years old. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Carol Massar and Tim Stenevec.
Thank you so much, Amy Morris. Well, hey, Ozempic face, not to worry. There is a shot for that.
You calling me?
Who knew it was a thing? The craziest things when you're reading and prepping for 3 hours of a broadcast, and this is a story that pops up there. Don't look at me like
what you're
that,
referring to is it's been dubbed. It's a side effect that's been dubbed Ozempic face on social media. And Galderma Group's boss has an answer for people suffering from it. It's a sunken face after taking weight loss drugs from other companies.
Well, this is something, and we've kind of talked a little bit about this. You lose a lot of weight, right? You're going to have potentially an impact, and whether it's a sunken face or other things. I mean, this happens to people who lose weight, over the years, right?
Without the use of these newish drugs.
So basically, Galderma Group, I hope we're saying it correctly, are saying that they can basically put in some fillers to kind of fill out, especially your face becomes more gaunt.
Spackle?
No, Sculptra.
No, to make it kind of fuller, because you lose weight and you get gaunt. That's what they always say.
Well, isn't that the point of losing weight, though? So you look skinny?
Yeah, but you could also look kind of a little,
like a skeleton.
like sagging a little.
Sculptra boosts collagen production, which helps treat wrinkles and other signs of aging. The company's CEO said in an interview that it should be able to restore this.
Yeah, exactly. So it's interesting. And these are some of these things that, as you said, produce collagen. It's just interesting. We're living in fascinating times. We're seeing some benefits so far of these weight loss drugs, but there's also, it impacts you physically.
Yeah, the CEO also saying that it's going to be another growth wave in that space, which I will make sure to capture. So he's bullish on it.
Oh, I thought you were going to capture.
No, I'm quoting the CEO, Fleming
Tim, something you
Ornskov.
want to share with us?
Fleming Ornskov over at Alcal
Tim is
Therma.
the thinnest person in nonstop eating.
I think we're out of time.
I think we're out of time. Hey, for those of you watching on television, the close is coming up next in just a moment. Certainly on our radar, Meta earnings after the closing bell. So that's going to be a big one. We saw what happened with Tesla last night. We'll see what we get out of Meta, which has had quite a run up here in 2024.
We're also talking a little bit about chips. The chip bellwether, Texas Instruments, gaining the most in years, and it's got some implications for the chip sector, which some names notwithstanding has been in a little bit of a rut lately.
Yeah, it's such a bellwether, as you said, because it plays into so many different sectors, so we'll get into it. And also, this China's off the State of the Union for President Biden. What our latest polling says about who might actually find themselves back in the White House or in the White House following the November elections.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and on Bloomberg Originals. We are Bloomberg Business Week on this Wednesday, April 24th. Carol Masser, Tim Stenevec. And Tim, we've got 3 stocks on our radar over the next 2 hours.
Yeah, Mattel shares having their best day in months. This after the company reported first quarter earnings. We're going to talk to the CEO, Ynon Kreiz, in just a few minutes. Also higher, shares of chip bellwether Texas Instruments.
Yeah,
Carol.
quite a run there, getting the most in years. So what does it mean for the chip sector overall? Our own Chip King joining us in just a moment. And then, of course, as we said at the top, Meta Platforms after the closing bell.
It's up almost 40% so far this year.
I mean, unbelievable. And
Tesla down 40% so far this year going into yesterday's print.
I think it nearly doubling last year?
Last year, yeah.
Like it was unbelievable the run that it's seen since it's gone back to focusing on kind of advertising.
It's almost like they shouldn't have changed the name to Meta Platforms and should have just called it.
It's done.
But
It's done. Tickers change and everything.
I do also want to say, toward the end of our program, we got an update on the Bloomberg News Morning Consult poll, which here at Bloomberg News we're doing every month ahead of the election, talking about swing states and what those voters are looking for. What our latest polling says about who might find themselves in the White House following the November elections.
The economy's stupid, I'm just going to say. Not you.
You're talking to me, okay.
It's the economy again. All right, let's get a check on the day's trade and your top business stories. Over to John Tucker. He's in for Charlie Pellet. I saw you smiling there.
He's back. He's back Monday.
Okay.
So you miss him, don't you? After 2 days of advances, the major stock averages are lower to a little change. S&P 500 right now almost evenly split between gainers and losers. Tesla jumping over 1%, saying yesterday it would accelerate production of new, more affordable vehicles. And in the batter's box for the Magnificent Seven cohort of stocks, Meta Platforms, those shares, they are up right now ahead of the earnings report after the close. Down, I should say, 1.1%. Kate Moore at BlackRock says, a critical part of this earnings season is going to be the tone that is set by management in the earnings calls.
And I think there's been a lot of good news priced into a lot of the big tech companies, but this is a chance to really kind of show me what does the rest of 2024 look like? How are we thinking about AI spending? What does customer demand look like? And then we can go from there.
Right now, the S&P 500, 10 points lower. That's down 0.2%. We're at 5,060. Dow Jones Industrial Average, 94 points lower. That's down 0.25%. The NASDAQ Composite Index right now, 30 points lower. That is down 0.2%. 2-year yield up 2 basis points. 493. The 10-year is 4 basis points higher. That's at 464. This one is from the Journal. Very interesting story. The Justice Department, they say, conducting a criminal investigation into the consulting firm McKinsey. And this is related to its past role in advising some of the nation's largest opioid manufacturers how to boost sales. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tim and Carol.
No, thank you so much for that update, John. Do appreciate it. Hey, Mattel shares earlier in the session having their best day in months. This after the company reported a smaller than expected adjusted loss per share for the first quarter, benefiting from lower costs and fast sales, Carol, of Hot Wheels.
Of Hot Wheels. First quarter revenue, though, was sluggish, falling less than 1% to $809.5 million, coming up short of Wall Street projections. But that Hot Wheels segment registered growth of 5%, nearly countering declines in dolls, toddler toys, games, and action figures.
So back with us is Mattel Chairman and CEO Ynon Kreiz, joining us from El Segundo, California. Ynon, good to have you back with us. How are you?
Great to be here. Thank you for inviting me.
Well, I want to start with Hot Wheels, given that the segment posted another quarter of strong growth. I'm curious if you expect the brand to continue to outpace the other brands in the portfolio for the rest of the year and even for next year as well.
Well, let me start with kind of pulling back and say that we're off to a good start of the year with significant gross margin expansion and very strong improvement in free cash flow, with positive consumer demand and improving trends. We are executing on our $1 billion share repurchase program and just bought $100 million of shares in the quarter. And looking ahead for the rest of the year, we expect to benefit from innovation across our toy portfolio, meaningful progress on our entertainment strategy, and greater efficiencies and cost savings. When it comes to Hot Wheels, you said it right. It's such a great brand. It's an incredible canvas of opportunities. It was up in sales. This is really about growing the adult space through expansion of the collector series, both at mass retail and Mattel Creations. It's about broadening our distribution globally, accelerating growth in RC and skate. And of course, we have an incredible animated series on Netflix, which has been a top 10 program in 69 countries. And all of that while we continue to drive and amplify our core die-cast line. So really bringing together the Mattel playbook about brand purpose, consumer-centric innovation, cultural relevance, and franchise mindset.
Hey, I always wonder, Ynon, and we've talked about this before. Nice to have you back with us, by the way.
Thank you, Carol.
In terms of taking product and creating the success like you did with the Barbie movie, but how do you take the toys, put it in a series, you know what I mean, and that it translates into sales? How do you guys track it? How do you really see that impact?
Well, this really goes back to how we now see the role that we play and how we think of people who buy our product, not just as consumers, but as fans that have an emotional relationship with our brand. And what we do, we take successful toy brands, toy franchises that also evolve from being items into play systems. We take those brands and transcend them to other categories, other domains, other verticals in entertainment. Think film, television, consumer product and merchandise, location-based entertainment and theme parks, digital experiences, music, all verticals that are driven by big brands, big franchises that have a built-in fan base. And so we bring those brands and we then extend them to these domains. We have experts within Mattel that do that. The Barbie movie is a showcase for the potential of what we're looking to do. But it's important to say it's not just about movies and not just about Barbie. It's about our portfolio and the incredible opportunities we have across multiple categories to participate as the owner of one of the strongest portfolios in the world in children and family entertainment.
Well, on Barbie and on the movie, was it a demand surprise in the quarter that Barbie didn't perform as well less than a year after the movie release? Was that bump seemed kind of limited in just the months following the release, at least according to the most recent quarter?
Well, Barbie is such an incredible brand. The success of the movie is here to stay for a long period to come. It's not just about the quarter or about the year. It really is about years to come that will benefit from the halo of the movie and how the brand has extended its audience and fan base bringing in adults, bringing in men, and really playing at a very high level across the world. Barbie is the #1 doll property globally and continued to gain share in spite of comparable sales to last year. This year, we're celebrating Barbie's 65th anniversary. There are multiple activations, including 3 new segments that we are introducing. We expect more shelf space in the second half of the year. There's an expansion into the adult collector line and continue to engage more kid audiences with content on Netflix. There's a new series and a new animated movie on Netflix. There's also a new video game, a new mobile game that Take-Two will publish later this year. So there's a lot more that is happening around Barbie, and the success of the movie and the brand as a whole will be here for years to come.
Well, no doubt about it. Like, you think about these brands and how iconic and how long that they have been around. I guess, the question is, right, like when it's out there culturally in our universe, great thing, right? There's a lot of buzz. I mean, SNL, Saturday Night Live this weekend, Ryan Gosling, like, trying to break up with Ken and did a whole spiel on it. It was really kind of funny. But just the impact that movie has had on him and playing that, role, based on the iconic Ken doll. Having said that, I think people are always curious about, all right, so how does that translate in a big way into selling more Barbies and other Mattel toys and Hot Wheels? Do you guys see it? I mean, does all of these investments and time and energy really make a difference, financially?
Absolutely. The opportunity is significant. And, Barbie is so much more than a doll. Barbie is a pop culture icon. And what you saw in the movie is a showcase for how far Barbie can travel. Our business model is to continue to grow our IP-driven toy business and at the same time expand our entertainment offering. So this is very symbiotic. We still see significant upside potential in our toy business, and the opportunity is to now participate in other verticals that we expect will be accretive to our business model separately from toys. This is not about selling toys. This is about creating value, capturing value in other categories. But of course, success in the movie reflects back in toys and in location-based entertainment and mobile games. It goes across multiple directions. And of course, a strong toy is a great foundation to extend into entertainment verticals. And this is really the business model where we look to capture value both on the toy side of the business as well as in entertainment verticals.
Something we've talked about before, and I'm always curious about the people who are knocking on your door following the success of the Barbie movie and who are saying, wait, there's something we can do here, whether it is, you guys are already on Netflix, but I'm just curious from the content creation world, what the world has been like for you guys in terms of conversations and new opportunities, how that volume, can you quantify it, how it's amped up?
Well, we absolutely saw an increase and a lot of excitement around the potential of our IP portfolio and the brands that we own. And we have 15 movies right now in development that we've announced already with some of the most prolific creators in the world. And there are more projects that we're working on that we haven't announced yet. Mattel Television is thriving with 13 shows and specials that will be broadcasted this year. And it's a great combination of animated projects, live action, movies, game shows, and the like. So there are a lot of the excitement around Mattel Television that is now showing content in more than 190 countries, in more than 30 languages. And likewise, we also extending our business into digital gaming, where the goal is to extend the physical play to the virtual world by creating digital games and experiences that drive sustained engagement for fans of all ages based on our intellectual properties.
Barbie 2, or does Ken get a movie? Can you share?
Well, without getting into the specific of the next Barbie movie, or the potential of it, the opportunity for Mattel is to develop film franchises. And we've always said that this is our goal, to develop brands that can have multiple touch points and engagements with fans. And we look to continue to broaden our film offering and create exciting and cultural, societal, purpose-driven movies that will excite and delight fans of all ages around the world.
I hope that's a yes then.
Carol, you're like the biggest Barbie movie fan I've ever met.
I grew up with my older siblings, you know, I inherited their dolls. I have to say I love the movie. My daughter I went with, and we loved it. We laughed, we cried. I've got a Barbie t-shirt. I'm just going to tell you, I'm all in.
I think in the future, you have to recuse yourself from this interview, and I'll just interview Enon solo without this.
All right.
The Barbie element. Okay.
The Barbie baton is passed to you for a
Enon,
moment.
back to the quarter. You know, the first quarter for toy manufacturers can be a challenging one. It comes just after Christmas and a lot of, you know, the fourth quarter buying that happens during the holiday season. But there was Easter earlier this year than typically, and at the end of March. And I'm wondering what you saw when it came to Easter sales.
Yeah, we do believe that an earlier Easter benefited the first quarter, and we did say that it hasn't changed our expectation for the industry to decline in 2023, although at a lesser rate than in 2024, although at a lesser rate than 2023. And we believe that the trends will further improve and that the industry will return to growth and continue to grow over the long term. At Mattel, we did see positive consumer demand and improving trends through the quarter and expect to outperform the industry and gain market share for the full year.
Hey, what about Fisher-Price? Because there's some new products from Fisher-Price coming out in the second quarter of the year, including the wooden toy line. Give us demand expectations, sales expectations for the line, for the quarter and for the year, and for the brand.
Yeah, we're very excited about our strategy for Fisher-Price. We just announced a new leader that started this week. The Fisher-Price is by far the largest segment of the infant, toddler, preschool category. We saw increase in consumer demand in the quarter. This year, Fisher-Price will expand its core product, enter a new wood segment. We are expanding our Little People collector line. We're broadening Thomas. We're relaunching Barney and extending licensed entertainment with Jurassic and Star Wars. So there's a lot that is happening around Fisher-Price. Watch out for the new wood line, which is a very exciting addition.
Why did that line take so long? Wooden toys have had a comeback for years.
You know, it takes time to develop quality product. This is what we do. This is our specialty, and we focus on quality and innovation. And this is another extension of the line. And at the same time, we continue to exit lower margin segments to focus on profitability and performance. We do expect Fisher-Price to grow in the year. It's a valued asset as part of our portfolio, and we're very confident about the long-term growth potential of this important brand that will be celebrating its 94th anniversary this year.
I have to say, Fisher-Price, we had a bunch of Fisher-Price. I had the school. My brother had the airport.
We have a bunch.
I'm going to tell you, Enon, the Office Little People collector series, Tim Stanovec had it.
Oh yeah. I actually have them at my desk. They're good. They're good for adults.
You see, I mean, this is another example. How brands transcend culture, transcend age, transcend demographics. You take a brand that is designed for infant and toddlers, and it becomes a form factor that is now a collector line through partnership with cultural and societal brands and icons that excite and delight you, Carol, right? It's great to hear.
I'm just telling you, we're waiting for the Bloomberg Business Week radio, TV version. I could see it happen. I don't
know.
John Tucker, you'll be a part of that too. I think it would be very cool.
I don't know if it has the same necessary demand as The Office. You know, and I don't know.
You never know.
You never know, yeah.
We always appreciate all the time you give us, and really fascinating to see what's been going on at this company. And really, iconic brands, when you think about branding, Mattel really has so much of it. Enon, be well. Good to talk to you. Ynon Kreiz, he's Chairman and Chief Executive Officer of Mattel, joining us from El Segundo, California. Just a quick check on what Mattel shares are doing. They're up about 3.25% in today's session.
Yeah, earlier in the session, Carol, it was the biggest move going all the way back to 2022. Right now, it's the biggest move since February, but we're seeing highs from earlier this month.
Really appreciate his time. Coming up, everybody, Texas Instrument shares having their best day in years. Ian King joining us on the other side for the importance of that. This is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks struggling to gain traction after their biggest gain in 2 months. Investors also waiting results from Meta Platforms. Its fellow mega cap Tesla surging 11% in today's trading after they reported results after the close of trading yesterday. Nvidia halting its 2-day rally. Right now, that is down 3%. 2 more of the Mag 7 stocks they report tomorrow. That's going to be Microsoft and Alphabet. And Texas Instruments shares up 5% after their earnings struck an optimistic tone, that is. And Moody's ratings downgrading Boeing's credit rating to Baa3 from Baa2. This is according to a statement today. The rating outlook is negative. And Treasury staying lower in price after a record $70 billion auction of 5-year notes that tailed slightly. Right now, the S&P 500 just 2 points lower, 5,068 on the index. The Dow Jones Industrial Average is 56 6 points lower, and the Nasdaq Composite Index, that's up 2 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tim and Carol.
Thank you so much for that update, John Tucker. Well, Texas Instrument shares jumping as much as 9% in trading today. It's the biggest intraday gain in going back more than 4 years. This after the chip maker's revenue forecast indicated that a slump in demand may be easing.
Yeah, this is certainly on our radar. John was just talking about it. You mentioning it. The report suggesting that customers have begun to resume ordering chips after working through stockpiles of components. It's a good sign for the broader industry. We do look at TI as a bellwether. Ian King is Bloomberg News U.S. semiconductor and networking reporter, joining us once again from our San Francisco bureau. Ian, good to be checking in with you. TI. Put it in perspective, the importance of what we hear from Texas Instruments, because it's, you know, as you always remind us, not every chip company is the same. So these results from TI, what does it kind of tell us more broadly?
A couple of things at play here. First, as you mentioned, these guys are a bellwether, whether they like it or not, and really they don't like it. They have the largest customer list of any chip company. They have the largest range of products. We're talking tens of thousands. You know, they're in everything: space hardware, military munitions. They're in your TV. They're in your car. They're anything with an on and off button. There's likely a TI chip in there. So they are somebody worth looking at in terms of what way their numbers are headed.
Apple, Arrow Electronics, Tokyo Electronics, Denso, just some of the customers: HP, Lenovo, Continental, Microsoft. The list goes on. Ian, just again, perspective, I want to start big here because we have some time with you. Who are competitors for TI, those other types of companies out there that have the same wide customer base or something similar?
Yeah, I mean, somebody like Analog Devices, a chip maker based on the East Coast, would be, the closest competitor. But a lot of the conversation on the call yesterday and the conversation I had with the CFO afterwards are really focused on what the Chinese are doing in terms of their build-out of new chip plants, basically trying to displace some of the orders that their local manufacturers there have to give to TI right now.
Yeah, it's interesting. Does it tell you something more broadly, though? Like, I was looking at the stocks, and earlier we did see a bit of a rally across the board. I'm just kind of pulling it up on the Bloomberg for the highs and lows here. So, Ian, it was up about 3%. The Philadelphia Stock Exchange Semiconductor Index up 3% at its high, still about 1% higher. But is there something we can say, if TI does this, then we can make the conclusion that this is what it means for other players in the sector?
Yeah, I mean, this is the countercurrent here that is part of what TI does, which is they don't want to be the spokesperson for the whole of the industry. And they spent, 40 minutes on a call trying to talk down analysts who are getting excited and looking for the slightest sign here. I mean, what we're talking about really in the second quarter is a difference between a decline of 16% and maybe a decline of 12, 13%. So that's hardly time to throw a parade. But what people are looking for, as you guys know, is the first signs. And what TI had to say, even though they didn't really want to be explicit, was some of these key industrial sectors that they sell into, they're no longer getting rid of inventory. They're no longer cutting orders to get rid of inventory. They've switched to a more neutral stance, which, as we've seen today in the stock market, is being taken as a sign of, hey, maybe we've hit the bottom. Maybe we're reaching the bottom. Maybe it's time to get involved in this stock and look at a broader upswell of orders that might come through perhaps in the later half of this year.
Key industrial sectors or key industrial companies, what are the types of companies or even company names that TI would be referring to here without referring to them?
Yeah, I mean, automotive is a huge sector for them. So a lot of the chips that they make do things like convert power. So if you're looking at EVs, something has to change that battery power into something that the motor can actually handle. That kind of a core component, all kinds of other things, button presses, motion sensors, all of these things in industrial equipment, robots, just pieces of factory machinery. They really are in everything.
So cross this with some of the other headlines that we certainly have been talking about, and you have. I think about earlier this month, TSMC, right, lowering their market outlook, right? That's another one. When they say something, we all kind of sit up a little bit straighter when it comes to what's going on in the semiconductor industry. We saw that one really drop on that news. Remind us how you kind of put the pieces together, especially on some of these big names that when they make some announcements or they report earnings.
No, that's a very good question. And you mentioned two companies with TI and TSMC that have a very broad reach, but still different parts of the market. TSMC is primarily digital chips, so it's doing very well for the AI, that kind of area, all of these really high-end processors, but still smartphones not so great. Same thing for TI. They're saying that the basic components that go into sort of personal electronics are actually, that's not too bad of a market. It's kind of normalized. But again, we're not seeing it shooting off the bottom and growing rapidly. Other markets to look at, telco equipment, still pretty horrible, still going down badly. TSMC, again, was talking about the PC market, and we'll hear more about that from Intel tomorrow. Again, TI components would be in PCs doing different things. And again, the market isn't brilliant. It's just not getting worse anymore. And that's kind of roughly where we are, I think, as a sort of a broad survey at this point.
Well, that's a good point, because again, and I know I repeat this with you, but I think it's always so important to understand where we are in the chip cycle. So you're saying not getting worse, right? So it can only kind of improve from here.
That's right. I mean, some markets like PC, like smartphones, they've got rid of their big overhang, which was inventory, which is like a doubling effect for how bad things can be. But that doesn't mean that we're all running out and buying new smartphones and new PCs. So the demand driver is still weak, but at least on the supply side, things have normalized. Other areas, such as industrial and parts of industrial and automotive, we've still got pressure on the supply side. There are basically still too many chips out there.
Okay, speaking of chips, we can't have you on our program and not talk about NVIDIA. Shares lower by about 3% today. Off of their all-time highs, Ian, by 16%. Still up 61% so far this year. The company doesn't report earnings until next month. What's going on with NVIDIA right now, given that there is so much interest in this being one of the Mag 7 stocks that doesn't report for a few weeks when so many other of them do ahead of NVIDIA?
No, I mean, it's back to that question of how do you price this company. A recent report by, I think, Cowen said, look, there's nothing to see here in terms of the numbers. They are literally sold out. They are going to be able to sell as much as they can make and obviously be able to charge a lot of money for that. So that's pretty good. If you look at their forward PE, it's not actually that astronomical compared to a lot of other companies. So if you look at the fundamentals and even some of the ratios, nothing to see here. There's nothing changing in direction. It's really what we've seen, I think, which is a reevaluation amongst investors who've poured an awful lot of money into a very few names. We saw a huge run-up in, for example, ARM as well, and that's come off from its peaks as well. So it's really more of a trading argument. Where do you allocate your investments versus has something fundamentally changed in the fortunes of this company? Because right now that isn't the case. They're still going up and to the right.
Hey, listen, as we work our way through earnings season, and I feel like it's always a countdown to NVIDIA, so that's kind of a month away here. We've got Intel coming after the close tomorrow. So how are you thinking about, and I always kind of try to think about what our audience is hearing and listening, kind of what they should be watching for as we go through the various chip names, not all the same kind of chip company, if you will. But what are you kind of keeping an eye on generally?
I mean, Intel is still a giant story, as they've already shown us. Things are still rough there. They're still spending a lot of money that they don't have. Things are still getting worse for them. At this point, it's just a case of the extent to which they're getting worse. And obviously those that want to be an investor in Intel and want to support it are looking for a bottom. Other companies, we've seen Qualcomm rally. Well, Qualcomm had kind of been left behind by this broader rally in chip stocks. Now we're seeing it get some kind of an interest. And that's really, I think, a bet on the smartphone market isn't getting any worse, and also maybe some of these adjacencies that Qualcomm keeps talking about, the PC market, getting AI into your phones, maybe they start to pay off. Maybe people are paying attention to that. So I think people will be looking for concrete signs of some kind of progress and change, at least on those two big names.
All right, great setup. Thank you so much as we work our way through this earnings quarter. Ian, as always, thank you so much. Bloomberg News, U.S. semiconductor and networking reporter, our own Ian King, joining us there from our San Francisco bureau. Just taking a look at the Philadelphia Semiconductor Index. It is Stock Exchange Index, excuse me, up more than 8% so far this year. And we have seen a bit of a pop on the news from Taiwan, what can I throwing them all together? Texas Instruments, forgive me. The stocks, though, way off its highs earlier in the session when it was up about 3%, now a gain of just shy of 1%.
Okay, mixed market right now. The Dow lower just by less than 0.1%. The S&P 500 higher by just the same. The NASDAQ up by 0.1%. And Meta down 0.4% ahead of earnings.
A lot of bumping up. Coming up next, we drive to the close with Lizanne Saunders over at Charles Schwab. Right now, though, World and National News off to Amy Morris. She's in D.C. Hey, Amy.
Hey, Carol. President Biden has signed a $95 billion national security package into law, promising assistance to Ukraine within hours. The president says this new law makes the world safer.
If Putin attacks a NATO ally like he's attacking Ukraine today, we'd have no choice but to come to their aid, just like our NATO allies came to our aid after the September 11th attacks. That's why we're supporting and surging support now to Ukraine, to stop Putin from drawing the United States into war in Europe and in the future.
The new law empowers the president to seize an estimated $5 billion in Russian assets in U.S. banks and repurpose them to assist Ukraine. That package also includes a measure that would ban TikTok in the U.S. by next year unless its owner, ByteDance, sells it. Supporters say their goal is for ByteDance to divest, but in TikTok, CEO Shou Chu's words, quote, "Make no mistake, this is a ban."
Rest assured, we aren't going anywhere. We are confident and we will keep fighting for your rights in the courts. The facts and the Constitution are on our side, and we expect to prevail again.
TikTok CEO Shou Chu. Swing state voters simply not convinced the economy is improving under President Biden. A majority of poll respondents to the Bloomberg News Morning Consult poll see the economy worsening by the end of the year. The Biden campaign is counting on social issues, especially abortion, to help energize Democrats. And the Arizona House of Representatives has just approved the repeal of the state's near-total abortion ban. They've sent the measure to the state Senate. As conservative Supreme Court justices appear skeptical that state abortion bans violate federal health care law, even during medical emergencies. The Supreme Court today heard a case out of Idaho. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Yeah, I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, they are mixed right now. It's time to head over to the First Word breaking news desk for today's afternoon call. And let's check in with Bill Maloney. Hi, Bill.
And good afternoon, John. U.S. stocks in a choppy session with the Dow currently down 31 points. The S&Ps are higher by just a point, and NASDAQ gains 18. The U.S. 10-year yield at 4.65%. Gold is little changed, oil trading in the red, and Bitcoin, that's lower by 3%. Among the main 11 S&P sectors, leaders were consumer staples and utilities. Industrials and healthcare are under pressure. And leaders to the upside in the Dow, Walmart and Coca-Cola, while Boeing had a big intraday reversal and fell 3% after earnings and led to the downside. Also after earnings, Old Dominion Freight Line fell as much as 14%. That's the most since 2008. And in deal news, IBM is said to be near a deal for HashiCorp at about $35 a share. In the chip space, NVIDIA fell 3%. And wrapping things up, some of the names reporting after the bell tonight include Ford, Facebook, and Chipotle. Live from the First Breaking News Desk, I'm Bill Maloney. John?
All right, thanks a lot, Bill. And once again, the Dow down 21, S&P 500 up just 2. The NASDAQ Composite Index is 20 points. And here, live breaking news over your Bloomberg terminal. You can type SQUA on your Bloomberg terminal. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tim and Karen.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody, as we like to say, under
TikTok
18
or Meta
minutes.
Platforms?
Oh, wow.
Sorry, I just had
Meta
to go there.
Platforms would like you not to say TikTok.
Or maybe they would like us to
Or they
say
would like to say
TikTok should be gone and
TikTok
everybody would just
ban.
use Reels instead. Maybe that's what they want to say.
It'll be interesting to see if we get any kind of commentary around that. I'm sure analysts will be asking on the call. Meta Platforms, of course, their earnings, one of the big ones, if not the big one, after the closing bell today. Ahead of that, as John Tucker just laid out for you guys, we've been bouncing around on the equity side of things. It feels like there's no real conviction in the trade, but want to see what Lizanne Saunders has to say about that.
Yeah, very pleased to have her back with us. She is Chief Investment Strategist at Charles Schwab, and she joins us from Florida. Lizanne, how are you?
I'm good. How are you two?
Yeah, we're doing pretty well. We're not in sunny, Florida, but it is kind of
We're a little
sunny.
jealous.
It's still sunny up here.
Come on down.
Yeah, we're happy. We especially in the winter, we'd love to. I want to talk a little bit about some of the stuff you sent our producer Paul ahead of time, because I do find it interesting, given that you argue that the pullback that we've seen just in the last couple of weeks, last 2 days notwithstanding, has kind of masked some underlying declines that we've seen take place in some of the major indices. Talk a little bit about what you're looking at.
Sure. So there has been this focus just on the recent weakness and the 5% or so pullback that we saw in the S&P and the NASDAQ, as if that was the only underlying pressure. But the reality was, even when the market, the S&P, the NASDAQ were at or near all-time highs, you had a lot of churn under the surface. As a, for instance, using the NASDAQ as admittedly the most extreme example, again, you haven't had more than a 5% drawdown from a year-to-date high at the index level. However, the average member within the NASDAQ has had a maximum drawdown on average of 32%. So that's bear market level declines. It's just happened through a process of rotation and churn. That's not a bad way to correct sentiment excesses, correct concentration excesses. I think probably most investors would choose a rotational correction as opposed to the bottom falling out all at once. But that's the real story, is you have to peel kind of a layer of the onion back beyond just the index level changes.
Is that largely some of the NASDAQ names or the broader market overall, Lizanne?
It's mostly the NASDAQ in terms of that kind of underlying weakness. I think it's about 25% maximum drawdown on average for members within the Russell 2000. So clearly it's the smaller cap. It's only about 12% for the S&P 500. So there's definitely been weakness heading down the cap spectrum into where you have the most interest rate sensitivity, the non-profitable zombie companies. So that's where the pressure has been most acute.
So what does that say to you, that there's opportunity for room to the upside, or how do you see it? And I feel like you can't think about that without thinking about, okay, what ultimately the Fed may or may not do, as the expectations around rate cuts have come down dramatically.
Yeah, so I think yields have been more in the driver's seat for what the market has done versus just expectations around Fed policy. It's kind of a parlor game that everybody's playing now of, when will they start, how many cuts, and they're data dependent. So the data is going to dictate that. But in the meantime, the big move down in yields that started at the end of October last year to the early in the year low of 3.8%, that was a huge tailwind for the overall market, for small caps. And then the move up initially really hurt small caps because that's where there's greater interest sensitivity. But then more recently, some of the larger names. I think the leadership that has been dominant in the past month or so will probably restart after we go through this choppy phase, and that's in areas like financials and energy and materials. That doesn't mean there aren't still opportunities in everybody's favorite sectors like tech and communication services, but I think that cyclical leadership has got legs.
Is that financials, energy, materials? I'm trying to think how to read that. Is that because there's economic activity? Is that because for financials, a higher rate environment can mean good things? Is energy because of geopolitics?
They're individual reasons. You've got obviously geopolitics and oil with energy. You've got oversold conditions that developed obviously in financials with last year and the mini banking crisis. Materials is a play on commodities. But broadly, I think it does reflect at least some sign of improving global growth. And, really the kind of growth trio of sectors, the tech, communication services, consumer discretionary that house the Magnificent Seven, they've almost become this era's defensive type names. And I think given the stability and strength in the economy, that we finally saw some money shift to those more classic cyclicals. And again, we think that has some legs.
It's interesting. I was looking at thinking of some of the data. Was it German confidence or consumer confidence number that came in stronger maybe today? I feel like there's been some news coming in slowly out of Europe that maybe things are not as bad. And I do wonder, Lizanne, if we are setting ourselves up, maybe even China, could it be this year that finally we see some significant momentum? Certainly the numbers seem to suggest it, despite the skeptics. But we've been kind of ruling all of this out and saying the U.S. is the best game in town. But if we get more global growth, as the IMF has suggested, could that be really a boom, if you will, certainly to the global equity story?
So it's hard to envision a boom kind of scenario, especially
maybe that's
in China,
extreme.
But Carol, the way you asked the question initially, I think you used some important words, which is less bad. We have to remember that when it comes to data, economic data, earnings data, whatever it is, and market behavior, it's human nature to think of economic data, earnings data in good versus bad, strong versus weak. But better or worse tends to matter more than good or bad. And it's just those inflection points when things stop getting worse and start getting better, that can be the launch point for sectoral changes in terms of where leadership is, better market performance. You don't necessarily need to see a significant acceleration, just that inflection from bad to less bad to maybe getting better.
So we're all eyes on Meta in just a few minutes, Lizanne, and I'm wondering about what this could tell us about the greater economy, if it's any sort of bellwether to you, given the vast majority, I can say all of the revenue comes from advertising at this point, a lot of small business advertising as well. And how you're thinking about big tech earnings as we sort of get into the swing of earnings season right now.
So as you know, I don't cover individual stocks, not Meta or any of them. I think the most important aspect to the earnings, particularly this week, some of the big high-profile names, is not just about, okay, did they beat the consensus estimate for the quarter, but the differential between top-line growth, bottom-line growth, maintenance of profit margins, and importantly, the outlook. Because back to the better or worse matters more than good or bad, there's been so much enthusiasm for maybe now a subset of the Magnificent Seven, and the data is likely to continue to be really good. But we're starting to appropriately ask the question: has the expectation bar, either figuratively or literally, gotten set too high? And that, I think, was part of the reason for some of this volatility. So that's what I'm paying attention to this week and next.
So great to check in with you again. Lizanne, be well. Lizanne Saunders, Chief Investment Strategist at Charles Schwab, joining us from Naples, Florida. Folks, just about 10 minutes left in the trading session, awaiting, of course, Meta Platform earnings. We're going to be breaking that down. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the companies we're following today. AMC Entertainment Holdings, this the struggling movie theater chain, awarding the chief executive officer, Adam Aron, compensation of $25.4 million last year. His pay included a salary of $1.5 million, along with equity and cash bonuses of almost $24 million, according to a filing today. The shares lost 85% of their value last year. AMC also expected to report first quarter financial results in early May, with analysts forecasting a 10% drop in revenue. Through the weekend overall, domestic box office sales down to 18% this year industry-wide. That's according to data from ComScore. This one from the Journal, the Justice Department conducting a criminal investigation into consulting firm McKinsey. This is related to its past role in advising some of the nation's biggest opioid manufacturers on how to boost sales. A federal prosecutor is also probing whether McKinsey or any of its employees may have obstructed justice. This is in relation to its records of its consulting services for opioid producers. The Journal is citing people familiar with the investigation, which has actually been ongoing for several years. And they say a grand jury has been impaneled in Virginia as part of the federal investigation into McKinsey's opioid-related consulting. And Netflix betting big on Latin America to expand its viewership. For example, in the middle of a vast swath of farmland, a windy 6-hour drive from Bogota, Colombia, lies the heart of the biggest Netflix production ever attempted in Latin America, spread over 21 square miles of sets, tents, and stages. This is part of the masterpiece, 100 Years of Solitude. And that's your company news.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we are getting ready to head over to our TV colleagues, wrap up this trading day, and do a slew of earnings, including Meta Platforms, which will cross after the close. That'll be the big one. In the meat, what?
Whirlpool, Ford, Raymond James, IBM, Chipotle, ServiceNow, Lam Research.
Say it now.
All those
Say
reporting.
it with meaning.
All those reporting.
Go team.
All right, I know you want to talk about a little fashion.
Reading in this
Fashion.
morning, the New York Times, love the story. It's about the metamorphosis of Mark Zuckerberg by Vanessa
the
Friedman.
Metamorphosis.
He's actually like...
Do you get it? Meta?
Meta
platforms?
I get it.
Okay.
Nice.
Yeah.
I saw what you did there.
Okay.
I saw
No,
what you
that's
did there,
Vanessa Friedman at the New York Times.
Having said that, it's about kind of a new Mark Zuckerberg, and there was a video image of him that started to go viral, basically because of the silver necklace he had around his neck.
Yeah, okay, so it's not because of the AI assistant.
No, this was real. This was reality.
I saw this happening in real time, okay?
Did you?
Yeah, because
Did
there
you
was
see when Gwyneth Paltrow?
No, I didn't see the Gwyneth Paltrow thing, but apparently a lot of people...
Is it the Shade Room?
I don't know.
I think there was a
don't have
picture.
any idea.
I'm now a follower.
Yeah, I have no idea what you're
I'm just
talking
going
about.
to tell you, I'm a follower of the Shade Room.
But there was this AI version of a photo of him with a beard.
Because he looked like Chris Martin, Gwyneth Paltrow's ex, and she's like, she commented.
He's so
apparently.
handsome. He's so handsome.
Yeah, it's kind of a different Zuckerberg, not the only T-shirt dude like.
But let's talk
around.
about the fashion element here.
Yeah, let's do it.
Because that's a big part of this. I mean, Mark Zuckerberg has been known to wear gray
T-shirts.
T-shirts. Like, yes, it's an expensive
Sweatshirts,
gray
hoodies.
T-shirt and hoodie. That was like what he did for 15 years.
Yeah.
Now, if you follow what he's doing when he's traveling, he's got some pretty good fashion consultants. Because
Chunky
he's now,
Shearling coat by Overland.
That thing is cool.
Yeah, kind of the Maverick Rancher coat.
I mean, he's going to weddings around the world wearing
That was
very
really
cool
cool.
stuff.
Yeah, an Indian wedding, I think it was, in kind of traditional clothes with he and his wife.
That Overland jacket is cool, right?
You're liking that?
Yeah, like cheap.
Don't go there.
No?
You can't do it.
Okay.
I don't know.
Can't pull it off, she tells me.
Got the stubble, though, a little bit already. Anyway, we're having some fun talking to Mark Zuckerberg. Obviously, the focus is going to be Meta Platforms, and they're going to be reporting after the close. We'll see if they live up to the run that they've
Did you
seen
see the
in their share
leather
price.
jacket, the Jensen Wong
When they
leather
switched.
jacket? Yeah, Mark Zuckerberg and Jensen Wong.
You guys do that all the time, right? You just switch jackets and check it out?
With who? I have no Jensen Wong in my life.
Not yet.
No Jensen.
All right, everybody. Check it out. Check out Meta Platforms earnings. They're coming your way in just a moment right here on Bloomberg. Beyond the Bell, by the way, starts now.
Beyond the Bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with Tim Stenovic and Carol Massar. Welcome to our audiences across all of our Bloomberg platforms here on another busy earning day. But unlike yesterday, Carol, unlike Monday, the price action in the market decidedly different.
It feels so tortured today. I feel like the back and forth that we're seeing in the equity averages, right? Little change at this point. Not the conviction that we saw certainly earlier in the week. And I think that's a good point. Does some of the earnings, does Meta Platforms change that potentially? I guess we'll have to wait and see, and we'll find out in a few minutes.
I did think, at least earlier in the session, Tesla and the rebound that we saw in Tesla stock today after yesterday's report, which, by the way, wasn't good, would set the tone for today's trade, but that certainly hasn't happened. And, you know, make no mistake, everyone's just sitting back waiting for Meta Platforms to report in a couple minutes.
Yeah, that's the thing, that even though there were some single stock specific stories coming off of earnings that definitely you saw some movement there, you really had to look under the hood to find the action. Of course, all of this is going to change in a couple minutes when we get those earnings finally. But a quiet day, definitely a wait and see sort of day.
Yeah, definitely a wait and see kind of day. And it gets to the question here as to what the market is really looking for. Are they looking for better earnings growth? Are they looking for better profitability? Or is this still about the Fed and economic conditions?
Well, that's a really good point. Liz Ann Saunders over at Charles Schwab, we just talked to her, and she says it's not really about the speculation of what the Fed will do, how many rate cuts. It's really about yields, what we are seeing in reality along the Treasury curves that's really in the driver's seat and impacting the equity trade.
All right, we get the closing bells here in New York. Let's get you through the numbers real quick before those earnings hit. The Dow Jones Industrial Average relatively unchanged on the day. It takes a while for these numbers to settle, but right now we're down about 30-something points on the day, or about 0.1%. The S&P 500 higher by about 2 points, a fraction of a percent, while the NASDAQ Composite higher by 16 points, or 0.1%. I do want to point out two big downdrafts that we saw today. The Russell 2000 down 0.4%, but a huge drop in the Dow Transports, down more than 2, and that was on the back of some bad earnings out of Old Dominion Freight.
All right, some good perspective there. Hey, in terms of the S&P 500, just digging into it broadly, 279 names to the upside in today's trade. Katie, 222 to the downside, 2 unchanged.
And you take a look at the sector level, taking it a step further. Of the 11 sectors, you had 7 in the green, you had 4 in the red. You look at what did well today. It was consumer staples, that sector up about 0.9%. You had utilities, consumer discretionary also rallying as well. You take a look at what was left out of the action, and to the downside, you had industrials leading losses down about 0.8%. Healthcare and financials too, not having too great of a day, but small moves overall, Carol.
All right, get to some of the individual gainers, and Tesla atop that list of the NASDAQ 100 and the S&P number 1. That one gaining about 12% in today's session. We know what it was all about, guys. Even though the quarter wasn't so great, the big excitement about Tesla saying, yep, we're going to accelerate the launch of less expensive cars, and that certainly got everybody excited. So again, Tesla shares up about 12% in today's session. Texas Instruments, another standout performer, had to do with earnings, up 5.6%. Top name in the NASDAQ 100. Its biggest gain in about 4 years. Company's revenue forecast indicated a slump in demand may be easing, giving a lift earlier in the session to the overall chip sector. And really quickly, a name that popped up among the biggest gainers in both the NASDAQ 100 and the S&P 500, CoStar Group. This one was up just shy of 9%, just off its highs of the days. And this one, again, up the most in more than a year and a half. It's an online real estate service company, reported first quarter results, beat expectations, and also raising the low end of its full year revenue forecast. So really some outperformance in those names.
Okay, let's talk about some of the decliners very briefly before we do get earnings from Meta. I want to start with a name that Romaine just mentioned, down 11%, Old Dominion Freight. Worst single day in nearly 2 years. Shares falling after the company's first quarter revenue only slightly lagged the average analyst estimates, but certainly sent some shockwaves throughout the sector today. Also, shares of Boeing falling, reaching a new 52-week low. Shares were up pre-market after the company reported earnings. First quarter adjusted cash burn of $3.93 billion was smaller than the estimated $4.4 billion, though it did move lower in the day as the day went on, and then just before 2 p.m., Moody's Ratings downgraded Boeing's credit score to 1 notch from junk as quality control issues weigh on the company's free cash flow. And then did also just want to take a look at what Meta Platform shares did today. Stock up nearly 40% so far this year, but finished they down by about half a percentage point, underperforming the broader indices. The company's expected to report revenue growth of 26% for the first quarter. And then the company's also expected to report revenue of $36.12 billion, the vast majority, of course, of that being advertising revenue at $35.57 billion.
Let's check in on yields here. This was a busy week for auctions, and while not all of them went well, the overall net effect of it is modest changes that we're seeing across the Treasury curve. You did see modest losses on the longer end of the curve. That pushed yields higher on the 10, the 20, and the 30-year yield by roughly about 4 to 5 basis points. Your 2-year yield, though, down ever so slightly by just about a point.
Yeah, so, I think what we should do is just talk a little bit about Meta at this point, because we are awaiting, obviously, that's the big one in the after hours. And we were talking to our Mandeep Singh, just kind of the role of AI in helping this company among its platforms really in ad targeting. Because I said to him, is AI really, really moving the needle financially on the balance sheet? And said, yeah, it is. And it is specifically when it comes to ad targeting. And so these are things to watch for as this company gets ready to report.
Well, think about all the negative sentiment around the stock 3 or 4 years ago when Apple made those IDFA changes, the idea that it wasn't going to let apps have the data that it previously had. Meta Platforms was able to pivot and adjust by using AI to better target those ads and better target content to its users to get people to use the app more and spend more time on it.
Well, I'm glad you brought that up, because I remember all the agita over that here.
It was a ton.
All you got to do is really, you go into the Bloomberg terminal and you look at that trajectory of revenue growth. Now, they did have a few bumps at the end of, was it late 2022, where they had a couple of those down quarters with a negative sign in front of it. But all told, the amount of revenue that they're generating, $40 billion in the most recent quarter, in the fourth quarter, I should say, and the numbers that we're about to get today, if you believe analyst estimates, are going to come in around $36 billion. That's well above, $10 billion above where we were just a couple of years ago.
Yeah, it's quite a turnaround story. And remember, last quarter, they initiated that dividend, which really speaks to this is a mature company now that they feel comfortable enough that they actually are starting to give back cash back to shareholders. I mean, those are some of the stories that I'm interested in, because I really took that as a signal.
It's also a company that's up, 194% last year, and then again up about 40 this year. They are crossing. Romain, you want to kick it off?
Absolutely. Meta Platforms crossing the wire right now. Let's walk you through the numbers here for the first quarter here. The company's seeing adjusted revenue coming in at about $35.6 billion. That's slightly above street estimates of $35.6. EPS coming in at $4.71 a share. The street on average was looking for $4.30. Here's your guidance for the second quarter. The company sees revenue of $36.5 billion to $39 billion. Now, the top end of that range of $39 billion is just ever so slightly higher than the average of street estimates, which was for $38.2 billion. You see the share reaction there, down about 9% here, but there's a lot more in this release, guys. Jump in when you see it.
Yeah, perhaps that's why shares are lower, is because when it comes to the second quarter revenue expectation, it is, just slightly above at the top end, the consensus. I do want to note that the family of apps revenue for the first quarter did come in quite a bit above estimates, about $500 million above estimates at $36 billion versus estimates of $35.53. And then there was the operating loss from first quarter Reality Labs, which came in below estimates. It was expected to lose $4.5 billion. It only lost $3.85 billion.
But even still, I mean, you take a look at expensive, even with that more narrow than expected loss when it came to Reality Labs, full year total expenses between $96 billion to $99 billion. Previously, that had been seen between $94 billion to $99 billion. So, Carol, I'm not good at math, but that is a bigger range and a higher range.
And that's the commentary that certainly, like you are, catching my attention. So it says, as you said, full year 2024 total expenses range of 96 to 99, up from 94 to 99 due to higher infrastructure and legal costs. They also say we anticipate our full year 2024 CapEx will be in the range of 35 to 40, increased from a prior range of 30 to 37 billion, as they continue to accelerate their infrastructure investments to support artificial intelligence roadmap at the company. So again, spending more, expenses are more. I think that's got to be catching attention by investors.
And they say that's going to extend well beyond 2024.
Hey, you guys keep checking out Meta Platforms. I'm looking at Ford right now. The company sees first quarter adjusted earnings per share above estimates at 49 cents. Estimates were for 42 cents. We're seeing shares in the after hours move higher by 3% as we speak. Ford still sees fiscal year adjusted EBIT of $10 billion to $12 billion. Estimates were for $10.45 billion, Romain.
All right, let's, I just want to just bring you some news coming on IBM. We were expecting to get their earnings. Their earnings haven't crossed yet, but they have. actually now confirm what Bloomberg has been reporting, that deal to buy HashiCorp. They say they are going to use cash on hand. It's about $35 a share. Based on Bloomberg estimates, that would value this deal at around $6 billion. Again, we're still looking for the actual earnings results, but they are confirming that they are going to buy HashiCorp with the cash on hand. Actually, now, Katie, we are getting the rest of those numbers on IBM.
Yeah, you see that IBM first quarter revenue coming in at $14.46 billion. That is versus $14.25 billion year over year. When it comes to their cash flow, they still see full year free cash flow at about $12 billion. You take a look at what shares are doing right now, and they're tanking, Carol, currently down almost 6%.
Yeah, this is kind of interesting. I mean, something we've been looking about is some of their consulting under focus. This is a big company that certainly consults a lot of other companies. We saw Accenture slump, so we're going to look for some more insight into that. But yeah, you're looking at shares of IBM down about 5% in the aftermarket. And a quick check on Meta, if I may, as we head out, guys, we're seeing that stock down about 10% in the aftermarket. So a big hit certainly to that name. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place, tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. We're watching shares of Meta Platforms down 10% after the company reported revenue that came in above estimates, $36.46 billion versus estimates of $36.12 billion. The concern, it looks like, Carol, that investors have is all about that guidance. Second quarter revenue expected to come between $36.5 and $39 billion, whereas estimates were for $38.24 billion. This is essentially the second quarter sales forecast lagging at least at the midpoint, but we're seeing a kind of an outsized reaction in the after hours.
Yeah, it's kind of interesting, and we're going to need some, kind of color around these numbers, and also this, increase in expenses potentially and spending. Let's get to it with our Bloomberg News contributor, John Ehrlichman, who follows the tech sector and has for a long time. John, joining us from Toronto. John, the stock is sinking in the aftermarket. I mean, it's had quite a run here in 2024 already, but again, shares of Meta down about 10%. What jumps out for you, and why do you think maybe investors are so disappointed? Is it all about that outlook?
I think, Carol, at the end of the day, you and Tim have outlined all the considerations that are playing into the stock decline. Let's certainly wait for some details on the conference call later on how the AI roadmap is playing out. But I think the context here is very important. So you were talking about the run-up in the stock last year and the continued rally this year. It's easily outpacing all the digital ad players because not only did they prove to Wall Street that they can deliver, we saw that in the previous quarter, but also that they have been seen as one of the earliest big winners in big tech around AI. You could argue it's Microsoft and Meta that have shown the strongest ability to implement generative AI, work it into the system. So Tim was first to talk about the revenue number for the current quarter, possibly ending up being a little light versus expectations, although in theory, based on the guidance they're giving us, it could be a little bit stronger. You highlighted the expenses. I think the fact that they are communicating around those expenses being impacted by their AI push, that's going to have to be a decision that investors make, because when this stock lost basically 2/3 of its value in 2022, people were concerned about spending on the metaverse with an unclear roadmap. Most of Wall Street these days thinks that it is worthwhile to spend on AI, and heck, they know how much those NVIDIA GPUs cost. So there seems to be a willingness to spend if it will mean bigger returns. You did see the revenue number for the current quarter, pretty strong. This is the strongest growth we've seen from them in 3 years' time. So I think we're going to have to let the math fall. The simplest part of this story is that expectations were high. The stock had rallied a lot. Completely different story than Tesla yesterday. And let's see if they give us more details on the AI.
Yeah, I think you bring up a really good point about the stock being up close to 40% so far this year, expectations being high, just with the run-up that we had last year, too. I do want to bring in also Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, who's just now looking at the numbers as well. Mandeep, the stock down about 9.6% right now. You set up the call in the print in a great way for us earlier on the program. Your reaction to the numbers?
Well, so I would echo what John was saying, that the focus is more on the spending and the guide, and the fact that they raised the CapEx guide by more than 10%. I mean, investors are very fearful whenever this company talks about spending more. I think the alarm bells start ringing.
I heard somewhere you got to spend money to make money.
Well, so I think in their case, the fact that they go so big, and in the past they haven't cared about what investors think, and it can be kind of a difficult scenario for people to imagine if the growth were to slow down, and they're talking about raising CapEx, raising OpEx. Is it 2022 all over again? And that seems to be the reaction.
Ad impressions up 20% in the quarter compared with the same period last year. The average price the platform is able to charge per ad is also up 6%. Or Alex Barinka weighing in on this. This gets to the point with what we talked about earlier. Like, I get it. Everybody's excited about AI. You seem to say that in terms of ad targeting, it makes sense in terms of what they're doing. So for you, who understands this company like no other, like, the spend makes sense, or again, it's, Mandeep, a little bit of a balance here?
If they had said, okay, we are raising our CapEx and we expect to monetize Llama 3, our latest model, in this way, then I think it would have been a lot more palatable. Right now, the guidance is more about we are raising our CapEx, we are raising our OpEx, and there isn't anything. Maybe we learned that on the call.
What's the question you would ask?
How do you plan to monetize generative AI beyond the ad targeting? Everyone can see the proof in the ad pricing numbers, and this quarter was great. But how do you go beyond monetizing Gen AI separately? Because Meta does have an engagement problem, as I was alluding to before.
Right.
Their Blue app is losing engagement. So you somehow need to offset that somewhere else beyond the TikTok ban hope that everyone thinks is going to benefit.
John Ehrlichman, I see you nodding here when Mandeep is talking about Meta's engagement problem. I mean, I don't know about you, but at least when it comes to the Reels function, the TikTok clone in Instagram, I mean, sometimes I sit down with that thing and, suddenly I look up and 20 minutes have passed and I'm like, how did I just waste 20 minutes of my life with this
That
thing?
happens at Bloomberg headquarters.
Pull yourself out. Pull yourself out, Tim, if you can.
That's right.
Look, Mandeep has done some of the best work on implementing AI so far, and I think actually we'll have a better conversation once Alphabet reports its results, because it was Mandeep who said to me, if they can prove that their search business is not being impacted by all this talk about, chatbots that encourage people to spend more time on the Facebook platforms, on the Meta platforms, well, then maybe Meta will feel that they have to appease Wall Street in a bigger way. You were talking earlier about Mark Zuckerberg and the T-shirt and the necklace. I was just thinking back to Mark Zuckerberg, giving the suit and tie approach to Wall Street when last quarter it was all about cost controls, issuing a dividend, focusing on stock buybacks. Historically, that has not been the Mark Zuckerberg we know. This is, I mean, it's remarkable that these are even public companies sometimes when you think about how hungry all these tech entrepreneurs are to get the next story right. So I think that, yes, I would agree with Mandeep. Let us know more on the profit and loss story around your AI initiatives. But I think for Mark Zuckerberg, when the table stakes seem so high to all these players in Silicon Valley right now, he's probably made a new chess move to say, we won over Wall Street, now we got to win the battle on the AI front.
And I would just add one more thing. If they really wanted to fund the Gen AI initiatives, they could have said we are curtailing our Reality Labs spend. In the print, it's very obvious he wants to keep spending on Reality Labs. There is no pullback on that front. So.
The CFO, Susan Lai, is it? I forget, right? Susan Lai, am I saying it correctly? In the statement talking about the metaverse business, Reality Labs. For Reality Labs, we continue to expect operating losses to increase meaningfully year over year due to our ongoing product development efforts and our investments to further scale our ecosystem. So, Mandeep, they're not scaling back.
They're not. And they want to increase spending on AI, which I think investors wouldn't mind given the state of generative AI. But you have to see that discipline that they have shown in the last 18 months continue. Why go back to that 2022 phase where, everyone questioned?
We learned how well that worked, right?
Well, John, I mean, there's a difference between investing in AI for ad tech and investing in AI for engagement on the traditional family of platforms, that family of apps. And there's a difference in spending billions of dollars, and I think many investors over the last couple of years would argue blowing billions of dollars on headsets and trying to create a new type of computing platform.
Very true, very true. But I would say that if Mark Zuckerberg has already been very willing to make comments on Apple's VR and AR initiatives. And Apple is now a story where we're looking for more details on their AI strategy. We just don't know where we're going. We don't know what form factor will be the dominant one in a decade. We don't know exactly what AI strategy will be the most successful one. And I think to, you know, the Reality Labs reality, it's that if you don't know and you have the capital that you can commit to these things and you're willing to take a, you know, a slap on the wrist from Wall Street so that you can keep going down both of these paths, because arguably Apple is as well making fresh hardware bets and AI bets. I think it just speaks to the fact this is a very exciting time after a lot of predictability in Silicon Valley for the last decade.
What's interesting is, and we're continuing to see Meta down about 10%, 11% in the after hours. Pinterest is also down about 6% in the after hours. We're watching some $250 billion exchange-traded fund ETF tracking the NASDAQ got hit in late hours following Meta, too. So we're seeing it kind of drag down the sector. Mandeep, if Meta was not up almost 40% this year, would maybe Wall Street be a little bit more patient?
I think so. And to an extent, you know, it is tied to the fact that stock had done really well. But at the same time, I think if they had not raised the CapEx and the OpEx view and probably not said that they will keep spending on Reality Labs, you wouldn't have seen such a reaction. This is more about investors really panicking around Meta going back to, you know, their old ways when it comes to...
Mandeep, is the panic warranted?
Look, I think with the kind of churn you have seen with Meta shareholder base, I mean, remember when they had the 80% drawdown?
Oh, yeah.
A lot of the large,
some people left it for
shareholders just left. They gave up on Meta.
They thought this was, you know, a 20-year turnaround story.
And now they have new shareholders who may not have that kind of patience, you know, in terms of that long-term strategy. So you want to be very careful in terms of setting expectations. I think last quarter they did the right thing by announcing a buyback, by announcing a dividend.
Yeah.
And they haven't really talked about capital allocation much in this release, which is what investors wanted to see.
That's a really good point. The other thing I want to say, and John, let's bring you back into this. Looking at our live blog, Alex Barinka noting that the total number of people using Meta's app, so we're talking Facebook, Instagram, WhatsApp, and Threads, rising 7% year over year to 3.24 billion. I mean, again, when we think about social media, these guys really kind of just...
There's Meta and there's everyone else.
Exactly. And so, as you know, Mandeep was talking earlier, like if you're going to do an ad spend, this is kind of probably where you're going to go because this is where you get the payoff. But I mean, there's value in that. I mean, just putting aside the ad spend and stuff, not the ad spend, the marketing spend, the CapEx spend, if you will. I mean, that is incredible.
Yeah, and I think we have had to relearn how to evaluate these companies. Meta doesn't get as specific with individual platform numbers as they used to. Apple doesn't tell us about the number of iPhones they're selling quarter to quarter. Netflix just told us they're not going to tell us how many subscribers they have in the future,
right?
Which means we're talking now about the power of the platform. And you are absolutely right, Carol. The advertising ecosystem around the Meta properties is extremely robust, and they have proven to us that that is hard to break. I do have to go back to what Tim said, though. I'm still always curious about where the trends are taking us. It's been a busy day on the TikTok front as well. Without a doubt, if you're Mark Zuckerberg, you are concerned about the levels of engagement just in the pure traditional social media way of having the hot hand. And Instagram is getting a bit older. Facebook certainly is already there, but breaking that model that they've built is hard to do. And maybe that's, you know, if you've got some competition on other social media platforms, maybe that explains to what Mandeep was talking about earlier, you know, why you need to continue to put all that money into the metaverse,
right?
And Reality Labs part, while you're also spending on AI to make a more robust platform for your traditional social media channels.
Hey, Mandeep, I want to give you the last word here as you go and get ready to write your reports.
What's the headline on that report?
Reports,
or
plural.
Not yet.
Reports, plural, later today. I know it's going to be a late night for you. What are you thinking?
Cost discipline going away for Meta. question mark, because to me, there's no doubt this company has a scale and it's a juggernaut when it comes to digital ads. It's just kind of setting the right expectations and sticking to that. And we know Mark Zuckerberg can change, and he can execute like no one else. It's a very nimble product team. But when it comes to managing investor expectations, it's a different ballgame. And they've shown they can be loose when it comes to the capital allocation side.
Gosh, I'm just telling you, you're on the live blog right now. How did you do that?
Oh, it's amazing.
It sounds like Zuckerberg...
They're taken from our conversation for the live blog. Everyone check out the live blog.
It sounds like Zuckerberg needs to put his suit back on and take off the rancher coat and the silver necklace.
I mean, it's
maybe.
Well, shares down now 12.7%.
Yeah.
And up in going into the print close to 40%.
Yeah, so pretty much at its lows. Guys, thank you so much. Mandeep Singh, we always appreciate it. Senior Tech Industry Analyst at Bloomberg Intelligence. And our thanks to John Ehrlichman as well. Always great in terms of his insights on this group. He's been following it for a long time. Bloomberg News contributor out there in Toronto. Shares of Meta down almost 13%.
Let's get on over to John Tucker, because a lot happening in the after hours. It's not just all about Meta platforms, John, is it?
No, it's not. We also had earnings from Ford Motor Company. Those shares up 2.8%. Ford seeing a beat in sales and profit estimates as well. And just to recap with Meta, those shares in the post-market right now down close to 13%. As you say, reporting earnings after the close, investors latching onto that revenue forecast, and that was disappointing. It was kind of a wait-and-see day for the financial markets. We waited for more company earnings. The stock averages ending mixed, a little change. The S&P 500, you had 279 stocks higher, 222 ending the day lower. Most active stock was Tesla. That was up 12% after reporting its earnings yesterday. And Old Dominion Freight had the worst trading day in a couple of years after its earnings failed to impress investors. As we wrap up, the S&P 500 closing up just 1 point, 5,071 on the index. The Dow Jones Industrial Average was 42 points lower. That was down 0.1%. And the Nasdaq Composite Index ended the session 16 points higher. That was up 0.1%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Carol and Tim.
We are in earnings season, no doubt about it.
Oh.
That was a big dump right after the close here.
JT, thanks for keeping an eye on everything that we missed with Meta. So
why do I feel that he's not sincere?
I'm always sincere with you,
That doesn't feel sincere to me.
I'm always sincere with you. I don't know what you're talking about.
That's a little superficial.
I feel like I'm being set up for something.
You're not.
All right, listen, we want to get to our next segment. Here's a kind of startling statistic, Tim. More than 1 in 10 women changed employers over the last year. And maybe that's not surprising, but most only plan to stay with their employer for about 2.5 years. It turns out that poor work-life balance, a lack of flexibility, and inadequate pay and benefits are driving women to say goodbye and leave their employers.
This has serious implications, because when it comes to attracting and retaining talent, it's very expensive, and you want people to stay at a company if you're running a company for a long period of time.
It was supposed to be getting better.
Reasons.
I mean, I've only been saying that for 20, 25, 30 years.
Everything that Carol just read was from some of the findings of Deloitte's annual Women at Work report, which just came out today. We have with us Emma Codd, a Deloitte Global DEI officer. She joins us here in the Bloomberg Interactive Brokers studio. As Carol mentioned, Emma, it's this is the type of stuff that's supposed to be getting better. Is it getting better?
Sadly not. Every year, this is the 4th year that we've run this piece of research. We speak to 5,000 women across workplaces, across 10 countries, and every year when I do the analysis and start writing the report,
They're like, no, Emma, not again.
Glimpses of hope. And look, some things are improving. So burnout is down. It really reached a peak just after the pandemic when we started to come back. And I think for many of us, it was this, always on. Always on is still there, unfortunately, but burnout's down, but stress is up. Real concerns about women's health. Menopause this year, the data on that, deeply concerning. And then we've got the sort of return to the office policies that are kicking in, non-inclusive behaviors. There's a lot of similar trends, and I don't think we're just not seeing enough.
Tim knows this. I say this all the time, that we have a great policy here for parents, whatever sex, to take 6 months off.
Yeah, primary caregiver.
And so I'm saying, you guys need to take this.
I did it. It was amazing.
We have other colleagues, because that's what to me helps level the playing field of it's not just women out of the workforce for a long period of time, but it's also their partners and men also out of the workforce. And I feel like things like that might help. But help me out here to understand, how do we really change the needle on a lot more of these things?
So by the way, commendable with that policy.
That's great.
Because it really does make a difference. And if you look at some of the responses, so last year we started asking about household responsibilities and who takes on the majority of the domestic unpaid workload. And it was, unfortunately, the data was women. This year we are seeing that far higher. So around half of women are taking on the majority of childcare responsibility. And these are women, most of them are working full time. So doing a full day's work and then going back. And we saw a lessening of those that split it with their partner. And then the adult care for other adults, is deeply concerning. And that's gone up to 6 in 10 from 44%.
Okay, I got to tell you, parent of 2 young kids here. Carol, I was thinking last night, as I'm like picking up toys, doing the dishes, my wife is doing laundry, like she's the one who cooked last night, I did bath time. I was like, I need another person here to help. We only have 1 kid, but it's like, I need another.
2 kids.
No, I'm sorry.
Oh,
sorry.
Just so you know.
Sorry, Liv, I love you.
I was gonna say,
Father of the year.
I couldn't decide.
What I meant is we're not outnumbered. We have 1 each.
I couldn't decide whether it was Liv or Arlo going.
Oh man! Fortunately, they're playing out. Fortunately, they're playing outside right now and not listening. But 1 each, right? Like
He's
it's like
a great
we're not outnumbered at this point. That's what I mean. We're not outnumbered yet.
Do you know their names?
Yeah, I know their names. Hey, this is not an interview about me.
No, but what's interesting, and I'm going to say when my daughter was little.
Let's get back to Emma.
When my daughter was little and I had aging parents, like you get that squeeze. Like there's a lot going on. But Emma, help us. Like, how do we do things better? Because we all thought after the pandemic, everybody gets it. We need to have a much more balanced life. It's gone away largely.
Yeah. So look, how do we do things better? What do organisations need to do? So you look at some of the data. Around half of women are concerned about their personal safety at work when travelling for work.
What does that mean?
So when you're travelling, that's deeply concerning. We've seen women say that their rights are being eroded around the world, and actually this is personally impacting some women, including, in fact, most notably, the right to earn an equal wage, and also the right to live free of violence. So, and
this survey is global. So is this developing world as well?
So it's 10 countries, so it's got a really good balance. So you see these issues. You see mental health. You see 2/3 of women saying, "I'm sorry, I'm not going to disclose." And I don't want to discuss this in the workplace. Why not? Because I'm worried it might make me vulnerable to layoffs, worried I might be stereotype discrimination.
I think it would be really hard. I think it is hard for women to call in and say, I'm having a bad day, whether it's, you name it.
Yeah. And
I don't know if I should go there. I mean, it's part of a life, but it's just, and these are real things that affect a woman's health. And I think that, I don't know. That
you are right. And I will go there.
Ready for there.
Because I'm embarrassed my daughters. I have twin daughters, and I embarrass them
menopause.
Continually. So we have to talk about periods.
Menstruating.
We have to talk about menopause. I suffer from endometriosis chronically. Did I disclose? No. Back then, would I disclose now? Yes. And so I think, there is an evolution that we're seeing, but look, much of this comes down to policies, the great policies that you've talked about.
Right.
So equalising parental leave, all of those great things. But honestly, you will only avail yourself of policies if your leader actually gets it, understands. So, yet again, every year we come back to inclusive leadership.
Yeah.
We come back to the importance of modernising the workplace. Some businesses
leaders set the tone. Leadership sets the tone.
Right, and it's just seeing role models, all of those things, because I can't have another year where we see data as concerning as this. And we've got
Amen. I agree with
things we can do.
And we only have 30 seconds left, but I'm afraid you are going to see another year where you come back and talk to us in a year and you're going to say the same thing.
I really hope we don't. I think as we see legislation coming in around the world, so we look at the EU, the pay directive there, the pay transparency directive, I really believe that's going to start driving change. We need to see more of that around the world. And then the reality you talked earlier at the start, it's extremely expensive. Why would we invest in these brilliant future leaders only for them to have them turn around and say, I'm sorry, But 5 years' time, only 7% of us are going to be with you. Why would you do that?
Right. We all talk about that, right? At the early levels, it's all the same. There's more parity, and then as it goes along. By the way, Tim, your mother-in-law is calling.
I know.
She's
oh,
a
man,
little
I'm not even
upset
going to look at
about
my phone during.
Daddy, you've forgotten me.
I'm just going to.
You can already see the therapy bills later.
Emma, thank you so much. Really appreciated this conversation. Fingers crossed that the next year's survey changes. Emma Codd, she's over at Deloitte Global, their DEI officer.
Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. A proposed repeal of Arizona's near-total ban on abortions has won approval from the state house a week after a court concluded that the state can enforce the 1864 law. Now, the vote advances the repeal proposal to the state Senate. President Biden has signed a $95 billion foreign aid bill that will supply aid to Ukraine, Israel, and nations in the Indo-Pacific. The president also says the bill will help Israel defend itself from aggressors like Iran, but also said Israel needs to ramp up humanitarian assistance to civilians in Gaza.
This bill significantly increases humanitarian assistance we're sending to the innocent people of Gaza who are suffering badly. They're suffering the consequences of this war that Hamas started.
The new law empowers Biden to seize an estimated $5 billion in Russian assets in U.S. banks and then repurpose them to assist Ukraine. The foreign aid package includes a measure that could also ban TikTok in the U.S. by next year unless its Chinese owner, ByteDance, sells it. Supporters say their goal is not to ban TikTok, but CEO Shochu is responding to that with a TikTok of his own.
Make no mistake, this is a ban on TikTok and a ban on you and your voice. Politicians may say otherwise, but don't get confused. Many who sponsored the bill admit a TikTok ban is the ultimate goal.
TikTok CEO Shochu. Swing state voters are open to several ideas to keep Social Security benefits flowing for decades as long as it's the wealthy footing the bill. An overwhelming 77% of registered voters in swing states like the idea of a billionaire's tax to bolster Social Security. More than half say they approve of trimming benefits for high earners. New Jersey Representative Donald Payne has passed away. The six-term congressman suffered a heart attack earlier this month. He was 65 years old. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Big tech selling off in late hours after Meta Platforms' disappointing outlook. This is all raising concern whether the artificial intelligence euphoria maybe has run a little too far. Meta Platforms post-market trading right now, it is down 12.5%. Ford Motor Company also earnings after the bell, reporting retooling its electric vehicle strategy in the decelerating market for plug-ins, posting first quarter results that beat expectations. They had strong sales of work trucks, and as we know, the margins on things like that are much better for Ford. Ford Motor shares, they are higher after the closing bell, up right now, post-market trading up about 2.8%. S&P 500 closed slightly above 5,070. Treasury 10-year yields rising 4 basis points to 4.64%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Carol and Tim.
John Tucker. Oh, is my mic on?
Yeah, your mic on.
It was a little low.
How long have you been doing this?
You know, a million years.
No. The red light means it's on.
No, it just
and
sounded,
then you talk into
it sounded a little low in my IFB. All right, we're going to get to a story and polling that we love to get an update on. President Biden's recent polling bump in key battleground states mostly evaporating as a deep current of pessimism about the trajectory of the U.S. economy hurts his standing with voters. It does ultimately come down to the economy.
Yeah, it's just one of the findings in the most recent Bloomberg News Morning Consult poll, which, as a reminder, focuses monthly on voters in key battleground states, including Arizona, Georgia, Michigan, North Carolina, Pennsylvania, Wisconsin, and Nevada. Gregory Cordy is a Bloomberg News White House and politics reporter. He joins us from our Washington, D.C. bureau. Gregory, quite a difference than the post-State of the Union bump that we saw for the president. How do you explain this most recent result from the Bloomberg News Morning Consult poll?
Well, the number one thing that Joe Biden's polling numbers seems to be correlated to is just how people feel about the economy. And last week in March, after the State of the Union, so we think that might have had something to do with it as well, because one of the things we saw last month was that concerns about President Biden's age went down considerably following the State of the Union speech. It was a very energetic speech. But the other thing that happened was that last month, the economic news seemed to be improving, and then we got a hotter than expected inflation print. And that seems to be resonating with voters in these swing states. They're now worried that inflation is going to be higher for longer, interest rates higher for longer, and even expect a majority of these swing state voters think that interest rates and the inflation rate will be higher by the end of this year than it is now. There's not a whole lot of economic data to necessarily support that. Of course, raising interest rates is still one possibility for the Fed. But looking at these poll numbers, you would think that it is more probable than not that the Fed will have to resort to that due to higher inflation. And that's fueling, I think, the pessimism that people are feeling about the economy.
It's so interesting to hear this from you, Gregory, because Carol and I talk about all the economic data all the time. And I wonder to what extent, like, you know, quote unquote, normal people actually look at this data. Or is it, okay, how much it costs for them to fill up their car, how much it costs for them to go to the grocery store?
Gregory, isn't that what it is? I think about that too,
Yeah.
Tim. It's not like, oh, hey guys, CPI, PPI, or core, core PCE.
Super core.
Right, Gregory. It's when people go to the store. I feel it. You know, whether it's groceries or what have you. Right, we're just feeling like, man, everything still costs a lot.
Yeah, certainly the way that consumers or voters process economic information is different than maybe you or I or economists might process it. We talk about inflation being year over year, whereas I think people experience it a little differently. They experience it on a longer time horizon. There's a sort of a longer half-life for how people perceive inflation, and people are still comparing prices now to before the pandemic. But there's another interesting thing going on here is that in our poll, we asked people, how do you feel about the national economy? Is it going in the right direction or the wrong direction? And 2/3 of the respondents in this poll saying the national economy is going in the wrong direction. But when you ask people about their local economy, a majority of those same voters say their local economy is doing pretty well. So they can't all be right? I mean, there's not some part, far away part of the country that's doing bad, but everybody is doing good. It wouldn't average out that way. And so it's possible that people are sort of projecting political opinions into how they're describing the national economy. And it's a little bit of a feedback loop. We sort of expect that people are rational and they're going to decide how the economy is, and they're going to sort of preface their vote on how they're feeling about the economy. But they might also be feeling a certain way about the economy based on who's in office and how they feel the political situation.
It's interesting, especially since I feel like we always will say something like, look at, are you employed? You usually feel pretty good, right? Do you have a job? And we know the labor market, while there's been some signs of softness, it's still a pretty tight labor market.
Yeah, and that might be one of the things that would explain why people feel better about their local economy. They feel like the labor market is local. They have a job. Their neighbor has a job. But they perceive inflation to be a national issue, because it is, because prices are more dictated by events, faraway events, supply chains, other things that maybe are more within the control of the President of the United States.
Okay, so this wasn't the only result that we got in the most recent edition of the Bloomberg News Morning Consult poll. I want to talk about abortion. And it was the first time in the tracking poll that you got a result where more than half of swing state voters said abortion was very important to their vote. Tell us a little bit about this, Gregory.
Yeah, so our poll was in the field when that Arizona Supreme Court decision came down this month that said that the pre-Roe v. Wade law that restricts pretty much all abortions in Arizona can go back into effect. Obviously, they're fighting on that still today. There was action in the Arizona State Legislature to try to overturn that, but it really sent some reverberations through the electorate that we've seen these sort of mini shockwaves since the Dobbs decision overturned Roe. And every once in a while, there'll become an event where the salience of that issue increases, and the April poll was one of those moments. We see it especially in Arizona. That's how we know that there's something actually to this, because as you get closer to the epicenter of that ruling, you would expect the numbers to be higher, and they are. It's resonating particularly among independent women, suburban women, obviously a key demographic. But the question is whether that's already baked in, whether those voters were already going to support Joe Biden. It still works to Biden's advantage if those voters were maybe sitting on the fence of whether they're even going to show up to vote, because there is sort of an enthusiasm gap there. But this is sort of people in Biden's coalition saying important is an increasingly important issue, and that's the more abortion goes up as the most important issue, that means that the economy is less important in terms of the proportions, and so that's probably a good messaging for the President of the United States.
You know, reading in this morning, I was looking at the Pennsylvania primary results, and it was a story just talking about Donald Trump, obviously, getting most of it, but Nikki Haley actually getting some votes. And it's just interesting how maybe people, whether Republicans or Democrats, are looking for other options. There are, third-party candidates, and I'm thinking of Robert Kennedy Jr. I mean, how is that impacting maybe some of the polling results?
Yeah, we asked the ballot test question two ways. We do a head-to-head, Trump versus Biden. Those are going to be the two candidates that we know are going to be on the ballot in all 50 states, right? Then we also asked the question, if you had these other choices, and they include Robert F. Kennedy Jr., Cornel West, and Jill Stein, would you vote for one of those? We don't see a whole lot of difference in sort of the margin of victory, or the margin of the former President Trump's lead on those. But it's something we're watching very closely, because even though Republicans are more likely to say that they like Kennedy, those Republicans are also very loyal to former President Trump. And even though Kennedy is less popular among Democrats, Democrats seem to be looking for, is there some other candidate here that might scratch my itch? It remains to be seen whether Kennedy will get on the ballot in enough states to make a difference. He did, just in the past week or so, get on the ballot in Michigan. That's a good first step for him. But we're still sort of waiting to see whether this Kennedy phenomenon has legs. Right now we're seeing a lot of Kennedy-curious voters in the electorate, but we'll see if they actually pull the lever for him in November.
Pretty amazing. Pretty interesting. But TikTok, right? Each time you guys do this, things can sometimes change a little bit, and it's interesting to see coming off of the State of Union where things were and then kind of where we are today.
There's also more. I encourage everybody to check it out on the terminal. There's some
Social Security.
Yeah, I was just going to say that.
taxes.
Yeah, some views on how the ultra-rich should pay to save Social Security according to the poll. So check out all this coverage. Gregory Cordy, we love it when you join us. Hopefully won't be a month until the next time. He's Bloomberg News White House and politics reporter joining us from our Washington, D.C. bureau.
More politics coming up at the top of the hour with Balance of Power. This is Bloomberg Business Week right here on Bloomberg Radio.
Company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company news we are following after the close of regular trading today. We did a lot of the major earnings. Let's get to some of the other companies that reported after the close of regular trading. Chipotle Mexican Grill lifting its full-year outlook. Limited time offers like Chicken al Pastor help boost demand. The burrito chain now expects same-store sales. This is the metric that tracks restaurants open for more than a year. They expect it to rise by as much as high single-digit percentage, so that's up from the prior expectation of mid-single-digit increases. Same-store sales rising 7% in the first quarter, and that exceeded the average analyst estimate. And then IBM, International Business Machines, posting earnings that disappointed investors. The company's consulting work, their unit there, continues to see weak demand. Also, as part of the earnings report, they also announced the acquisition of software firm HashiCorp Incorporated. We actually expected that. First quarter sales gaining 1% to $14.5 billion. The company also reiterating its previous outlook of $12 billion in free cash flow for the fiscal year that ends December. And let's move on. new feature designed to blur naked photos sent to teens in private Instagram messages, coming under attack even before it's rolled out. The feature, which Meta Platforms plans to begin testing next month, is intended to deter online sextortion crimes, which have led more than to 24 teen suicides over the past 2 years. But users can override it. One tap of the blurred image and everything is revealed. We're going to have more on Meta earnings in just a moment. And that is a look at your company earnings.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, Tim and I getting ready to wrap up on the Wednesday edition of Bloomberg Business Week. I thought it was interesting what John just talked about. That's in reaction to that Olivia Carmel cover story about sextortion, right? And it's tragic what's going on. And so it looks like maybe Meta is trying to do something, but it's maybe not perfect yet. It sounds like there's a go around.
If you missed the interview that we had with Olivia, it's in our weekend podcast, which you can still get. And also, just check out the current issue of Bloomberg Business Week magazine, the cover story. You got to read this story.
Yeah, it's troubling. If you've got a teenager, even if you don't,
or even if you don't, just read it. I mean, you understand what can happen on these platforms.
Well, and of course, this was Meta that John was talking about. Meta, of course, big earnings after the closing bell. Doug Krisner in the house, getting ready. Hey. For a few hours on Daybreak Asia, counting down to the Asia Open. Hey, what is it like top of mind? Is it going to be Meta for you guys as well?
Yeah, we're going to talk about Meta. You know, we were talking last night on the foreign aid bill and the fact that the ByteDance divestiture of TikTok enters into this. And one of the things that we were exploring was the degree to which Meta is going to benefit. When you look at the overall revenue number, I think Meta does about 6 times the revenue that ByteDance does. No, I was right the first time. Meta does 6 times the revenue that ByteDance does.
Who's on first? What's on second?
So,
I don't know.
I mean, my head is swimming with all of this stuff.
I'm just playing.
Anyway, no, you're right about the story that John just mentioned.
Yeah.
That's a devastating cover story.
Unbelievable.
And to tie it in with what we're learning now about CapEx spending, here is Musk saying that we're going to spend a lot more in terms of artificial intelligence. And you wonder how AI is going to intersect with the point of monitoring this type of content. It's not going to be anything that a human being is going to be required to intervene on. I mean, this is going to be the technology that scrubs the data as it's passing through and makes certain choices.
Mandeep talking about it too. Mandeep Singh, breaking down in terms of what we got from Meta specifically. And
that's what I think one of the interesting parts of the Facebook story is, the Meta platform story, is how 3 or 4 years ago everyone was so concerned about the changes that Apple made to its operating system and how that would affect the company's ability to target ads. And Mandeep coming out and saying, the way that Meta platforms dealt with that is by leveraging AI to better serve ads and to better serve content, and it's working.
Right. But there's VR2 to be connected into this story too, which we're not talking too much about.
Because it's such a tiny portion.
It is, but they bet the farm on this. In the past, he spent a ton of money. When I say he, it's Zuckerberg.
Yeah.
And I just wonder where the company is now with this VR technology.
Well, this was part of what Mandeep said too, like this idea of reality labs. Like they're still kind of in it, and they're spending time, money, and effort on it. And his whole idea was that the concern was, do they go back to not being the year of efficiency or the efficiencies of the company that has really brought investors back to the fold. This idea, if you're CapEx spending or expenses rising, it gets investors a little nervous, considering the 40% rise that we've seen in the shares this year, and then you saw a doubling last year of Meta shares.
$36 billion for the 3 months that ended March 31st came from in revenue, came from advertising and the family of apps. Facebook Reality Labs are $440 million.
That's a 27% increase from last year. And you know what? It only beat the estimate by about $400 million, narrowly beat. This is unbelievable. The company's throwing off cash like crazy. And yes, a lot of the reaction that we're also seeing, not only increased expenditure, increased CapEx, but guidance on the revenue for the current quarter that was a little disappointing. But 27% year-over-year growth in revenue?
Sounds like a growth company to me.
Yeah, it's unbelievable.
And that growth in revenue is not coming from the
maybe investors
Reality Labs yet.
Right. They've gotten a taste of a dividend from Meta. which is not typically what we see from tech company. Maybe they want more.
Maybe.
I don't know.
Maybe.
Yeah, so interesting. You guys are going to have a lot of stuff. It's interesting, though. Mandeep said that do influencers start to think about it? TikTok's going to be possibly shut down. Do they start to shift, though?
This is going to be litigated. We have to wait on it.
But do you as
days
somebody think about it?
From now, when he signed the bill, I think the clock starts ticking.
You got a full plate there coming. All right, Doug Krisner, thank you so much. That's going to do it for Tim and me. Have a good and safe evening, everybody. Balance of Power starts now.
From the world of politics to the world of business, this is Balance of Power.